and gets allies and partners on board on some of the tooling, some of the aspects where countries like Japan and the Netherlands and Germany are strong, then this gap between the U.S. and China in compute stands to lengthen over the coming months and years.
But both sides have chips on the table here that they can play and play hard. I was just at the Reagan National Economic Forum on Friday, where there was a lot of anxiety just how confident Chinese leadership is at the moment, that they too can fight back. Liza, what about the rare earths signals? How much pain could that levy on U.S. industry itself as well?
We know that the auto manufacturers and the defense manufacturers they came crying to the U.S. government before the Geneva talks and said that these things are starting to impose pain and starting to impose work stoppages. And that's something that it's a gray rhino. I mean, the U.S. national security establishment has known about this dependency on China for rare earth processing for years, but they haven't come up with a solution at scale. But I think what was interesting over the last month is that China has broken the glass on actually using this coercive instrument. It's actually now ratcheting up pressure. Xi Jinping has an appetite for leverage, and now that he knows he has this leverage over the U.S., you're going to see him pushing again and again to kind of recycle this leverage and try to extract more concessions from the U.S. But rather than bending over and giving China more concessions over the last couple of weeks, you've seen them doubling down with this empowered Commerce Department strengthening and broadening the export controls.
So you don't expect the U.S. to blink in this moment. What advice do you give to the private sector right now as to how tough this could get for access to rare earths, and indeed, in the flip side, if you're a Chinese company, access to U.S. chips?
Well, I think that the private sector needs to remember that this isn't just a competition about tech and trade. I mean, tariffs and technology export controls, of course, are incredibly important to markets, but perhaps even more important is to watch the geopolitical tensions that are unfolding in the Indo-Pacific, around Taiwan, in the South China Sea. Secretary of Defense Pete Hegseth, just on Saturday at the Shangri-La Forum, was warning that a Taiwan crisis could be imminent. And we know that China frequently has military drills, kind of these practice exercises around Taiwan and in the South China Sea. And it's had the habit lately of not announcing these in advance. So it's not giving markets a heads up that these are going to happen. Why does it do that? It wants to preserve ambiguity. If outside observers aren't sure if this is just a drill or if it's something more, an actual rehearsal for something like a blockade. That's very worrisome because it shrinks the window of warning. And that's something that we're watching very closely at Garno Global, kind of the links between these technology export controls, tariffs, and the potential for some kind of supply chain disrupting crisis around Taiwan that could prevent the chips from getting out of Taiwan, perhaps for a couple weeks or longer.
Well, that's crucial to our audience, so thanks for making that link. Liza Tobin, of course, Managing Director at Garno Global. Great to have some time with you. Coming up, let's talk about chips more, but Broadcom's results. This week, they're likely to actually show AI demand is still booming. We're going to talk about what's expected, how it could impact the wider market. This is Bloomberg Technology.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Ooh, fun.
Yikes.
The leaky refrigerator coil card.
Is that bad?
Death!
Death?
Of an AC fan motor.
Oh no.
But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Phil, we talked about this. American Home Shield. Don't worry, bee warranty.
Well, you're in the big leagues now.
How was your vacations there?
Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear?
Let's talk about how the same tech giants that contributed to the S&P 500's decline in April, they are now driving the recovery in US equities. Just take NVIDIA. It put a bow on a better-than-expected earnings season for big tech last week by delivering a strong outlook for revenue, despite US restrictions on sales of its chips to China. This is as we expect earnings from Broadcom this week. You'll see the shares are also trading higher. Bloomberg's Rand Vlastelika has been writing about how the Magnificent Seven in particular have helped bounce back of our lows. Some phenomenal recovery numbers.
Hey, thanks for having me. So this earnings season was a real test for big tech, especially given just how uncertain the backdrop has become, given tariffs, given all sorts of geopolitical tensions, given concerns about AI spending and the ROI from AI. And I would say that, broadly speaking, this group passed with flying colors. I'd say the notable exception was Apple, which is dealing with a number of its own sort of idiosyncratic issues. But the major companies like Microsoft, NVIDIA, Meta, Alphabet, quite strong across the board, showing pretty positive trends. And these are all companies that have allowed the market to really recover off the low that we saw early in April.
It's interesting that we're not back to our record highs. We're actually inching in on them, Ryan. Meanwhile, looking at the S&P 500, the valuation story, that's starting to get a little dicey, right, when you're looking at Magnificent Seven names.
Yeah, so I'd say these names got pretty cheap by a lot of metrics in the whole tariff sell-off in early April. They have come back quite dramatically. I think NVIDIA is up something like 45% or so since that low. So these are pretty remarkable gains, and that has come back in the valuation. But I would say sort of the countering argument to this is growth is expected to remain pretty strong for a lot of these companies. And if you look at something like the PEG ratio, they are all trading at fairly modest ratios on that metric. So the valuations have come back some, but the growth that was just affirmed in these most recent reports, also pretty positive.
We're looking at the moment of how pricey perhaps they are from a price to forward-looking earnings perspective, at least. Bloomberg's Rand Vlastelika, it's great to have you on as always. Look, let's get you even more of a take here, and particularly on AI demand, what it means for certain companies about to give us their numbers. Angelo Zeno is with us, VP and Senior Equity Analyst over at CFRA Research. Look, we think about how NVIDIA helped the market recover. We saw the numbers looking good. What about Broadcom as well? We're still going to get AI optimism there?
Yeah, so thanks for having me, Caroline. And I think, to your point, I think it's going to be very strong. We're looking for top line growth of about 20% here for the April quarter. And listen, I think when you kind of look overall, the trends that we've seen here over the last couple of weeks, or since Q1 earnings season, really starting with Alphabet and Microsoft at the start of earnings season up until NVIDIA last week. The trend on the compute side of things is, I think, much stronger than anybody had anticipated, and really something that Jensen Huang last week really pounded the table on. So when you kind of think about the drivers here, specifically for the AI semi names here over the next couple of years, it really is going to be tied to compute, and the higher demand for compute is going to drive higher capital spending plans, right? Yeah. Which is what we saw during Q1 earnings season. So we think those trends remain intact here for Broadcom specifically. They've got about a 60-40 split in semis versus software. So the semi side will continue to drive that demand, but software shouldn't be ignored because the profitability there and growth continues to be very good.
I mean, we're expecting strong things from Broadcom. You too. Look, your top semiconductor names are NVIDIA and Broadcom, AMD, Marvell. I'm looking at how much some of those names have already driven the S&P 500 recovery. A great chart from Ryan Story shows that NVIDIA makes up 12%, basically the S&P 500's rebound since April. But swiftly after them was Microsoft, that you named as being a winner of late. Broadcom, some 5%. But is the valuation getting a little too rich now, given the amount of geopolitical anxiety we're just talking about with Liza Tobin?
Yeah, I mean, I think as far as the valuation is concerned, it's not as attractive as it was 4 to 6 weeks ago. But I will tell you this: the valuations just got just hit basement level values. I mean, you were talking about NVIDIA at one point trading about 17, 18 times on our 2026 estimate. They're now closer to about 24, 25 times on 2026 expectations. And I will tell you this: the visibility again is improving here. It has improved over the last couple of weeks, whether it be on the trade side of things, improving commentary on trade, or whether it be just from the reiteration in terms of CapEx spends plans for some of these hyperscalers. Now, I will say, as far as what to look out for here on the geopolitical side of things, there are a lot of moving parts here over the next couple of weeks. Obviously, we want to hear about the U.S.-China discussions, but as far as semis are concerned, there's a 232 semiconductor investigation that is ongoing right now. We expect to get more clarity in terms of what that's going to look like as far as tariffs are concerned here over the next 2 months or so. So it's wait and see mode, but our view is you're going to see a permanent tariff on the semiconductor industry when that gets unveiled. Our base case right now is about a 25% tariff.
What about the smartphone industry? Because actually Apple has contributed to the reprieve in the S&P 500. It's one of your top names for hardware. But boy, we're wondering whether it's going to get individual tariffs of 25% landed on it. Not to mention maybe Samsung gets the same though.
Yeah, so we're not looking for an individual tariff on that side of things, but our view here is they fall under the national security umbrella of the 232 semiconductor investigation, similar to many other hardware names that are right now exempt from a lot of the tariffs. But that said, if we're assuming something along the lines of a 25% base tariff for the 232, that would imply that Apple probably has to increase the price of its iPhone 17 this fall. Our view is probably along the lines of at least $50 or so. So again, we have to wait and see how all this stuff really plays itself out on the geopolitical side of things. But our view is there's going to be some sort of permanent tariff that goes into effect for the hardware companies, and specifically Apple. And Apple, we think, is best positioned to offset some of those higher tariffs because of their brand recognition and because of their pricing power.
So Angelo, if an investor doesn't have the exposure they'd like in these names, should they buy at this point?
I mean, I think that's a good question. We look at it right now in the sense that we're looking more for a near-term, digestion period. The dangerous thing with that is you just don't know what you're going to get on a day-in, day-out basis. Because of the geopolitical environment right now. So if you don't own any of these names right now, our view is you do want to buy some of these AI semi-oriented names because they are going to really drive the earnings potential for the tech sector here over the next 2 to 3 years, specifically NVIDIA and Broadcom, as well as some of the other smaller names. But NVIDIA and Broadcom would kind of be two of the top names with the best visibility out there. And even if you see some of these negative headwinds, whether it be tied to the 232 semiconductor investigation or something on the trade side of things, ultimately, we think this stuff works itself out, and the earnings potential is so great that 2 to 3 years down the road, these stocks should be significantly higher than where they are now.
And we get those earnings for Broadcom on Thursday after the bell. Angelo Zeno, a busy week ahead. CFRA Research, we thank you. Now coming up, Samsung is teaming up with Perplexity AI to beef up its own artificial intelligence offerings on some upcoming devices. More on that next. This is Bloomberg Technology.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ooh, fun. Yikes. The leaky refrigerator coil card. Is that bad? Oh, death! Death? Of an AC fan motor. Oh no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Phil, we talked about this. American Home Shield. Don't worry, bee warranty.
It's a beautiful day in this neighborhood.
Make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
My neighbor.
Samsung, well, it's nearing a wide-ranging deal to invest in Perplexity AI and put search technology from the AI startup at the very forefront of the South Korean company's devices. It's according to people familiar. The two companies are already in talks to preload Perplexity's app and assistant on upcoming Samsung devices. Bloomberg's Seth Fiegerman joins us for more on the story. And we knew that they struck this deal with Motorola. Samsung ongoing conversations. How deeply intertwined will they become?
Yeah, I think this is even more expansive than Motorola. With Motorola, it's about them being preloaded on devices, which matters a lot. But with Samsung, it's also integrating into its assistant product, into its browser, and of course, just preloading on Samsung devices. Generally, if you're Google right now, I think you have to be sitting up a little bit straighter right now. There's a big difference between being preloaded and the default service, which is what Google has paid for years and quite expensively. But this is a step in that direction. And given the antitrust scrutiny on Google, I would be a little bit concerned.
I mean, of course, that antitrust discussion of what ultimately might be the policies they have to enact to appease the judge. I mean, that wrapped up on Friday. Analysts are deeply concerned about what all of this means for Alphabet. How much does this also depend on Perplexity getting some money from Samsung?
Yeah, I think that's part of the broader tie-up here. So we have previously reported that Perplexity is close to raising about $500 million, like a $14 billion valuation. Samsung could be one of the larger investors in that deal, and that strikes as part of a much larger tie-up between these two companies.
How does that $14 billion stack up? Because we've become numb to these figures because it's so enormous over at OpenAI.
It's one of the largest AI players out there right now, but this is a really competitive environment. Not only are they going up against Google, but going up against OpenAI and others who are moving into real-time search, but being more deeply integrated into devices that millions of people use, that is a really big leg up in that race. So.
And people have loved Perplexity in many ways because it was one of the first that offered you where the information was coming from. But they've had their own copyright issues as well, right?
That's true. I think Perplexity's main thing, though, is that they have great design. Yeah. You know, it's not so much that they built a better model than OpenAI or Google, but they figure out how to package it in a really compelling way that seems to be drawing fans, not just from consumers, but from the hardware companies. So.
How soon could this all be announced?
As soon as this year, for devices maybe into next year.
Okay, we'll keep an eye out for all the unfolding events. Seth Fiegerman, we appreciate it. Meanwhile, coming up, Tesla, well, its sales fall to an almost 3-year low in France. How much can Musk's return from Doge steady the ship here a little bit? This is Bloomberg Technology.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Oh. Hey, did you find the manual?
Yes, of course I found it. No, I need that.
Summon Dale!
Who's Dale?
A real human.
I'm Dale. American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
I need my phone back. Fix it over video chat with American Home Shield. Sign up today at ahs.com.
Well, you're in the big leagues now.
How was your vacation, sir?
Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How? It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets because, boy, May was a stellar month for the Nasdaq. Today, we bounce off of our lows, but the anxiety remains. What about the pulling back from China and the US in terms of those tentative agreements made in Switzerland? The progress seems to be on the line. Many are worrying about that at the moment. Dig into some of the names. Look, I want to shine a light on one Chinese EV player, of course. We've got to keep an eye on BYD. Depository receipts doing better than they did trade in Hong Kong, at least, but under pressure is indeed the Chinese government tries to hint at BYD that you're competing too hard in our country. You're racing to the bottom in terms of price, all to boost your numbers. Will they pull back a little bit from that? But Tesla off by 3%. This is the numbers are woeful for sales in May in France. They're down 67%, just 721 cars in the whole of France. All of this comes, though, as Elon Musk officially departs the White House after running Doge over there, at least as many would say he was running it. Wedbush Securities Managing Director Dan Ives writing this weekend that this is, quote, music to the ears of Tesla shareholders with a crucial few months ahead. Dan Ives joins us now. And boy, those French numbers really show what the crucial few months mean. Can Elon steer this the other way?
Look, I mean, obviously the leader's back, right? I mean, Musk is Tesla, Tesla is Musk, but I believe it's really about autonomous. I mean, I think as we go into Austin in June, you go into the robotics future, that's going to be a key part of the value of Tesla. It's how we get to a $2 trillion valuation. But when you look at Europe, you look at US, you look at China, and I think Musk is going to start to turn that around. And I think that's where investors are starting to factor in, not necessarily what's happening next month or two, but a rebound second half of the year.
Okay, so stomach for the near term, these probably remaining poor numbers. The new refreshed Model Y isn't cutting it, it seems. It is more the political backlash. But you think ultimately the technology is going to outweigh a brand issue that they've had?
Yeah, I mean, look, me and you've talked about it before. I believe 90% of the future value is autonomous and robotics. Now, look, in terms of margins, delivery, growth, that's obviously very important to near-term numbers, but I do believe Street's factoring in, you start to see a rebound second half of the year. You have a recommitted Musk, clearly. And I think when you look to the future, I mean, this along with NVIDIA, I believe the most disruptive technology companies in the world. And then who's driving the software piece? Of course, it's Palantir.
But why is Tesla clearly going to be such a leadership in autonomous when Waymo's already busy doing it? And there is a difference in the technology here, with Waymo going all in on LiDAR and a very different tactic coming from Elon Musk and Tesla.
Yeah, look, Waymo clearly a head start, but I think Waymo, they're going to be at the kids' table relative to Tesla in the coming years because of the scale and scope. Waymo's in 4 cities, $230,000 cars. Like, in other words, when I look out over the coming years, I think this is going to be dominated by Tesla in terms of cybercabs. It all starts obviously in the next few weeks in Austin, but no one will match the global scale and scope of Musk and Tesla.
So what milestones in Austin, for example, do they need to meet? Ed Ludlow with that great reporting out last week that June 12th is going to be the date we're anticipating for it to already make actionable what they've been trialing on the roads thus far. What do they need to meet? How do they need to show off and the technology to work?
Look, the interventions, right? I mean, just showing that this is something that is ready for prime time, because this is just the beginning of ultimately going to be 15, 20, 25 cities over the next year. And I think this is just really kind of laying the groundwork from a technology perspective, showing where Tesla's going to get to. And what I believe, look, Waymo is going to be successful, and that's going to be a key sort of player. But in terms of the global vision, who's really going to dominate, I believe it's Tesla and autonomous.
And is it the cybercab that dominates? Is it the fact that the Teslas are already out on the road and they become the autonomous vehicles? They are the ones that we don't use ourselves but lend out to the ecosystem?
Well, yeah, I mean, first of all, it's data-driven. I mean, by next year, you have 10 million vehicles, in terms of Teslas that have been sold. Data-driven. But I do believe cybercabs, when you think about the autonomous piece, that's going to be so important. But then also it's about FSD. I mean, FSD penetration could go from 15% to 50%. Think about the margin, the software, the uplift that's going to lead to Tesla. And that's why I believe they're going into their biggest chapter of growth. And that's why also it's just so important that Musk laser focus on Tesla in those days in Trump White House, now rearview mirror.
And you think he will be laser focused on Tesla, because he's also saying, I've got to be laser focused on X. He's also remaining very committed and focused on SpaceX as well, and not to mention the XAI getting woven into X at the moment.
Look, it's all part of obviously the broader Musk ecosystem, but the hearts and lungs, the golden goose continues to be Tesla. And I think Musk recognizes now is the time, especially given autonomous and robotics with Optimus.
Tell us the $2 trillion valuation and how you actually got there from a numbers perspective.
Look, when I look at autonomous, and you start to model out what could ultimately be 20% of vehicles being autonomous, you're essentially looking $3-4 earnings. Eventually, is going to be $13 to $15 earnings. So the whole math of the Tesla valuation is going to drastically change, and that's all about, like, I believe from an AI perspective, one of probably the most undervalued pure plays in the market is Tesla. Now, of course, NVIDIA, Palantir, a lot of the hyperscalers, Microsoft and others continue to be front and center. But, Tesla more and more is going to prove that when you, especially in the physical AI play in terms of autonomous and robotics, they're going to be front and center.
At the moment, it's a $1 trillion market capitalization. How quickly does this $2 trillion become a reality?
I think next 12 to 18 months. And I think that's
going to double in that amount of time?
That's our view. And I think it could be conservative relative to as this all plays out. Because I think, again, Musk and Tesla underestimated. Next week, probably, we'll call it, late next week, when this actually, the vision starts, it's going to kick off, I think it's a golden age at Tesla.
You are the highest price target, 500. Fubon Securities below you, 470, but the price targets go all the way down to just, JP Morgan at 115. So from What is it that others aren't getting here? Is it just the scale of the ambition? Is it the execution? What is it when you sit around the table with other analysts that they're like, no, Dan, and you're like, no, yes?
Well, yeah, I mean, to that point, I mean, if you go back over the last 5, 7, 8 years, I mean, they've underestimated Tesla and Musk every time, right? So, I mean, many thought that the chance of them actually coming out with an EV was unrealistic. The chance of them scaling to over 1 million vehicles. It was just again and again. I think they continue to view this as an automobile company. It's a disruptive technology player, one of the best in the world, along with NVIDIA and, of course, Palantir.
Therefore, we're looking forward to the global story here. Does this have to be executed in the US? What about over in China at the moment, where we're just seeing the level of price competition and indeed the commitment that we're starting to see from BYD also into autonomous?
Look, China is a key market. I mean, you're talking about over 40% of deliveries that come out of China to keep up from a supply perspective. But it's also why, too, it's important more and more Musk that he distance himself in terms of from Trump White House. Now start to play that 10% politician, 90% CEO, you know, what we see from Apple. China's key. And I think we're going to continue to see now a rebound in China. And autonomous, Tesla's going to be a major player in that market along with BYD and others.
And then let's talk robotics, because I'm hearing more and more about how robotics is going to be the next area of key growth. How quickly does the Optimus become the $2 trillion driver?
And remember, we're not even really factoring that in. So it speaks to our view. Like when you look at Optimus and as that plays out, robotics potentially could even be bigger than autonomous. And I think when it comes to physical AI, it's Tesla and NVIDIA that are leading that. And I think as that all this is going to get, in the next 12, 18, 24 months, it's the reality, right? The scale and scope is something that Tesla has a huge advantage of. And that's why I think Optimus is something that, again, I think investors, Wall Street, massively underestimating, but they will be proven wrong, I think, as this all plays out.
How much is supply chain going to be a bottleneck here? Because we keep talking time and time again about the rare earth control that China has. I mean, the fact that Tesla is so present in China from a supply side perspective, is that a winning formula?
Oh, I mean, you just nailed it. I think that's the key, right? Like having such a big presence. And of course, Musk has very good relationship in Beijing, you know, in terms of their footprint. That is very important. It gives them a huge advantage. And also, I think it speaks to the timing, especially in this U.S.-China negotiations. The further and further Musk distance himself from Trump and the White House, I think is important, especially when it plays to what's happening in China.
I'm going to end on Apple, because you were just talking about other companies that have been owning this space, Palantir, of course, being one that you keep mentioning within software. But what about the future of Apple right now from a supply chain perspective, from a geopolitical perspective? Because it seems as though, well, Tim Cook needs to be a little bit more politician right now, too.
Yeah, but I think there's no better CEO in the world that can navigate it.
He's not done very well so far.
I would disagree to the point that he's been able to navigate to India, which is actually a huge part of the poker move, puts him in a lot better negotiation position. And also, like, look, the chances of iPhones coming to the U.S. we continue to view as unrealistic, unless you want a $3,500 iPhone. And Cook's another one, like, there's an understanding, okay, they might have been late to the game, but the consumer AI revolution comes through Cupertino. You'll start to see that next week, WWDC. I view that as a very important event that starts this next chapter.
Dan Ives of Wedbush. Some of the biggest price targets out there for Tesla and for Apple. It's always great to have you on the show. Thank you very much. Coming up, tech has become a major economic driver for New York's economy, and a new campaign is celebrating just that. We'll have more on the industry's impact and what's expected from New York Tech Week. There's a Bloomberg Technology.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ooh, fun. Yikes. The leaky refrigerator coil card. Is that bad? Death! Death? Of an AC fan motor. Oh no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Bill, we talked about this. American Home Shield. Don't worry, bee warranty.
Well, you're in the big leagues now. How was your vacation, sir?
Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad. $155 for the night.
Hold up. How? It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago's my secret tactic.
Hotel Trivago.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear? Time now for Talking Tech. First up, Byron Allen. Well, he's hired Moelis to find buyers for 28 local TV stations his company owns. Now, this comes as an effort to reduce debt is coming on while taking advantage of potential deregulation in the broadcast business. In a statement, Allen said, "We have received numerous inquiries. We are going to use this opportunity to take a serious look at the offers." Plus, Meta is betting on automation for the future of ads. The social media company aims to enable brands to fully create and target ads using AI by the end of next year. Now, that's according to the Wall Street Journal, citing sources. Meta's ad platform already offers some AI tools that can generate variations of existing ads. And Abridge AI, a startup that uses artificial intelligence to transcribe medical conversations, is raising $300 million in a new funding round led by Andreessen Horowitz. So all according to sources who say that the round values the Pittsburgh-based company at $5.3 billion, including the investment. But now let's bring it to New York. New York Tech Week kicks off today. The city is known for fashion and finance, and it's seen a tech boom, though, over the past decade. The sector actually made 41% of the city's net job growth since 2019. Judy Samuels is president and CEO of Tech NYC. It's a non-profit. You promote the sector in the city, and you've got a rather cool new campaign.
We do. We're so excited about it. We're launching today with support from New York City and in partnership with Red Antler, a campaign called Obviously New York. And it's really just a moment to celebrate the amazing growth of the tech industry here, to really highlight all the things that we think are just going so well in New York right now.
Give us the obvious statistics. Give us the obvious statements of fact that make New York #2 tech sector in the world.
I mean, listen, I have so many, but just some that I'd highlight. I think that really underscore what makes New York so amazing. New York is the #1 destination for college graduates. The tech sector here in New York, you talked about the 41% figure, is responsible for, creates 10 times the amount of new jobs in our local economy, than 10 times more than other industries, I should say.
Than finance, than fashion?
That's right, since the pandemic, since in the past 5 years. But that speaks speaks to the growth. That speaks to the J curve that we're on here that I think is so important. You know, it's a $700 billion industry, 25,000 startups. It's booming here. And it's because, of course, you know, that New York City is home to every industry, and increasingly technology is just powering every other industry. And the thing that we think is happening here that is unique to New York is that as the technology, especially in this moment where AI is just booming, you know, your entire intro is about all these companies just growing AI, building AI. As the new technology evolves, what happens uniquely here in New York is companies figure out how to use it, who's going to pay for it, what it's going to actually do in practice. And that is the New York story.
So give us some pinups. When you think of the icons of the New York startup scene, I think Cognition AI in many ways from the underlying, really leaps and bounds driving forward the technology when it comes to coding. But where else are we seeing success stories?
In the AI space in particular, of course, we've got Runway, which is just an amazing New York story because it marries the creativity that is inherent to so much that happens in New York City and the AI side. It's beyond AI, of course. You've got Ramp, which is probably the fastest growing startup in New York. That's in the fintech space. We have a ton happening in digital health, companies like Maven and I mean, the list goes on and on. But again, I would underscore that all of those companies are, for the most part, building in uniquely New York industries.
I love that you keep trying to do this tongue twister again and again, and you're like nailing it, and I don't want to.
I have a little bit of practice.
But what about sort of why the campaign around it? Why this moment and need to celebrate?
I think that, listen, there's a couple things happening here. And well, first of all, I just think people love to have fun. People love to celebrate. And right now, New York is just ascendant when it comes to tech. And we wanted to kind of put a stamp on that. We wanted to call it out. We wanted people here to feel excited. And then we want to go on the road and remind people just how great the New York tech ecosystem is. Because here's the thing. When you meet young people of all ages, but especially young people, they always want to live in New York. And we need to remind them that you can come here and build a really dynamic tech career doing that.
But when I think of the resurgence in San Francisco, basically, generative AI, Cerebral Valley, we've covered it time and time again. Do we need to be either or? Is it mutually beneficial? Are you seeing companies building talent systems in both places?
Well, I think you want to see tech building and growing the economy all over the country. I think that's incredibly important. I like the way we do it here in New York. That speaks to me. That's why I'm here doing this job here. But I think to your point, we want this to happen on both coasts. We want this to happen in the middle of the country as well. I think that's really important. And you know, we talked about a lot of homegrown New York tech companies, but OpenAI is also growing like crazy here. And in a really iconic New York building downtown, they're taking more and more space. So it's going to take all of these pieces, all of this input.
You are like the quintessential public-private partnership because you, as a non-for-profit in the middle, are bringing leaders within some of the iconic New York tech sector in to help give advice to the public sector, and it goes both ways.
Yeah.
What is it that the public sector is doing that helps drive?
That's a really good question. So in this instance, the city is putting a significant amount of money. It's, I think, $4 million in total behind helping to bolster the AI ecosystem. Part of that is helping support our campaign, but that's just a small part. They're doing a lot more. They have an AI Nexus program. The city is putting its money where its mouth is, and we think that's really important. The state is also doing its fair share. We've got a great program here called Empire AI, where we're really empowering academic institutions, giving them access to just the amazing quantity of compute that's incredibly hard for anyone outside of the private sector to get. So the city especially in this instance, are really doubling down to ensure that New York is a place where people want to come to build and grow tech companies, but also where people want to live.
I'm excited to see the statistics coming out for 2025. AI job postings surging 25,000 in 2024 in New York. Julie Samuels, CEO, President of Tech NYC. Go enjoy Tech Week. Meanwhile, let's talk about China, because Tom Cruise's film is back on top there. Mission Impossible: The Final Reckoning posted the biggest opening for a US film in the country this year. It earned $25.2 million during its opening weekend, defying trade, geopolitical tensions between Washington and Beijing. Now coming up, action in the tech IPO market. Chime, Circle, they're on deck. This is Bloomberg Technology.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It's just like our new house. I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your comfort item, then replace it, no matter its age. Sign up today at ahs.com.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle.
I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
IPO activity in the tech space, it is heating up. Digital banking startup Chime, crypto firm Circle, both targeting strong offerings. Anthony Hughes is here to break it all down. And the way in which we see that there's strength is Circle being able to sell more shares at a higher price point, it seems.
Yes, Circle seems to be going very well. The IPO is pricing in the middle of this week, so it actually launched last week. Since that happened, Bitcoin did come off a bit, but there is certainly a lot more enthusiasm towards cryptocurrency, of course, because particularly in the last month or so. We also saw Coinbase come into the S&P 500 last month, so that has contributed to a lot of enthusiasm for that company in particular, which is behind stable coins, and it's a business that some people are wondering where it fits into the scheme of things, whether it's more like a payments company, and maybe it might deserve a bit of a discount to a company like Coinbase, which has become sort of the premier sort of stock in the crypto space, one of the premier stocks anyway.
Well, what's interesting is that Chime, being very much sort of a retail-focused offering in the fintech space, is it going to tap into retail demand? Is it institutional demand that makes that also a success story when it finally comes to the market?
Well, I think Chime has a really interesting retail story because it's obviously appealed very much. It's got 8 million customers, and it sells a debit card and a credit card, and it's been very popular with a certain sort of demographic, a younger demographic. It actually reminds me a little bit of the Robinhood IPO from years ago, from a few years back, where there's this idea that perhaps you have attracted a lot of customers, and maybe it might not necessarily be easy to attract millions and millions and more really quickly like you have in the past, but when you have these younger customers, you can grow with them and add on products and stuff like that. So that'll be one of the real sort of selling points, I guess, with the Chime IPO. But the company does come at a significant down round or lower valuation than it was able to attract in 2021, when we had very high valuations for all sorts of tech companies, including fintech and like this company, but also software companies and the like. So we are in a very different environment from 2021, and we have to take that into account.
Hinge Health had that as well. Of course, I need to disclose that my husband does indeed work over at Coinbase as well. Anthony Hughes, thank you very much indeed for joining us. Now that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Mama, look. It's just like our new house.
Warranty!
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Clogged AC coils? Fixed. Oven beyond repair? Ta-da! If AHS can't fix your covered item, then replace it, no matter its age.
A warranty is smart.
Oh, a happy family. Is that us? Too much? American Home Shield. Sign up today at AHS.com.
What a hotel.
Right? And only $250 a night for my favorite site. What?
You didn't check Trivago.
I got mine for $155. You have to check Trivago.
Oh yeah? Prove it.
On Trivago, you can compare hotel prices from multiple different sites, even your favorite one.
Look, same hotel, $100 less.
You didn't check Trivago?
I didn't check Trivago.
Check Trivago to compare prices and save up to 40%. Hotel? Trivago.
This is 48 Hours. This is why we have a death penalty. The dark side of human nature turns all of us into detectives. Come on, Jake Plummer.
Hook me up with a treat.
I love it!
Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And Scarlett, happy first trading day of a brand new month.
Although the month is not seasonally good for stocks.
That's true, but sell in May didn't work that well either.
True.
So who knows? Let's get to the biggest story right now in the more than $15 trillion global ETF industry. And we start with the U.S. dollar weakening to the lowest level in 2 years as trade tensions return in a big way and also U.S. factory activity contracts.
The SEC raising concerns that proposed crypto funds offering staking exposure may not legally qualify as ETFs.
And we're going to take a look at a high dividend real estate ETF with David Auerbach. He is the CIO of Hoya Capital, who calls real estate the most unloved sector. All of that and more coming up. But as always, Eric Balchunas from Bloomberg Intelligence, he's here with us now. He's looking at the flows. Eric, what do you got?
Katie, Scarlett, thank you. And look, I mean, I'm back again to say it's very bullish in the flows. Todd Sohn, who's in the A block here, he's going to come on and try to do some mental gymnastics that somehow this isn't bullish. But let me show you. The Qs have 4 billion. SPY has 1.3 billion. VGT, that's tech. VU, you got the Vanguard bid. I mean, you got the traders and the retail all at the party right now. Then you got a little gold and a little Bitcoin. Bitcoin there, too, I would put as bullish. And then semis. I mean, again, I don't see how this is bearish, but we'll find out. Let's look at the outflows here. Again, it gets even more bullish when you see money coming out of Bill. That's the cash-like ETF, so putting money to work. IWM, poor small caps, you know. They can't get going even in a rebound. They're left behind once again. And then some money out of TLT. This has been a play on the debt. Is it going to be a problem? I don't know. Money come in and out. Be careful. That is a tough trade. And then some money out of financials. Let's look at Bitcoin, though. I want to focus in on this because really big month for Bitcoin ETFs. All in all, in May, they took in about $5.2 billion. You say that's a lot of money. They took early part of the year off, and they came back rigorous. But look at this. That's 5.9 billion is IBIT. And then you can see the huge drop off here and then negative. So IBIT is over 100% of the net. Everyone else combined is negative. And this is kind of interesting. Normally, IBIT takes in 70% of the flows. My theory is this is an institutional rally in Bitcoin, not as much retail, because IBIT, being the most liquid and having the most options, would attract more of the bigger fish. So, Katie, I think this time, after that decoupling, we're finding bigger investors jumping in even more than retail.
All right, Eric, thank you. And joining our conversation now, as teased, is Todd Sohn. He is an ETF strategist over at Strategas. Todd, great to see you in person.
Likewise, you too.
So tell me why SPY and the Qs taking in more than $4 billion combined last week is not necessarily bullish.
Eric and I are having a good laugh here. This is the best. Listen, I think this is a time frame conundrum, right? Eric's talking about the last week or two. For me, if you look at the flow since the April 8th market low, the largest outflows have come from cyclical sectors and small caps, right? That is not very aggressively bullish. And if you also take an average of all equity ETFs, you're doing about $1.5 billion per day. That's pretty good. But at the start of the year, it was $3 billion a day, which is a very, very aggressive stance. So I look at it as now we're up 18, 19, 20% off the low. There's a meaningful different posture in the way investors are looking at the market at the start of the year. That's very supportive, I think.
Let's look at just May in particular, because it was a monster month if you look at the S&P 500's returns. But it's not so simple, right? The price action was really, in the first half, it was a sharp rebound. In the second half, we were just kind of meandering.
Yeah, I think coming off of lows, especially in the technical world, when you start to get all these stocks participating, get overheated. And that is very bullish for the, let's say, the back half of the year. But in the near term, you can get some cooling off, right? Cooling off the overbought condition, cooling off of this run we had since April 8th. That to us is normal. Expect some summer chop. Perhaps some rate agitation leads to some sloppiness in trading. But don't lose picture of the structural trend for equities.
Now, let's go to this. Yeah, I agree. There was a 1.5 billion a day. It's pretty good. But you're right. It was a little bit less than the robust flows when the market was falling, which were crazy. Yep. That said, what if that's a little rebalancing? You know, like when the market was awful, people were rebalancing into the U.S. because it was cheaper. Right. It went up a little bit, some rebalancing out. That's maybe my take on it, or maybe a little bit of the trading crowd taking profits. But how does this set us up for June? People just can't get bullish. I mean, I'm hearing that June's going to be like the worst month ever, and you know, now finally we're going to like really take it on the chin. What do you think?
It's a 24/7 news cycle, geopolitical headlines nonstop. We know the passive drip is always going to be there, right? The Vanguard put, as you always like to call it. It's a great phrase. I think my biggest concern, let's just say things kind of go status quo for me, we chop around. My biggest concern would be the return of concentration risk, because you finally had the Mag 7, the top 10 stocks, come off the boil. And those are predominant in all sorts of ETFs, large cap blend, large cap growth. My fear would be a return to that leadership and that kind of addiction to mega cap growth. I don't want to see that. I like when you have industrials and financials leading, as opposed to the stuff we're all kind of watered down in.
Points to a healthier market overall.
Yeah, you want to see participation, right? If you start to get cap weight, you know, some of the large cap ETFs leading while the equal weight ETFs falter, that's a problem for market durability.
Right, right. Well, we'll have to see how this month shakes out and whether seasonality still applies. It didn't apply last month, maybe June it will. I want to go right into the weeds right now. We're on ETF IQ, so I feel like we can. I want to talk about interval funds, actually. A really interesting trend has developed in 2024, and it's carrying over into 2025, that you're seeing a lot of interval funds come to the market. We're talking about only 25 launches in 2025 year to date, so not huge compared to the ETF world, but still, that's a record for this space. And interval funds, they're kind of the middlemen here. They're kind of like an ETF. They're not quite a mutual fund. You do gate, but it feels like there's a little bit more transparency there, and retail seems to like it. But what do you make of this trend? Why are we seeing so many interval funds launch?
So there's always a habit of issuers to launch something that's hot. Innovation and disruption in 2020, covered calls in 22, concentration in 23, 24. Now we're hitting to intervals because companies aren't going public anymore. So most of the largest companies out there are still private. And I think there's questions about putting those in ETFs, right? The demand has been muted. And the interval fund works. You're providing access to retail investors. Yes, there's a higher fee and there's a hurdle to invest, but it's not millions of dollars here. And you have the gate, the quarterly gate, so you can properly price the fund for the NAV. And you can also put in public securities in case there's a liquidity issue, right, at some point. So I just think it's kind of the right recipe for private assets rather than putting them in an open-end fund?
Yeah, I'm not convinced. Remember when Neil Young was telling everybody, you gotta use vinyl, you gotta use vinyl?
No.
You know, when digital music was taking off? That's what this feels like. Yeah, it might be the perfect way to listen to that album, but it's so much more convenient in an ETF. And when you put private anything in an ETF, what happens is the ETF will just trade like a hybrid closed-end fund. The arbitrage band will stretch a little, but it will still trade. And I think people would rather have that than go into what is a mutual fund, which they associate with high cost and bad outcomes, that has 5-letter tickers. I just don't see it. I almost feel like it's trying to go back in time on this sort of evolution of vehicles.
Yeah, I wonder if they'll have their corner in the record store, where vinyl is, right? Or in the electronics store. The other question, though, is anytime you're putting really private stuff into this ETF, we have a small sample size now, but the demand has been limited, right? We know about the private credit fund that hasn't had great success. And the ETF with SpaceX in it, yeah, had inflows when they changed strategy. Now it's kind of faltering off there. So,
Still, $300 million in that versus Cathie Wood's venture fund, which has $150 million.
Yeah.
That's
But
pretty amazing.
Compare that to Priv, for example, which has been absolute
My
crickets.
theory on that is credit is just not as interesting. It doesn't really move. It's an inch better. Whereas the private equity is kind of like, oh, SpaceX, cool.
The real question, yeah, okay, so there's SpaceX. What's the next big private company, and what fund adds exposure to it? Because SpaceX is there. You can get SpaceX proxies like Rocket Labs and stuff like that are out there. I'm sure there's some company on the horizon we don't know about yet that will change the world, and there's going to be a rush to put it in whatever ETF is out there.
What's going to be the catalyst that unlocks all that demand, all that interest for these private assets ETFs?
Regulation, proof in the pudding, like Eric talked about. Yes, you've had high-yield munis, bank loans, high-yield bond ETFs over the course of the years, over the course of history. I think it's just going to be more durability, how these funds act during episodic events, right? Stressful credit-type scenarios where, yes, the arbitrage band stretches out, comes back in, and things are okay. I think it's just more on-the-field usage.
Okay. All right, Todd, always great to see you. Really appreciate you taking the time and kicking off the new month with us. That is Todd Stone of Strategas. Now coming up, concerned about crypto. A potentially watershed effort for crypto ETFs is throwing up regulatory doubts from the SEC. That conversation next. This is ETF IQ on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but run right rhyme. Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
When you need your sports in us now,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ. Streaming free anywhere you are.
All right, welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time now for the ETF Brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with multi-share classes. And this is interesting, I promise, because the SEC industry watchers say it's getting closer and closer to giving the green light here. And there's a lot of concerns that are starting to percolate here about whether or not that could mean that ETFs start to distribute capital gains. That is famously not what the ETF wrapper does, but a lot of question marks here. We'll continue to watch this story. But let's talk about some interesting filings from last week. Some ETFs that would try to track the portfolios of star investors, including Bill Ackman, Stanley Druckenmiller, Michael Burry, with some income on the side. We'll see if those ETFs actually get to the launching line. But let's end here with the SEC flagging concerns on crypto ETFs. Crypto ETFs specifically that offer staking rewards. The SEC raising concerns that they might not legally qualify as ETFs under federal securities law, Scarlett.
Okay, so there's a lot to unpack here. Let's talk about this issue more with Bloomberg's Isabel Lee. Isabel, the SEC sent its letter late Friday, and issuers like Rex Financial, Osprey Funds, they had been planning to launch crypto ETFs that offer the staking exposure. What's the timeline here when we're thinking about, how quickly they were or how far along they were in their process?
So on Friday, we wrote the story that they already received their so-called effective registration, meaning they can file anytime. And they actually told us that they will launch anytime. And they actually told us they will debut mid-June, the two ETFs tracking Solana and Ethereum with staking exposure. And then Friday night, the SEC comes out with a letter saying that they improperly filed their registration statement. And then we reached out to their general counsel, Greg Collette, and he said that we think we can satisfy the SEC on their questions, and we don't intend to launch the funds. But on Saturday, it's interesting. We had a really fiery statement from SEC Commissioner Caroline Crenshaw. Eric Balchunas is giggling. She said, how is it that these crypto assets are supposedly not securities and securities at the same time? If you're confused, join the club. Ooh. I think that was a really strong statement.
I feel like the issuers are getting more emboldened. They're like children who are trying to push the envelope. How much can they get away with? I don't blame them. BitX is an ETF, 2x Bitcoin. It came out 6 months before they approved Spot. It kind of ran the stop sign, and now it's got 2.8 billion. So there's been a couple cases. Priv is another one. Mm-hmm. So can you really blame these issuers for trying to just get out?
And that's what critics are saying, that it can't be like this. You can't have a piecemeal approach to things and then tackle one issue at a time, because it's tough, And then in Canada, there are actually ETFs with Solana staking. So then some people are also saying that Canada has always been the trailblazer. In reality, not really. The US, if they can make it happen, maybe we can too. So some still hold some optimism around.
So Isabel, what are people telling you about where this goes from here? I agree with Eric that it does seem like, issuers are pushing the envelopes and in some cases getting rewarded for it. And if an ETF is already trading, it's hard to imagine a world where it comes back.
That is true, but we saw that kind of with Priv. It already listed, and we saw a letter. Priv is the private credit ETF by State Street and Apollo. SEC wrote a letter after. But then the thing with this is, at the heart of it is really whether these crypto assets are a security or a commodity. And I feel like there's still no clarity there, and that's why, to Eric's point, they're just really pushing the envelope, trying hard. And this really wouldn't be possible, according to many people I've spoken to, under an administration that's not Trump.
Right, but we do have a Trump administration that's very pro-crypto at the moment. Talk a little bit about the makeup of the SEC and how that shifts their thinking on this big question of whether crypto assets are a security or are not.
The SEC Commissioner Caroline Crenshaw is the lone Democrat there, and she's really the only critic at this point, or maybe not only, one of the few, let's just say, but it's majority people who are supporting Trump. And I don't think these issuers would be emboldened. I don't think the ETF world will be a Wild West, really, if it wasn't Trump who is in power. So maybe this is a new regime, but it's really interesting because I feel like there should just be clarity. And so this is beyond these two ETFs now. It's a question of how much or how crazy can these ETFs, or how emboldened can they be down the line?
Bloomberg's Isabel Lee, great story. Thank you so much for joining us. All right, still ahead on ETF IQ, we drill down into real estate and housing with David Auerbach of Hoya Capital next. And just a reminder that you can listen to Eric and Joel Weber on Trillions, their podcast that covers the ETF industry. This is ETF IQ.
New Eau de Parfum Intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
And it's time for today's drill down, where we focus on one ETF. Eric, what do you got?
Katie, today we have the Hoya Capital High Yield REIT ETF with the ticker spelled wrong, but on purpose, RIET. And this is simple. It's going after high-yielding REITs. People are already buying REITs for yield. VNQ, I think, yields about 4%. This would be well over double that. So it's like, what are the highest-yielding REITs? That's what it does. It's not active, though, so it uses an index approach, a multi-factor. It's equal-weighted. 50 basis points is the fee, $87 million. Let's look at what it holds. Now, when you go after high-yielding stocks, you tend to get ones that you haven't heard of or aren't as familiar, and that's what you see here. A lot of these are not that familiar to people. Something like Simon would be normally at the top of a bigger REIT ETF. This is going to get you some different kind of companies here. Let's look at the performance of this versus SPY and versus VNQ, which would be like the biggest one in the category. And you can see it's not been great, right? This is about 4 years. It's down 12%. SPY is up 43%. And VNQ is only down 2%. So this one is sort of like a high beta version of VNQ. That said, what goes down sometimes comes up, Katie. And I think 87 million, by the way, with that performance is pretty good. So when it rallies, it could do even better.
All right, Eric, thank you. And joining us now to talk about this ETF is David Auerbach. He is the CIO of Hoya Capital. David, great to have you with us. Let's start with the performance, because I take a look at a total return basis, and your ETF is just a little bit lower on the year, 3.7% or so, but your benchmark is higher. I understand it's not an actively managed ETF, but how do you explain that divergence?
Yeah, Katie, thanks so much for having me. It's great to be with you guys, and it's a very easy answer. Remember that REITs only represent 2.5% of the S&P 500. That differs to like the technology sector, which is over 30%. Another example, office REITs, which only represent 3% of the REIT industry, generate about 80 to 90% of all the headlines and media coverage that's out there. And so if you really peel back the layers of the onion, we see opportunity in the small and mid-cap REITs. If you buy a VNQ, you're buying the largest market cap weighted names that frankly have like the lowest yields that are out there versus the small and mid-cap names that have both the higher beta, potentially the higher dividend yields, and also, by the way, RIET is the only, that I'm aware of, the only REIT ETF on the market that combines both common and preferred stocks. We have a 10% allocation to liquid REIT preferred stocks. So we use this rules-driven approach to try to provide the most diversified portfolio in terms of market cap, geography, sectors, etc., to really put out this almost 10% yield that we pay on a monthly basis annualized.
Okay, REITs themselves, real estate investment trusts, make up about 97%, 98% of the fund. Yet, as Eric pointed out, the ticker on your fund is RIET, and that was not accidental. Can you give us the backstory here?
Yeah, it's very simple. I prefer E because income comes first. When you buy REITs, I don't think of it from, oh my gosh, this isn't putting up NVIDIA-like numbers. I don't buy REITs for stock price appreciation necessarily. You buy REITs for the dividend income stream. The goal of these management teams, frankly, is to keep the blinders on regardless of what's going on in the world of interest rates. How do we maximize our revenue growth, minimize our expense growth, grow our net income or our bottom line to the highest level that we can, and push out the most that we can to shareholders in the form of dividends. So when you look at the income side of the equation, think about these companies that pay monthly dividends as an example, like a Realty Income or an Agree Realty Trust. If you add up those monthly dividends over the course of a year, 3 years, 5 years, 10 years, etc., you're talking a serious income stream that flows through to the bottom line.
David, if you look at the flows into REIT ETFs over the years, they tend to be correlated or inverse correlated to rates, right? Because if you can't get a lot out of like a short-term treasury bill, right now you can get almost 5%. Well, REITs yield a lot, so you're going to go out to find yield. Now you can get that much in really low-risk treasuries. So do you need rates to fall for this category to really blossom, including this ETF, or can you make it even if they hang around 4 or 5%?
It's a great question. We could spend 30 minutes alone on that. REITs somewhat are interest rate sensitive. I've always said 4% is the magic number. If a 10-year treasury goes below 4%, that's great for REITs, and it really corresponds to the dividend yield. If you market cap weight the dividend yields across the sector, it's about 4%. If you equal cap weight those yields, it really goes to like 6.5% or so. And so really on a risk-adjusted basis, that's why we see this value again in the small and mid-cap names. But right now, with REITs trading around the 4.5% level, REITs are the punching bag that's out there. And I think it leads to that 45% underperformance versus the S&P. If you look at the Bank of America Advisor survey recently, REITs are basically the most unloved sector that's out there. And should the Fed cut rates, you want to be ahead of that curve. You don't want to do that trade after the Fed cuts rates. And again, with them only being a 2.5% exposure in the S&P, it really is almost like I don't want to say it's a no-brainer, but there really is no cost in being wrong because it's such a de minimis part of that index.
Well, I want to talk about that a little bit more, that in your view, this is the most underloved sector. I hear what you're saying, that you want to be ahead of the curve. You want to get in before the Fed cuts interest rates. But when it comes to socializing this area to the broader investment public, is that what it's going to take in your view? Is it going to take the Fed actually finally lowering interest rates in a meaningful way?
Well, it's funny because I kind of sit there every single day and say, look, we use REIT-owned properties every single day, not thinking about what's going on with the world of the Fed or the 10-year Treasury. As an example, we're utilizing a data center REIT to facilitate this conversation today. You order an Amazon package, you use 3 different REIT sectors to get that package to your doorstep. We use REIT-owned properties every single day of our lives. Obviously, from the headlines perspective, from the business networks perspective, to the advisors and the investors, if the Fed does cut rates, then it should bode well for REITs. But for these management teams, they've been operating in this environment, this high for long environment, for several years now. Mm-hmm. The debt markets are wide open. Those REITs that are well capitalized have raised tens of billions of dollars of new debt in the past few months. Right. And so it's business as usual for a lot of these guys. Frankly, REITs are the most tariff resistant of a lot of all those sectors that are out there, since the majority of those revenues that are earned are all domestic based. Right. And so really, we think this is an opportunity.
All right, David, got to leave it there. Great to get some time with you. That is David Auerbach of Coyer Capital. And you can read about this drill down, plus the latest in the ETF industry when you subscribe to my weekly ETF IQ newsletter. That is Bloomberg.com/ETF IQ newsletter. But that does it for Bloomberg ETF IQ, the TV show. I'm Katie Greifeld, along with Scarlett Fu and Eric Balchunas, and this is Bloomberg.
Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
Well, you're in the big leagues now.
How was your vacation, sir?
Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look. Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Let's do it.
Now stream. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Release the mink!
The Late Show with Stephen Colbert. You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Welcome to Bloomberg Markets. I'm Scarlett Food. Let's show you what's happening across financial assets right now. We see U.S. stocks under some pressure after weak manufacturing data and a pointed lack of progress on trade deals. China accusing the U.S. of violating their recent trade truce in response to President Trump last week accusing Beijing of the same. We're looking at the dollar weaker versus all the G10 currencies. In fact, the Bloomberg Dollar Index is right about at its lowest in almost 2 years. Hedge funds are adding to their short dollar exposure because of signs of those worsening trade tensions. Crude oil, a big spike up there, almost 4% higher after OPEC Plus increased production by less than expected. And look at the 10-year yield. We have yields higher across the curve, now up almost 5 basis points, and you can see at 4.45%. And if you look at the 30-year over the past 2 weeks as well, we've seen some big moves there, up to as high as 5.15% on the 22nd before coming back down, but a lot of volatility remains in the bond market. Now, just this past Friday, JP Morgan CEO Jamie Dimon warned of an impending crack in the bond market. Take a listen.
So if you look at economic history, bad things happen. When those tectonic plates shift, it's very hard to see in real time. It is shifting, and this is one of them. I just don't know if it's going to be a crisis in 6 months or 6 years. And I'm hoping that we change both the trajectory of the debt and the ability of market makers to make markets.
Our next guest says that 30-year yields could reach 6% or higher as international investors back off U.S. Treasuries. Let's bring in Mark Dowding. He is Chief Investment Officer at RBC Blue Bay Asset Management. Great to see you, Mark. Thank you so much for joining us.
Thank you. Great to be on.
Let's talk a little bit about this 30-year bond yield maybe getting to 6%. What kind of odds do you assign to that probability?
Yeah, so I think the point that I was making here is that historically we've seen a lot of overseas buyers of U.S. debt. If anything, what we see now now, our connections worldwide would say there's actually less demand for US assets and for the dollar overseas. And therefore, if you end up in a situation where the US debt needs to be sold more to retail investors in the US, I'd be sort of putting out there the thought that maybe retail investors who are buying Bitcoin or they're buying stocks, in order to persuade them to really sort of chase value in treasuries, I think you probably need to see long-dated bonds at least a couple of % above where prevailing cash rates are sitting. And with inflation still remaining relatively elevated, we don't see the Fed cutting very much. And so if we're in a 4% interest rate world, why shouldn't we see long bonds at 6%?
Okay, the long bond at 6% is one thing. What about along the rest of the curve, the belly of the curve, the short end of the curve?
Yeah, I think here, I think the main thing that we'd be highlighting is we think that the compelling trade at the moment is less to do with market direction. It's more to do with what's happening to the curve shape itself. We think that we're moving towards a steeper yield curve. Obviously, the front end of the yield curve is going to be more dictated by what the Fed is doing. It's anchored by interest rates sitting where they are. But I think that as a bond investor, you do think that we may be in a world and an environment that we transition to where bond investors require more term premium. Frankly, investors aren't really being paid a lot in terms of compensation to extend out towards those really long-dated maturities.
There's some speculation now that the Treasury Department may start to scale back auctions of 30 years. Do you see this as happening as you know, in the near term, you know, perhaps this summer?
Yeah, look, I think this is likely. This is actually a trend that we're seeing globally. The Japanese are scaling back, the British are scaling back, the US will be scaling back. But at a time when the overall volume of debt continues to grow and grow and grow, it still doesn't mean that there's going to be no issuance at the long end. Moreover, I think that if we end up in a situation where we shorten the maturity profile of debt too much, you actually invite different situations, different problems ahead of you, in as much as you end up having to roll over that debt on a very regular basis. So yes, I think issuance patterns will change, but still I think the message is the yield curve today is very flat by historical standpoints and perspectives, and we do think that that yield curve will need to steepen.
Scott Bessent, the Treasury Secretary, says that there could be additional demand for treasuries, maybe even at the long end, from the White House's push to ease regulations on banks' purchase of treasuries, basically exempting treasuries from the bank's supplementary leverage ratio. How meaningful would this kind of demand be?
So I think that this is going to help, or help at the margin, certainly. And one of the things that we've cited on more than a couple of occasions is if you look at long-dated swap spreads, swap rates are well below where treasury yields are. And this isn't really a function of the fact that people are worried about the quality of the US government's credit, is it? A lot of this has been down to the fact that it's become more efficient in terms of capital usage for investors like banks and others to actually own fixed income through derivatives such as interest rate swaps rather than cash bonds. So levelling that playing field will benefit treasuries relative to swaps. I think that that will be a constructive thing. But all of that said, these are things that you're doing at the margin to limit the rise in long-dated yields. I don't think it's going to be a narrative that really changes the tide here.
Right. The structural issues remain, certainly. Let's talk a little bit about how it's not just in the United States. You mentioned Japan as well. How do you line up what we're seeing in Europe, in Germany, in Japan, with the rise in bond yields here in the U.S.? I mean, is it just correlation? Is it coincidence?
Well, I don't think it's coincidence at all. I think one of the themes we see globally is we see very elevated levels of deficits. And if anything, deficits getting even larger, not smaller. We've just got the Europeans with a big fiscal push. Germany's doing the biggest fiscal push since the reunification of the country back in 1989 to pay for additional defense spending, which is something that the US wants to see. In Japan, we're also looking at sort of additional spending measures there. So the story that there is almost too much debt being issued globally is something of a global phenomena and something that is putting pressure on curves globally. That said, I would say that in Japan, that 10s/30s slope of the yield curve is already reached a spread of 160 basis points, which we think is frankly far too steep. By contrast, in the US, that slope is only at 50 basis points. That's much too flat. So I think that there are similarities between markets, but still there are relative value opportunities in picking between the different markets and different jurisdictions at this moment in time.
So as an investor, where does that leave you? Where do you want to be positioned?
So I think when it comes to the Treasury curve at the front end, but I think that more than anything, more than having a message here about what is the market direction, where are yields going, it's more a case about where is the curve going. And with this, I think we can say that we've got a lot of conviction over the curve shape, more conviction there than on the direction of yields, because the other thing that I'd say as well is if we do end up with an escalation of trade tensions that actually pushes back towards worries about growth and worries about recession, this is where the front end will benefit. If we're in a world where there are issues with government debt and supply, this is going to hurt the long end. So we see a number of facets potentially steepening the curve, and these are facets that work well actually as a risk-off hedge in your portfolio.
All right, steeper curve either way. Mark, thank you so much. Mark Dowding with RBC Blue Bay Asset Management. Have a great week. All right, coming up on Bloomberg Markets, aluminum and steel stocks in the U.S. are surging after President Trump said he will double tariffs on the metals starting this week. We'll bring you more on that next. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ever wonder why razors are so expensive? It's because Big Razor, and we won't name names, had a monopoly. They kept charging more money to you for your blades, and we were sick of it. We sell 25% of razors in America, and 25% of guys can't be wrong. It's all the things you want in a shave at a much better price. At Harry's, we deliver you the same great price every day. Monday, Tuesday, Wednesday, Thursday, all the days. Everyday low prices that you can trust and believe in. I shave with it every day. I love our products. Think you'll love it too. Give it a shot.
I was the fat friend, basically, in school. I did feel isolated. I felt like giving up. I felt like giving up on life. I tried everything, and then I found Mochi.
You're responding really well to the medication.
I called my friend Nicole. So we've been on this journey together. I've lost over 100 pounds, and my entire life has changed. I can do so much more, and I'm ready for new adventures. Check out joinmochi.com.
Want to shave down your shower time? Simplify your routine with Moisture Plus, the new one-step wonder from Flamingo. Just add water to activate extra comfortable moisture bars enriched with aloe, coconut, and shea butter. No shave gel needed. 4 sharp blades give you a close shave. It seamlessly glides over curves. Enjoy soft, smooth skin in one step. Find Moisture Plus at shopflamingo.com/shave or in the shave aisle.
There's an easier way. From little fixes to big projects, taking care of your home is easy with Thumbtack. Download the Thumbtack app and start caring for your home today.
This is Bloomberg Markets. I'm Scarlett Fu. We're looking at an S&P 500 down about 0.1%. So a mixed trade here as the Nasdaq is higher by 0.2%. Let's go now to Bloomberg's Isabel Lee for a couple of individual equity movers. Hi, Isabel.
Hey, Scarlett. We're looking at Bristol Myers. Shares are edging near session highs, up by almost 1%. So the company said it will pay BioNTech as much as $11 billion to license a next-generation cancer drug. So this is big because competition in this area of oncology that really seeks to harness the immune system to tackle tumors has been intensifying. We have Bloomberg Intelligence estimating that global sales could hit $60 billion a year by 2027. So sticking with M&A and pharma, we have Sanofi agreeing to buy Blueprint Medicine for at least $9 billion. And that comes as the French drug maker expands its rare immunological disease portfolio. You see shares here of Sanofi, though, edging lower by 0.6%. But we have JP Morgan saying that the deal makes both strategic and financial sense. JP Morgan adds that this brings in growth driver for rare diseases. And lastly, we're looking at Applied Digital. You see shares here soaring by just almost 50%, and CoreWeave also higher by almost 5%. This is the biggest intraday jump for Applied Digital. This comes after the company entered into 2 lease agreements with CoreWeave. So shares of CoreWeave, as you can see, are also in the green. So Needham says this is, quote, a good deal to get cash coming in, and also proves that, you know, major hyperscalers are comfortable with the customers like OpenAI, Google, and Microsoft. Back to you, Scarlett.
All right, thank you so much, Isabel Lee, with our individual equity movers. We're, of course, also looking at broad market reaction from the new tariff announcement from President Trump announced late Friday.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50% the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that.
And that brings us to our stocks of the hour. We're looking at steel companies. You look at shares of Cleveland-Cliffs, Nucor, Steel Dynamics, and Commercial Metals, all gaining in tandem with other steel and aluminum stocks. Trump says those new tariffs on steel will be in effect starting Wednesday, June 4th. Joining us now to break it all down is Bloomberg's Joe Doe. And Joe, you were in Pennsylvania for that rally that President Trump was speaking at. What he actually announced was a complete surprise.
Yeah, I mean, we were all there to listen to details of the pending U.S. Steel Nippon Steel deal, which we eventually got some more details, but it was only after he made this announcement, which is actually what the market was shocked by, right? I mean, sitting there when he announced 50% increase or 50% steel import tariffs, I remember kind of turning to one of my colleagues and saying, whoa, oh my gosh, that's huge, right? And of course, all my calls this morning have been the reaction from market participants and trade lawyers who've effectively said, yeah, this one was a surprise.
And the goal here, of course, as it's been with a lot of these tariffs, is to bring more production home, to spur investment, and to kind of protect the domestic industry. But it does have a flip side to it, which is that a lot of other industries will be affected negatively.
Yeah, I can say that I had a conversation over the weekend from someone in the political sphere who said, oh my gosh, right when he gets a win on U.S. Steel, Nippon Steel, he goes and does this, and that's going to cause a lot of trouble for different constituencies around the country in the manufacturing space who buy steel and buy aluminum. And even if they're not buying steel and aluminum from foreign import sources, they're still going to have to pay some sort of premium because this is going to put another floor on prices. We saw that today. The premium to buy aluminum, which is basically a shipment charge, went from like 37 cents all the way to nearly 60 cents per pound. I mean, that, like, I've been covering these markets for 10 years now. I've just never seen a day like that. And that's really shocking. Now, the hold your horses here. He's said it. It's not clear that he's actually signed it into law. But I think right now the market is showing that there's real concern that this is actually going to go through.
Right. If you follow the playbook that he usually has, maximalist position and then negotiation and then maybe bringing it down a little bit. You mentioned U.S. Steel. I look at U.S. Steel shares today. They're actually defying the broader rally in steel names. And this is on the heels of what the president did tell us about the Nippon deal and U.S. Steel deal. What exactly are the details right now?
I think the core details that we got in the market were a $2.2 billion investment in the Mon Valley. That's Andrew Carnegie's original mill. You got $7 billion spread out across 4 different states, which are all the states in which currently U.S. Steel operates. So that will rehabilitate some of the manufacturing there. And then he also announced that they would not be allowed to fire steelworkers, and that the steelworkers would get $5,000 bonuses per person. That's pretty interesting. He also said all these blast furnaces are going to have to run at 100% capacity over the next 10 years. This gives us some idea into what the government is going to hold over Nippon Steel once this deal is done. Ultimately, we got to wait for the ink to dry, but that's what we've heard so far.
All right. Of course, everything is subject to negotiation until that point. Joe, as always, thank you so much. Bloomberg's Joe Do, our go-to person on everything in the steel industry. Now, Trump's higher metals tariffs, of course, aimed at protecting the domestic industry, but it does raise costs for another industry, and that's aerospace. Here's GE Aerospace CEO Larry Culp, who spoke on Bloomberg earlier today.
What we've been advocating for is a return to where we were on the heels of the 1979 Civil Aviation Agreement, which really provided tariff-free trade amongst all the signatories. That was a positive for the U.S. aerospace industry. I think that is why the U.S. enjoys a $75 billion annual trade surplus today. But we'll see how that plays out. There's a series of bilateral negotiations that are active. What we've shared with customers and with our investors is we think we've got about a $500 million residual cost challenge as a result of those tariffs. There are a whole host of things we've done with our supply chain. We're exercising the duty drawback options and the like. But we will be taking cost actions and passing along some of that residual tariff pressure.
You're already seeing it, aren't you? It's already starting to impact your business.
Very much so. Very much so. That's why we're managing it as best we can, mitigating it where we can through those supply chain improvements, but also through the cost and price actions I referenced a moment ago.
And customers are saying what? They're saying you need to do it, or you need to take that cost, or we can take some of it, or how does that conversation go?
Well, I think the conversation really starts back with advocacy. I think we've worked very well with our airline customers, with our airframer partners, making sure that the industry is really speaking with one voice at this point in time, because so many people, I think, believe that the prior regime really benefited the industry. In turn, we're helping make sure that everyone understands what we're doing, both operationally to mitigate, but also, again, the cost actions that we're taking to make sure that we're buffering that as best we can.
GE Aerospace CEO Larry Culp speaking with our Guy Johnson. Now, coming up, speaking of price pressures, we're going to take a closer look at the travel industry. The president and the CEO of BWH Hotels will be joining us next to talk about what he's seeing heading into the peak travel season. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Well, you're in the big leagues now.
How was your vacation, sir?
Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
We're now at the start of peak travel season with on and off again tariffs raising the level of economic uncertainty. U.S. consumers, they're increasingly prioritizing value and flexibility for their travel plans. Joining us now to discuss how this plays out for one hotel company is Larry Kukulik. He's president and CEO of BWH Hotels, best known for its Best Western brand, along with SureStay Hotels and World Hotels as well. Larry, thanks for joining us today.
Good afternoon.
So let's talk a little bit about vacancy rates and how things are shaping up for this peak travel season. We're past Memorial Day, and of course, a lot of the kids are still in school, but how are you seeing things fill up right now?
Well, we're anticipating a very strong summer season. You mentioned value-driven, and we believe that what we are witnessing is consumers making value-driven decisions, and they're very savvy. They have the opportunity to research across our bestwestern.com portfolio and make decisions that best match their travel needs. As a result of that, we're seeing the booking window kind of shorten because, as you mentioned, there are those pressures with regard to the economy, and we think that that is in fact impacting their decision making. But what we're seeing are shorter stays, but more frequent stays, but the bookings actually taking place closer to the stay.
Okay, I also mentioned flexibility, so people want the ability to change their plans at the last minute. What does pricing look like when they, check in on a price initially, then come back a week later or 2 weeks later?
Well, we offer our guests reservations that are, I'll call it, amendable. They can cancel, rebook, and as a result, we provide them that flexibility, which I think is also important for value-driven consumers today.
But will the prices stay stable, or will they go up because you're getting closer to the actual date of checking in?
They can go up or they can go down. It depends, of course, on the demand at that hotel. And I do like to believe, though, that we're very fair and reasonable with our guests with regard to pricing, because we recognize that they want to be able to be appreciated as guests. And that's a way of showing appreciation. It's the value as well as the gratitude, showing them for choosing us as their hotel.
Well, and part of that showing value as well is through loyalty programs. And I'm curious how much more you're relying on loyalty programs to bring in the sticky customer base.
Well, you have to actually focus on growing brand loyalty. Brand loyalty is tremendously important to us, and we are the only hotel brand that actually has points that never expire. So we try to make sure our guests, when they join our loyalty program, have the capability to use those points on a future stay. And it was about 1.5 years, 2 years ago, we actually launched a program where they could use their points to reduce the cost of a stay, so they don't have to have enough points to pay for an entire stay, but have the flexibility to use those points to offset the cost of a stay.
Now, your hotels are independently owned and operated, but I'm curious as to what the hiring situation looks like right now for the industry. We have the big jobs report this week. We have a lot of other job data coming out this week as well. What does hiring look like in this current environment when there is a crackdown on undocumented immigrants and therefore the labor market supply is tightened?
Our hoteliers, as you mentioned, are independent owners of their hotels, typically small business owners. As a result of that, they become embedded in their communities, and when they're great members of a community, they become an employer of choice. We see less pressure as a result of that, and our hoteliers are valued members of their community, and as a result, we see, by way of example, family members coming to work at a hotel because their brother or their sister work at that hotel. And so being an employer of choice and treating your employees with dignity and respect and also making them a part of the success story, I think offsets the pressures of labor.
Are there certain markets where hiring is a little bit more challenging than others?
Of course there are.
Can you give me an example?
Well, what I'll say is there are jurisdictions that are putting pressures on labor in the hotel industry right now. And one of those pressures, of course, is the cost of labor. So you have to look at
the labor market pool, the cost of labor, the competition for that labor in the market. So without giving you any specific examples, I think those kind of define the parameters that make labor more challenging.
All right, Larry Kukulik, thank you so much. He is president and CEO of BWH Hotels. Of course, they are the owners of Best Western Hotel. And I'm Scarlett Fu. That does it for Bloomberg Markets. As we hand things over to Balance of Power, we're looking at an S&P 500 that has erased its loss and is now little changed on the day. The Nasdaq 100 still holding on to its advance of 0.3%. Yields are higher across the curve. The two-year yield now up 4 basis points. We did have some weak manufacturing data, and of course, there is the continued tensions over trade between the U.S. and China. Balance of Power is up next. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Well, you're in the big leagues now.
How was your vacations there? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Structured settlement and I was born out of the recognition that in the post-war era, the U.S. was going to be at the center of the economic and financial markets and currency of the economic world. Given this, understanding the international forces that affect the United States was becoming vital to meeting the Federal Reserve's domestic mandate of maximum employment and stable prices. To have a deep understanding of these international forces, trade, the current account and financial accounts, foreign inflation and growth, commodity prices, the dollar, was not going to be easy. The division was going to need to attract exceptional talent, to conduct exceptional analysis, and to develop exceptional tools. And it needed to be able to deploy all these assets to support the FOMC in understanding and responding to cyclical and structural developments, as well as international crises. This conference is a recognition of that achievement. Today and tomorrow, we will celebrate the exceptional accomplishments of the IF division. We will celebrate the dedicated staff who have contributed to the rich and inspiring environment, some of whom have stayed their entire careers here, becoming leaders at the board, and others who have become leaders in academics, in business, and in policy institutions around the globe and within our own system. Through the academic portion of the conference, we will celebrate the vital importance of research on topics such as international finance, international open economy macroeconomics, and international trade. This research and the intellectual rigor it brings to the analysis and the model building of the IF division is critical to achieving the division's and the Fed's mandate. we will also celebrate the sense of mission and collegiality and friendship of the staff throughout the decades that make it such a delight to gather here together today. There is no better person to kick off this conference than Chair Jay Powell, who from the start of his tenure at the Federal Reserve Board has been a supporter of the International Finance Division. The chair has long recognized the pivotal role of the U.S. economy, financial markets, and the U.S. Central Bank around the world. He is a remarkable and respected leader among his peers across the globe. Please join me in welcoming him to the podium to open what is sure to be a wonderful next 2 days. Thank you.
Thank you, and thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks, advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So, congratulations to the Division of International Finance, IF in these parts, on 75 years of outstanding work in service to the Federal Reserve Board and by extension to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve Kamen. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker, Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few. We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The U.S. had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic. IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on U.S. and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work. Under the direction of former division director Ralph Bryant, IF developed its first multi-country model. Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the implications of various shocks for the U.S. and the global economy. The results have informed research papers, board memos and briefings, as well as the risks and uncertainty assessment that FOMC committee participants receive in advance of every meeting. The IF division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring work. The expertise generated through study and response to these global challenges proved invaluable when stress hit closer to home during the global financial crisis and then the pandemic. Both of those events required immediate, broad, and in many cases unprecedented responses to avoid disrupting the availability of credit to American households and businesses. The nation and the world looked to the Fed to lead in these moments. During the global financial crisis, when global funding markets came under stress, IF worked to establish swap line arrangements with several major central banks that helped restore stability in U.S. dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground. For instance, the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis. This team helps to assure that we're well prepared for our international engagements by providing us detailed, some might say extremely detailed materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions. In these and other endeavors, we benefit from the robust relationships that you establish and maintain with our global counterparts. So, thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank so that we can deliver on our dual mandate for all Americans. Thank you very much.
economy right now.
But are you not hearing from some of those manufacturers that say lifting steel and aluminum tariffs from 25% to 50% and therefore elevating input costs is an issue?
Yeah, to be fair, yes, they are, but they're giving the president some grace. They understand that tariffs are just a level the playing field, so to speak. So what I'm hearing is there is a little bit of concern, but they do trust his decision making on economics and economic policy because he's done it before. And in his first term, it went really well for a lot of the businesses in my community, and they're hopeful that we're going to get this economy back on track.
Well, with that trepidation, is there also a conversation about pulling up the moving trucks and starting to move manufacturing supply chains? Do they say, Congresswoman, give us 6 to 9 months because we're bringing it back to Michigan?
Yes.
Is that how this ends?
Yes, they are asking, just like they're giving the president some grace, they're asking for a little bit of grace if they're showing progress moving facilities back.
Will we see that?
You know, I'm confident. I don't want to get ahead of the president, but what I can tell you about President Trump is he's been very receptive to the American worker in listening, right? There are unintended consequences when we do policy changes. He's very in tune with the American worker, and he wants to listen to what they're dealing with in the American manufacturer, and he will make changes based upon that.
All right, Chairwoman, great to have you with us in our Washington, D.C. studio. The Chairwoman of the House Republican Conference representing Michigan's 9th District, Lisa McClain, with us on Bloomberg TV and radio, talking the One Big Beautiful Bill, but also manufacturing. And we did get some manufacturing data in the form of ISM manufacturing earlier today that has had some influence on financial markets. So let's check back in on those now quickly with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, we have got the Dow lower, the S&P back in the green right now. Little changed, up 3 points. That's an advance of just about 0.1%. Dow Industrials down 139, though, remaining in the red, down 0.3%. NASDAQ, the composite index, up 72, up by about 0.4%. But interestingly, we do have our MAG 7 index. It right now is trading little changed, up by about 0.2%. Tesla shares, by the way, lower. We've got the 10-year 4.45%, the 2-year 3.93%. Investors sifting through economic data as well as following the latest trade and tariffs developments. Also, gold now up $85 the ounce, up by 2 points. The 10-year 4.45%, the 2-year 3.93%. To be clear on spot gold, up $2.60 the ounce. West Texas Intermediate crude up 3.5%, $62.96 a barrel. Just want to update you on that developing Walt Disney story. Bloomberg News now reporting that Disney laying off several hundred employees across its film and TV businesses. Those cuts began today and are falling on employees in marketing, publicity, casting, and development, along with corporate financial operations. This now coming from the company. Shares of the Walt Disney Company, they're down by 0.4%. Balance of Power continues right now in Washington. Back we go once again, your hosts Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. We're in Washington, where we just wrapped up a conversation with the chairwoman of the House Republican Conference, Lisa McClain. And Joe made mention in our conversation with her about the experience of Iowa Senator Joni Ernst, the Republican, who held a town hall over the Memorial Day recess and was actually pressed by a constituent and people who were in attendance about the cuts to Medicaid and SNAP that could potentially come if the One Big Beautiful Bill indeed become law, suggesting that people will die. And this was the senator's response.
People are not, well, we all are going to die. For heaven's sakes, folks. Okay, no, but what you don't want to do is listen to me when I say that we are going to focus on those that are most vulnerable. Those that meet the eligibility requirements for Medicaid, we will protect.
Yes, you heard her say, well, we are all going to die. Fast forward through the outrage, many rounds on social media, a bunch of campaign ads that Democrats are making with that tape, to the response from Senator Joni Ernst, who went all the way to an actual graveyard to record a video that maybe we'll call a non-apology. Listen.
I would like to take this opportunity to sincerely apologize for a statement that I made yesterday at my town hall. See, I was in the process of answering a question that had been asked by an audience member when a woman who was extremely distraught screamed out from the back corner of the auditorium, "People are going to die." And I made an incorrect assumption that everyone in the auditorium understood that, yes, we are all going to perish from this earth.
So on that grim note, let's assemble our political panel. Today, Jeannie Sheehan Zaino is with us, Bloomberg Politics contributor, Democratic analyst, and senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Ashley Davis, Republican strategist and partner at S3 Group. Ashley, I'll come to you on this one first as the Republican at the table. When you are being pressed on issues that actually do affect people's health and health outcomes and suggest that we're all going to die anyway, then kind of double down in that fashion, does this serve the senator well? Does it serve Republicans at large well?
I knew you were coming to me first. I mean, Senator Ernst is a very serious member, as I'm sure she's been on the show, and so I was actually surprised with the response today. I do think that from the initial town hall, these town halls are exhausting, which is why most people are canceling theirs, or they're being told, like, because, and we all know this is not a political thing, they're being stacked with Democrats to ask hard questions, which, by the way, Republicans would do the exact same thing. So, I mean, like, this is not a political statement that I'm making. So I think they're exhausting. I think that probably the response was a little bit worse than the actual mistake to begin with. She could have just said, like, listen, that was a little bit out of context or whatever, but the doubling down, I mean, she's making a strategic decision to do it. She knows what she's doing, so.
With a little bit of snark. Jeannie, I'm very in touch with my own mortality, so I have to be careful here. I can barely sleep through the night with this kind of stuff. Is this actually great for Democrats?
It is, you know, and Joe, I think, you know, she woke us all up to the fact that we're all going to die. The reality is that it was very strange. It fell flat, obviously, the cemetery walk. People kept saying it was AI. It was truly her. And this is a woman who came to Washington making her name with the Squealing Pigs commercial that was amazing, talking about cutting pork. And yet she's doubling down on cutting Medicaid that impacts 40% of young people, children in her district, in her state rather, and 50% of seniors. And so it was strange because if you listen to the rest of the town hall, she said perfectly clearly that she understands how important Medicaid is. She understands how important it is to her constituents. She could have just said that and said what Mike Johnson said, which is we're trying to cut people who are, you know, playing the system essentially. Now, I don't agree with Mike Johnson, nor do I give Joni Ernst tips, but I'm really thinking she needs to go back and listen to his Meet the Press interview because he explained it a lot better than she did. And he certainly didn't say, oh, don't worry, we're all going to die anyways.
Well, I also wonder how some of her colleagues received this or viewed this. Senators like Josh Hawley, for example, or Susan Collins, who have raised serious concerns about the cuts to Medicaid, suggesting they may want to see a different version through the Senate. Could this kind of episode give more ammunition to that argument?
I don't know. I mean, I think this is an issue that is not going to impact. It may impact her because we have to remember she's up in 2026, so she doesn't have that long to like lose this kind of statement. And obviously the Democrats are going to make tons of ads over it. But I don't know if it impacts the broader bill. I think there's so many things happening behind the scenes. We know that of just all the different levers to make sure that we at least don't lose any more than 3 votes. And I don't think this impacts it.
Well, we just spoke with a member of Republican House leadership, of course, on the program, Jeannie, and Congresswoman McClain was asking, hoping maybe that the Senate not make any big changes to this bill. But based on the conversations we heard on Sunday morning and, of course, throughout the week last week, that's just maybe not going to be the case when you talk to Ron Johnson, Rand Paul, Tom Tillis. I could keep going. The idea of a 4th of July deadline feels how to you right now? Is that even possible?
I wouldn't count it out, but the reality is, and this will get done, but most likely it gets done after that, probably August. It was fascinating to hear the representative, because the fact is the Senate is going to put their imprint on the bill. There is no way that the House gets to hope that they can hope, but they're going to get a reality of the Senate just rubber stamping what they've done. So that is just not going to happen. They will be battling about changes, but in the end, they've got to get something passed. There's just no way that the Senate can fight enough that they give the House something that it can't pass. So it will get done, but then they're going to have to live with the consequences. And that's what the Joni Ernst Town Hall experience shows. Those consequences are going to be dramatic on the deficit, on social safety nets, on spending cuts, on taxation. They are real, and Republicans will feel them in 2026 and then again in 2028.
When we consider the role Democrats play here, Jeannie, the Democratic leader in the Senate, Chuck Schumer, is vowing in a letter to colleagues to fight back with everything we've got. What do they really got when this is reconciliation and it's by design a party line issue?
They don't got much, Kaylee. That's the reality. They're in the minority. What they do have are gifts like Joni Ernst and others have given them throughout the process that they are going to tag into campaign commercials and take out. And those impacts are going to be real. When James Carville says Democrats really need to focus on 2026, 2028, that's what they got. They got a campaign to fight, because you can't do anything with Washington unless you control either the House, the Senate, or the White House, and they don't control either.
This is going to be in campaign ads either way, right?
Yeah, you mean Joni?
Yeah.
Oh, yeah, totally. I mean, for sure, for her,
they're already made.
100%. I mean, I don't know if it goes into others, because also 18 months for everybody else is a long time away, even though. But listen, I think the one I keep saying as well, just as Jeannie said, it's going to be really hard to get this done by the July 4th recess. But then I also said the exact same thing, that Speaker Johnson wasn't going to do it.
Yeah,
and everyone else was too, So I think there's a lot happening that we all don't know about behind the scenes. And again, as I said earlier, the senators right now are negotiating in public. They're negotiating with the press, I mean, to tell their sides of the stories. But so did the House, and then they all come together at the end.
Well, when we consider that Speaker Johnson was able to meet his own deadline, he needed the helping hand of the president, who was having meetings at the White House with some of the most difficult members. Is President Trump as influential for the Senate? Can he give that same helping hand to John Thune?
Oh, for some. I mean, I think that you have very serious members that have very serious concerns, like Senator Rick Scott, who's very well respected in some of the healthcare spaces and obviously fiscal spaces. Ron Johnson as well. I don't think he can move Rand Paul. I think Rand Paul, as long as a debt ceiling's attached, Rand Paul's out. So I think you lose one vote there. I don't know if he can help with Hawley or not, but I think he can help with Rick Scott and Ron Johnson just because of the close relationship they all have.
Fascinating. Well, I'm sure you're going to help us learn a lot over the coming days. It's great to have you with us as ever. Ashley Davis, Republican strategist, alongside Jeannie Sheehan Zaino, our Democratic analyst, Bloomberg Politics contributor. Many thanks to both of you for a great conversation and a great panel as we get back to the trade on Wall Street. Charlie Pellet standing by at World Headquarters in New York with the latest on the markets. Not the most inspired session here, Charlie, is it?
Indeed. We've got the S&P lower right now, down half a point, but do want to begin with a number of developing stories of breaking news right now. We've got Morgan Stanley kicking off a $5 billion debt sale for Elon Musk's XAI. Federal Reserve Bank of Chicago President Austin Goolsbee says rates can fall if trade policy is resolved. And learning about Disney's job cuts, it is firing hundreds in film and television as the industry's woes drag on. Right now, the S&P 500 index, little changed, has been meandering, swinging between gains and losses right now. Down half a point. Key takeaway, little changed on the S&P. The Dow down 173, dropped there of 0.4%. We got NASDAQ up 63. For the NASDAQ Composite Index up by about 0.3%. Your 10-year at 4.45%, the 2-year 3.93%. Gold up $84 the ounce, up 2.6%, while West Texas Intermediate crude is up 3.5%, $62.93 a barrel on WTI. Jamie Dimon says his retirement from the top post at J.P. Morgan Chase is still several years away, but that decision is up to the bank's directors. That word coming in an interview on Fox Business. And Mohammed Sabri Solomon has been charged with a hate crime in a criminal complaint dated June 1st in Colorado federal court. He faces as long as 10 years in prison, but additional charges could be filed in the case. Recapping, S&P now higher by a point, little change there. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Yes, they're in Washington today. Once again, your hosts, Joe Matthew and Kaylee Lyons. Great seeing you guys, by the way.
It was great to see you too, Charlie. We love being up in New York with you and everyone else on the team. We appreciate it. Charlie, obviously in New York watching Wall Street. We're in Washington watching, Washington. But we have our eyes on events elsewhere as well as we consider not just domestic politics, but geopolitics too, and ongoing hot conflicts around the world, including that, of course, between Russia and Ukraine. A second round of direct talks between Russia and Ukraine was held in Turkey today, yielding, perhaps not surprisingly, no agreement on any sort of ceasefire, though there will be another exchange of prisoners. But Ukraine came to those talks having just conducted a pretty bold aerial attack inside Russia, far inside Russia. We're talking hundreds and hundreds of miles from the front lines, thanks to, according to President Vladimir Zelensky, a more than year-and-a-half-long effort to get drones inside Russian territory, deep inside, so much so that they were within striking distance of some of the most powerful components of Russia's aerial fleet, those that have been used to conduct these missile and other strikes on Ukrainian targets, including civilian targets, though there is some dispute, Joe, as to the number of aircraft that were ultimately actually hit by this drone strike. It's still incredible to see and read about.
Well, yeah, you can't deny the video we're looking at here for our listeners on Bloomberg Radio. It's a shot from a drone showing these massive Russian bombers burning while they're still on the ground, having been attacked by these suicide drones. Really remarkable stuff then. These spies, to your point, they worked for months. Kaylee, Ukrainian spies got these quadcopter drones into Russian territory. There were more than 100 of them, and I guess they were obscured by these wooden containers that opened by remote control. Allowing these things to fly into the military bases. And it's worth noting, Ukraine did target military bases, not civilians, as Russia continues to do.
Yeah, which is a contrast that Zelensky is trying to note in this, is that they are trying to take out Russia's military capacity that's being used against Ukraine, obviously, but in kind of a different way, in that it is being used really with non-military targets in Ukraine and taking the lives of untold amounts of civilians.
What's being compared to or being referred to as Russia's Pearl Harbor. We saw comments in the tip sheets this morning as well, comparing it to Israel's walkie-talkie attack against Hezbollah in Lebanon. Kelly Grieco specializes in this type of thing. We wanted to have her frame it for us, the senior fellow with the Reimagining U.S. Grand Strategy Program at the Stimson Center. Kelly, it's great to have you back with us here on Bloomberg TV and radio. How would you describe this breakthrough by Ukraine?
Well, first, thank you for having me. And I would say, this attack clearly was timed for these negotiations in Istanbul. But I would say what's interesting about the attack to me is that it goes back to the very roots of air power in one way, and that there's always been an emphasis on attacking air bases, that aircraft are often the most vulnerable when they're on the ground. But it's a 21st century version of this by using these very cheap, inexpensive quadcopters that are carrying explosives to cause an enormous amount of damage.
Well, when we considered that enormous amount of damage, Kelly, knowing Russia says it's more like 10 aircraft that were affected, Ukraine said the number was roughly 40. Do we have a sense of what this actually does to Russia's capacity to conduct the strikes at the pace we've been seeing in Ukraine?
Yes, so I don't feel like we really have very good numbers right now in open source because we want to see these things verified. But what I would say is that this isn't necessarily going to restrict, I think in a very significant way, Russia's ability to conduct strikes on Ukraine. In fact, many of these aircraft, I suspect, were probably further back and are not being used in these kinds of operations, though they might be rotated forward at times to bases closer to Ukraine. But what is significant about it is that these are dual capable aircraft, meaning that they're also part of Russia's nuclear triad. because they can carry nuclear weapons as well. And so Russia is going to have to think carefully about to what degree it wants to place these assets at risk, including on the ground and retaliatory attacks from the Ukrainians, because it places at risk part of their nuclear triad. And that starts to get very serious for the Russians.
Well, you wonder what's next here, Kelly, with regard to a Russian retaliation against Ukraine. Surely this won't be in isolation, but also whatever Ukraine might have left up its sleeve. If Ukrainian spies smuggled 100 drones into Russia for this event, what else could they have?
Yes, I mean, that's a great question. It's interesting. This attack doesn't come out of nowhere in the sense that, people have talked about these kinds of attacks before, particularly about someone conducting something like this against the United States at air bases at home. But the Ukrainians are the first to do it. And they showed a level, I think, of sophistication and ability to operate inside Russia to be able to pull something like this off. They were even bragging on Twitter that one of the warehouses they used was near an FSB outpost in a town that they were right next to it. So it's quite interesting. And I think you're right. The Russians have to ask themselves what could be next. I'm asking myself, quite honestly, what's next in terms of the Russian response, because I think we're going to see a significant escalation on the part of the Russians.
Well, what would that escalation look like, Kelly? I mean, is there serious questions as to whether or not Russia would choose to use part of its nuclear arsenal? How can they escalate short of that, given everything they're already doing?
Yeah, so I think it's important to remember that back in November, Putin changed Russia's nuclear doctrine to clarify that it would consider it an attack on Russia that was a threat to its nuclear arsenal, whether a nuclear weapon was used against its nuclear arsenal or if it was a conventional weapon used that threatened its nuclear arsenal or its sovereignty, it would reserve the right to respond with a nuclear weapon. Now, I don't think Russia's going to use a nuclear asset in response to this, but I can't totally rule it out. I think it's worth saying, and that gives me pause that I'm even having to say that. I think they're going to look, though, for something that is very visible. And I think signaling not just to the Ukrainians, but I think at this point they're going to want to signal to the United States and even China, that its nuclear arsenal is not vulnerable, that it's able to still operate effectively. So not probably a cyber attack. It could be using a new kind of missile in Ukraine. But I think, I wouldn't rule out even a possibility of some kind of action perhaps in space. There's been stories about a new satellite, Cosmos, that is suspiciously operating near some U.S. satellites and concerns they might conduct an anti-satellite test in space. I could potentially see something like that happening as a response.
Kelly Grieco, you're an expert in asymmetric warfare. How does this change the United States approach to weapons systems after what we just saw?
Well, how it should change it and how it will are probably two different things, unfortunately.
Okay.
I think it's clear that, we have a preference for high-end systems that are expensive, that have a lot of capability. We see that with, the acquisition now of the F-47, this new fighter aircraft, or the B-21, things like that. But what Ukraine is, I think, trying to show us is that something that is lower cost is not necessarily ineffective. In fact, it can have disproportionate effects. And so what I think is concerning is that we keep seeing all these messages from Ukraine warning us that these lower cost, creative ways of using capabilities can be quite effective, but we're not as much investing in that area in our own defense budget to try to actually maximize our advantage.
All right, Kelly, it's great to have you as always. We appreciate your insight and expertise. Kelly Grieco, Senior Fellow with the Reimagining U.S. Grand Strategy Program at the Stimson Center. We appreciate it. Here with us on Balance of Power. And we have to focus on another subject coming up as well. That would be trade. As President Trump on Friday, of course, announced the escalation of steel tariffs from 25% to 50%, but also after having accused China of violating the trade pact that was struck in Geneva, China is now saying back at you, United States of America.
It just speaks to the kind of weekend we had. That we haven't mentioned tariffs yet. That's how we ended last week with this announcement outside of Pittsburgh from President Trump. 25 goes to 50. An interesting conversation ahead. We're going to spend time with the finance minister of Ontario, Canada. They've got their own version of this, and that is a big deal for the Canadian economy.
Indeed. So stick with us for that conversation. We'll be right back here on Balance of Power, live from Washington, D.C. on Bloomberg TV and radio.
echo of the earth. Terre d'Hermès, new eau de parfum intense.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but rhyme, Dumpty fell down. The kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
What if all I do for my type 2 diabetes isn't enough? Or what if
once weekly Mounjaro could help? Mounjaro helps your body regulate blood sugar and can help you eat less food. Plus, 3 out of 4 people reached an A1C of less than 7%. And people lost up to 25 pounds. Don't take Mounjaro if you're allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Stop and call your doctor right away if you have an allergic reaction, a lump or swelling in your neck, severe stomach pain, or vision changes. Serious side effects may include inflamed pancreas and gallbladder problems. Taking Mounjaro with sulfonylurea or insulin may cause low blood sugar. Tell your doctor if you're nursing, pregnant, plan to be, or taking birth control pills, and before scheduled procedures with anesthesia. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and may worsen kidney problems.
I can do diabetes differently with Mounjaro.
Pay as little as $25 per month. Ask your doctor about Mounjaro.
Oh, and I need these items printed with our logo by Friday.
Certainly.
Are you for imprint certain?
Well, we are for imprint.
Certainty matters, like the certainty of finding the perfect promo gear for gifting at 4imprint. Exclusive items and quality brands to wow your clients, your customers, and your team. Delivered on time. Go to 4imprint.com and find some wow now.
4imprint for certain.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me. LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
911 state emergency. Yes, somebody killed 2 girls. My grandbaby and my friend. Dad? We're dead. Please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear?
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are churning on trade risks. The latest twists in President Trump's tariff agenda have fueled market angst following mutual accusations between Washington and Beijing of breaching a trade deal. Also, American factory activity has contracted. Here's where we stand. S&P 500 index down now, little change, perhaps the key takeaway, but down 1 point at 5910. We've got the Dow down 186, a drop there of 0.4%. The NASDAQ Composite Index up 58 now. That is a gain of 0.3%. The 10-year at 4.46% with the 2-year 3.94%. Spot gold up $84 the ounce, higher now by 2.6%. West Texas Intermediate crude oil up 3.4%, 62.84 a barrel. And Bitcoin now down 0.7%, 104,270 on Bitcoin. Right now, we have got shares of the Walt Disney Company trading lower by 0.6%. Disney is firing hundreds of people in its film and TV areas as the industry woes drag on. Again, Disney shares trading lower by 0.6%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, great to see you. Live from New York, Charlie Pellet here on the fastest show in politics. Thank you for joining us on Balance of Power, the early edition on Bloomberg TV and radio, with headlines crossing the terminal as the press secretary speaks to reporters at the White House with regard to a potential meeting between President Trump and President Xi. This week, it does seem this will happen. Caroline Leavitt, the secretary, saying that the meeting will likely take place this week. And Kaylee, this comes after Scott Bessent was asked about it on Sunday morning television, saying he expects it to happen. We're just not hearing that from Beijing.
Yeah, mostly this is coming from the White House. Not the first time we've seen mixed messaging from the U.S. and China when it comes to progress on trade. But of course, it does come as both sides accuse each other of having violated the agreement that was struck in Geneva to ratchet tensions down. Seems tensions might be ratcheting back up again, as President Trump obviously is still pursuing tariffs in certain areas, including, of course, a doubling of the tariff on steel and aluminum that he announced on Friday while at a U.S. steel facility in West Mifflin, Pennsylvania. Let's listen.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that.
But let's talk about the economic impact that could ultimately have and turn to Michael McKee, Bloomberg International Economics and Policy correspondent, here with us on Balance of Power. Mike, when we consider for an American manufacturer dealing with these components and potentially with higher input costs, what is the difference between a 25% tariff they were already dealing with and it doubling to 50%?
Well, it's sort of like, what's the difference between being electrocuted or run over by a car? Either way, the companies are going to be in big trouble. And the only people who will benefit are perhaps the people at the U.S. steel companies who can raise prices, and it will probably be help them strengthen their business somewhat. But the problem with these sorts of things is that the downstream industries that use the products that are being protected end up having job losses and losing money. I was just out in the Permian Basin in Texas and talking to a number of oil industry executives who are bemoaning the cost of oil, but also saying that they're not drilling now because the steel tariffs have raised the cost of the pipe that they absolutely have to do that so much that they're losing money.
Wow, fascinating. A real-world example. Mike, it's great to have you with us. We did get some data today. The manufacturing activity is measured on the ISM, contracting for a third month, but look at the import measure dropping to the lowest in 16 years. It's finally creeping into the hard data?
Well, it's finally creeping into the hard data now. Statistically, you have to take a step back and note that we had a lot of pull forward imports in January, February, March. So by the time you get to May, just statistically, you're going to drop off a lot. We saw that in the trade figures that we got last week. But it is a sign that companies have basically stopped buying stuff overseas right now, which we've been hearing from the folks at the Port of Los Angeles and the Port of Long Beach, et cetera. And that was the open question is whether that picked up a little bit when the president backed off of his China threats. Does not appear to have. The chaos seems to be just keeping people sidelined no matter what. And it does suggest we will start to see some empty shelves, and then we'll start to see prices go up as well.
Yeah, wow. Mike, it's great to have you back. Michael McKee, Bloomberg International Economics and Policy Correspondent, live from New York, as we add the voice of the Finance Minister of Ontario. We're going to really get to the fallout here from this tariff program with somebody who knows about this intimately. Peter, Bethan Foley is with us again, live from World Headquarters in New York. Minister, it's great to have you here on Bloomberg TV and radio. We appreciate your time here, knowing that President Trump had threatened a 50% tariff on steel at one point and backed off that threat back in March, which then caused Ontario to pull back from a threat to potentially cut off electricity from a couple of northern states. What will be Ontario's answer now?
Well, thanks for having me on, Joe. It's great to be here in New York. Look, zero tariffs or no tariffs is the objective of Canada in negotiations with the U.S. Of course, we do produce a lot of steel in Ontario for the U.S. market. You just heard that's a big input cost, not just in the energy sector, but the defense sector, the auto sector. We also produce a lot of nickel that goes into those same areas. Obviously, right across the country, aluminum, potash, uranium, you name it. So our goal, working with the United States, is to get those tariffs down to zero. And when we work together, it's a win-win, and we can boost our economies. I think sometimes the targets are maybe China and some other places, not your best friend and ally, Canada.
Well, and clearly Canada is working with the U.S. to try to ratchet these down. In the interim, though, Minister, what economic impact are you expecting for Ontario, given you just pointed out your steel production? And we know the vast majority of the steel that is exported is heading toward the United States.
Well, there's no question, Kaylee, it'll have an economic impact. I just tabled a budget a couple of weeks ago that showed a slowdown in the economy, somewhat driven by tariffs and the global economy. It's affecting many economies around the world. At that same budget, I tabled $30 billion of supports. We're going to support those businesses and those workers affected by any sort of tariffs on steel, aluminum, or on our auto sector, hand in hand with the federal government in Ottawa, who's working closely with us to not only negotiate the tariffs, to get them back down to zero or as close to zero as possible, but also to provide the supports in the interim as we negotiate these deals.
Well, of course, the door swings both ways, Minister, and pretty remarkable to read that custom import duties in Canada rose 39% in the last quarter due to proceeds from retaliatory tariffs that are now rolling in to your coffers. So is this tariff thing actually working out pretty well?
No, it's a lose-lose. Look, we don't want to do retaliatory tariffs. No one wins, as you heard previously and others say. Costs go up, prices go up. It's not good for workers in the U.S. It's not good for workers in Canada. So the best deal is where we work together to land not only lower tariffs so we can trade. We have a great relationship with the U.S. We love Americans. And so, but we're win when we're stronger together, and that's not just in the areas I mentioned, but in areas like energy or right across the country. It could be in areas of manufacturing. It could be areas of critical minerals, of which we have a lot that come out otherwise from China and other places in the world. So these are the types of things we want to work on with our United States friends and have deals that are long term.
Minister, you mentioned a minute ago the budget that you put out. When we consider your budget deficit, which I believe is the largest in more than a decade, how much wiggle room does that give you to provide financial assistance to the steel industry or any other segment of the Ontario economy that is negatively affected by these tariffs? How much runway ability do you have to do that sustainably?
We have a lot of runway. We just got upgraded by Standard & Poor's. We got upgraded by DBRS. We're unstable with Moody's. So we're doing okay on the fiscal side. I mean, a $10 billion increase in our deficit against a $1.2 trillion economy, we can absorb that quite handily. We have a path to balance, so we're one of the few jurisdictions that are balancing their books within 2 years. So I think we've got the fiscal firepower, but you know, at the end of the day, we don't want these tariffs. We want to have a win-win with the United States, and where workers win on both sides of the border, and that we continue to have the great relationship that we historically have had with the United States.
Minister Bethlen Fahey, our viewers and listeners should know that you are a businessman and, in fact, know a lot about the markets. As a chief investment officer for CST Consultants, you spent time at Manulife Financial and at TD Securities. And I'm wondering what your view of the market reaction to all of this is at the moment. We've clawed our way back to essentially where we were before the so-called Liberation Day. Is the market whistling past the graveyard? How do you see it?
Well, first off, you're right. I worked here in New York for 15 years and spent a lot of time in the U.S. My wife is American, so I know a few things about the United States. Look, I think that we're not whistling Dixie. This is serious stuff, but we have a lot more strengths together than we do apart. One of the things that we're doing in Canada, I should point out, is we have free trade agreements with the G7, just every country in the G7, but we don't have complete free trade in Canada. So we're working on, this is giving us an opportunity to kind of, a little bit of a wake-up call to say, hey, we got to have free trade in Canada. That could unleash up to $200 billion of economic strength in the GDP. So we think that we have a lot of opportunities. The capital markets are very strong for Canada, for our province, for our bonds and so forth. So we're in a good position, but we're very much looking not just the short term, Joe, but also the long term, because I like to think about the long term and what we can do better together.
Well, as you discuss the long term and the other trade agreements that you have with partners, say, in the G7 or elsewhere, is it time for Ontario, for Canada, to look at other trading relationships and maybe orient themselves more toward that, diversifying away from the U.S. and reliance on this market in particular?
Well, we're doing that, Kaylee, for sure, but that's just prudent business. You always diversify your relationships and your customers, but by force of nature and geography, we are going to be very close allies and economic partners with the United States. I think renegotiating the trade agreement longer term, which is coming up next year, is going to be critically important. And again, we have all the critical minerals that the U.S. needs for their auto sector, the defense sector, for the energy sector, and we are a reliable partner in Ontario and in Canada. So we want to work together, strike long-term deals that are in the interests of both countries. I know that we've done it before and we'll do it again, and I think that's everybody wants the economic strength of both countries because around the world in this sea of instability, Canada and the U.S. are a sea of stability.
Mm-hmm. We hear a lot on this program from a lot of Republican strategists and analysts. Pay no attention. This is a negotiating tactic. The president doesn't actually want to have tariffs. And months down the road, Minister, we won't have any. From your perch on the other side of the border here, from Ontario, does that ring true? Or are you proving that wrong?
No, I think that, Trump is a business person, pragmatist. So we're pragmatists, and we want what's best for the interests of each of our countries, our workers. This environment of uncertainty is not good for either side of the border. Business and capital is looking for certainty. They're looking for places to invest, and I can think of no better place to invest, frankly, in the world than right here in North America, in Canada and U.S. And we've had a track record of being some of the best economic engines around the world right here. So I see the glass as half full, and we're business people and pragmatists, as you mentioned before, and I think we really do have an opportunity to work out deals that are going to be a win-win for both sides.
Minister, we just have a minute left, but with pragmatism in mind, is there anything you would take off the table in terms of ways in which Ontario would be willing to retaliate against any further escalation from the United States?
Well, no. First of all, I'm not at the front and center. That's the federal government in Ottawa that is responsible for that. Now, we're in constant contact with them. But I will say this. You now have, both provincially and federally, two governments. We were re-elected with a majority in February. The Federal Liberals Party was elected just recently in April, and on a pro-economic agenda, a pro-growth, to build the big projects, the Ring of Fire in Northern Ontario, pipelines, more pipelines, east, west, north, and south. We want to move our conventional and our non-conventional forms of energy. We want to get those critical minerals out of the ground. We want to build infrastructure and transportation. So when you have a federal government and a provincial government rowing in the same direction, you have a better shot of hitting that target.
All right, Minister, great to have you here on Balance of Power. Peter Bethlenfalvy, Finance Minister of Ontario, Canada, here with us on the earlier edition. We'll see you again at 5 p.m. Eastern right here on Bloomberg TV and radio.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Oh, and I need these items printed with our logo by Friday.
Certainly.
Are you for imprint certain?
Well, we are for imprint.
Certainty matters, like the certainty of finding the perfect promo gear for gifting at 4imprint. Exclusive items and quality brands to wow your clients, your customers, and your team. Delivered on time. Go to 4imprint.com and find some wow now.
4imprint for certain.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me. LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Is there anything better than settling in to watch our favorite shows?
Want to know what you're playing for? I love when Jeff says one of his catchphrases.
Well, come on in. I'm Madeline Matlock. And spend time with the CBS stories we love.
You're my Sherlock now.
Very good at what I do.
Go, go, go!
Full seasons are all available on Paramount Plus.
I like it.
Yes! So get comfy. We're here for you.
I could use an ally, someone I can really trust. You can trust me.
CBS Originals now streaming on Paramount Plus.
Speed Sport 1 is your home for live racing on Pluto TV.
We got him smacked up fresh!
Speed Sport 1 on Pluto TV, your destination for the best racing action from the U.S. and around the globe.
FBI! There's a storm coming. You're about to be swept away.
That's enough!
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a good afternoon, everyone. Happy Monday, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We are across all platforms. It is Bloomberg Business Week Daily. Carol Massar is off today. I'm Tim Stenivek, along with Bloomberg News cross-asset reporter Emily Graffeo. And Emily, stocks kind of wavering. Is everyone just waiting for what happens on Friday with payrolls?
Or everyone's paying attention to the bond market right now. Yields a lot higher, Tim, and on the 30-year bond, we're almost at 5% right now.
Yeah, well, it's going to be the top of our show. We've got a great roundtable coming up in just a minute, not just on the bond market, but also the economic data that these big investment firms are looking to that's keeping them away from the bond market. Also, on geopolitics, Russia and Ukraine are talking, but aren't any closer to ending the war. Angela Stent is going to join us in just a few minutes.
And on media, we're joined by the president and CEO of Starz.
All right, we got a great program coming up over the next hour right here on Bloomberg Business Week Daily. Charlie Pellet is getting us started with the Business Flash. Hey there, Charlie.
Thank you very much indeed. First trading day of the new month of June. What a May it was, by the way. The Dow, the S&P, they're both lower right now. Little change, perhaps the key takeaway on the S&P 500 index, down 1 point now. NASDAQ higher by 54, gain there of 0.3%. The Dow down 167, a drop there of 0.4%. 10-year at 4.46%. The 2 years currently yielding 3.94%. Gold is surging, $84 the ounce, up 2.5%. Spot gold, $33.73. And West Texas Intermediate crude up 3.5%, $62.95 a barrel. The Walt Disney Company is laying off several hundred employees across its film and TV businesses. Cuts that underscore the tough times in Hollywood are far from over. Walt Disney shares, they're down now by 0.7%. Tesla's new vehicle registrations fell further in France, undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. Tesla down now by 2.2%. Again, recapping, S&P 500 index, little change right now, down by 1 point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As Emily said, I'll focus on the bond market today, and that's exactly where we are starting. Yields higher across the curve. The yield on the 30-year inching ever closer to that 5%. Our Markets Live blog notes it's a rate that has usually brought in the dip buyers. That said, the most read story on the Bloomberg terminal today has to do with a buyer's strike and how it's rocking U.S. long bonds. We're talking about a wave of investment firms that are steering away from the longest dated U.S. government bonds in favor of shorter maturities that carry less interest rate risk but still offer a decent yield. Their concern? America's swelling federal budget gap and growing debt burden. For more on the economy and the way bond investors are changing their behavior, we bring in Michael McKee, international economics and policy correspondent for Bloomberg TV and radio. Liz Kaplan-McCormick, Bloomberg News chief correspondent for global macro markets, also here in the Bloomberg Business Week studio. Liz, I want to start with you and just give us an update on exactly what's happening at the long end, who's avoiding it, and why they're avoiding it.
Yeah, so Mike McKenzie, my colleague, who sits right next to me, and Yishi did that great story today. And just, you know, we've been talking about this for a while, but they're highlighting folks like DoubleLine and PIMCO who are saying, why should we buy the 30-year? We don't want it, right? So, you know, they nicely worded it like a buyer's strike. Everyone's not like selling a ton, but they're saying, why should I buy that? Because if I want treasuries, I can get a fairly good yield. Just go to, say, a 5-year maturity or a 7-year maturity. So, you know, the fiscal risk, which I was saying to someone earlier, like, we've had a deficit in debt for a while. You and I have probably talked about it. But why do we care now? Well, because it's just increasingly got worse. We have this bill going through Congress that if all these different scorings, if you look at it, you're adding several trillions to the deficit, to the debt pile over the next 10 years. It doesn't seem like anything's going to change that trajectory. Meanwhile, over here, we have inflation that's coming down from the worst. But the Fed's like still in wait and see because we don't know what tariffs do. So the Fed's not cutting again for a while. They seem to be saying. So that is just a recipe for there's not a lot of reasons for long-term rates to start coming down. So, and even at the least, like there's people like Ira Jersey saying, hey, we could even have the curve steepen, which means short rates are lower than long, more so, even if rates come down, right? Because people, again, stay away from the long end. So I just think there's just so many reasons that you say, you know, why do I want to go ultra long, 30 years in the U.S., longer term debt, even in Japan, right?
Let's bring in Mike here. What are the economic implications of this buyer's strike, of investors avoiding buying up those longer dated bonds? How does the U.S. Treasury react to something like this?
Well, they're not going to be happy about it because obviously it's going to raise the cost of selling debt, and they've got to sell a lot of debt. So it will have implications for them in terms of what maturities they're going to sell. They've wanted to go back towards the shorter end, and this may push them in that direction, but that then what price are people going to have to pay for that? And then you go beyond just the debt implications of it and to the implications for the economy. Obviously, interest rates go up. We've got mortgage rates over 7% again now. So you're looking at real weight on some of the important areas of the economy. It's all just of a piece with everything that is going on these days economically, all the threats out of Washington of one sort or another.
It also brings up the issue, Mike, about how the Fed looks at this part of the market. You know, they've got this dual mandate, stable prices, maximum employment, a meeting coming up just in a couple of weeks here. How do they watch what happens in the bond market?
They use their Bloombergs.
It's a good answer.
Shameless plug there, right? Well, they do, actually. But no, I mean, they're looking at what's going on, and basically, you talk to any of them, they say what we're concerned about is that you can trade, not what you trade for, not what the prices are. So they're not particularly worried about that in terms of what their mandate is and what they're going to do, unless something freezes up in the market again, as we've seen a couple times in recent decades. But they're basically kind of off the grid at the moment. There isn't much for them to do. They're going to be sitting watching they're not even really watching the data at this point so much as putting their emphasis on talking to CEOs around their districts because nobody knows what's going on. And so they're trying to pick up some sort of hint to what the companies are going to start doing and when they're going to start doing it. And so far, they haven't found one.
Liz, I'm wondering what the implications for portfolios are, because you had written, I guess it was last week at this point, about 60-40 under pressure. And we're talking today with the 30-year almost at, we're like 1 basis point, even less than that, away from 5%. Are bonds not a safe haven asset anymore? How much has this recent talk of, you know, the deficit really impacted how people think about bonds in a portfolio?
Yeah, I'm smiling because that story started with, we were like, yeah, 60-40 is working pretty good. And then by the end of the period, long bond yields going up so much, it kind of like, not so much. And I think, you know, that I want to say you start having a flashback to 2022. Remember when people, like my brother would call me, like, what happened? Stocks went down and my bond portfolio went down.
Yeah, people who don't typically pay attention to this stuff except when they open their investment accounts and they're like, wait a second, this isn't acting the way it's supposed to act.
Exactly. So, you know, all joking aside, the 60-40 didn't do that well. You know, obviously stocks are having a little bit hard time, but all this concern that, you know, is finally filtering through to just kind of a persistent rise in yields is making those returns not good and losses. And, you know, bond portfolio managers, and I'm not being snarky at them, will say, hey, we have a good coupon, meaning the interest rates are higher, so we're getting interest, we should do okay. They'll probably do okay, but okay is not that great for 60-40, right?
Yeah, but I mean, look, on just the bond side of this, Liz, you know, you could, I think there are those out there who would say, wait a second, 5%, somewhat pretty much risk-free, with a 30-year promise of that annually, that doesn't sound bad right now. And it's to the point of the Markets Live blog where they're saying, usually when we see rates go here, we could see dip buyers come in. So yes, there are the big investment firms that aren't necessarily biting at this point. And in fact, as the story points out, sometimes they're shorting in certain scenarios. Mm-hmm. But then you have another group of investors that could come in and say, wait a second, this looks pretty good for me.
Well, and that has historically happened, right? Not that we haven't in the lifetime of bonds seen rates much, much higher than this, but in this last couple of years, we have tended to see, remember for a while we were talking about, people were saying 10-year could go to 6%. This was 2023 rates were breaking higher, and then some changes happened and they came down. So there is demand. I always remind people, though, that kind of risk, kind of free, Tim, you're saying on the 30-year, not bad, but remember, that's if you buy a 30-year bond itself and hold it to maturity. Mm-hmm. In a bond fund, they're buying mixes of funds, prices go up and down, so that isn't like a guarantee unless you outright buy a bond and hold it for the whole time, which you and I probably aren't going to do for a 30-year bond. So that's why there's more risk in a bond fund, because they're having to roll over, people taking redemptions at different times, so you might see the price of your fund come down. But yeah, there's always people saying, hey, you know, this is a great opportunity. Right now we're just hovering around a little bit below 105, right?
Mike, essentially the message that they're sending is there's a swelling federal budget gap, growing debt burden. We've got a bill making its way through the Senate right now. No one knows what's going to be taken out of this bill or if it is indeed going to become law. The president calls it the big, beautiful tax bill. What are your sources telling you about what the implications that it could have on the economy? The president says, hey, this is something that could actually stimulate the economy. He says it will stimulate the economy. But there's some questions about that, and we're seeing that happen in the bond market.
There are a couple different angles to this. The child care tax credit, the child credit, and the no tax on tips and the no tax on overtime would be stimulative to a certain extent. Now, the people who are getting that extra money, not the child care, but the other two tax breaks, they don't make a lot, so they're not, the extra that they will have to spend isn't going to be huge. The child care tax credit will help. These would kick in 2026, and so you get a bit of a tailwind there, but then all the budget cuts will take away from stimulus. Government spending will go down. You'll have people who are having to spend more because they fall off of the Medicaid rolls, that sort of thing. And then the real issue for everybody is what happens with taxes overall and the budget deficit overall. The fact that the deficit goes up significantly, and the White House isn't fooling anybody in the bond market about this. That could only contribute probably to higher rates. How much, we don't know, but it's not something that people are going to be enthusiastic about. So then you end up with two countervailing forces, a little bit of stimulus and what may be a little bit or more of counterweight to that.
Gonna have to leave it there, guys. Thank you so much for joining us. Michael McKee, International Economics and Policy Correspondent. Also, Liz Kaplan-McCormick, Bloomberg News Chief Correspondent for Global Macro Markets. Mike, you're actually not getting out of here. When I say you are, we're going to keep you for one more question while we get Alex settled in here.
Okay.
Payrolls on Friday. I promised we'd talk about this. This is kind of the thing that everybody's waiting for right now. It's actually looking like it could be a pretty strong report.
It's going to be kind of looked at in terms of compared to what. 130,000 would be a strong enough report for the Fed in normal times because it's more than the replacement level that you need each month. And the fact that economists are predicting no change in unemployment at 4.2% is good news. It shows that the labor market remains healthy. But compared to where we had been on job creation, it's going to look a lot lower. And then the other issue that you have is this sort of the end of the good news? Is this the last good news we're going to have? You look at the ISM numbers that came in today, and they flipped over all bad, throughout the entire report. And that's what people are waiting for is when does the bad news from all this chaos hit?
All right, well, you'll be watching all the bad news and the good news and all the news and bringing it to us.
If I find any good news, I'll bring it right to you.
Please bring it to us. Michael McKee, International Economics and Policy Correspondent here at Bloomberg TV and Radio. Well, we're talking the bond market, but also we're talking oil because it's actually rallying today. WTI higher by as much as 5% earlier in the session. This after OPEC Plus increased production less than some had feared and geopolitical concerns flared in Ukraine and Iran. I want to bring in Alex Steele. She's the host of Bloomberg Intelligence on Bloomberg Radio and also of The Close on Bloomberg TV. She joins us here in the Bloomberg Business Week studio. The OPEC Plus news, I guess it could have been worse?
Yeah, kind of. But honestly, it's going to be a lot of short covering now. So you're going to short oil into the OPEC Plus meeting, and then after you're going to have a rally. Plus you have the wildfires in Canada, and Canada's the fourth largest producer. But we kind of knew that on Friday, and oil didn't really react. So you have to think it's just a positioning situation at this point. But honestly, the oil market is messy right now.
That's
confusing
why
and messy.
The OPEC Plus news was an excuse to get you in here. We wanted you to come in here for like the last couple of months. Up to now, oil, whether you're talking about Brent or WTI, is down about more than 10% year to date. It's been a mess. There are concerns that it's getting to a price where it's not even worthwhile for some drillers to actually extract the oil. What's going on?
Oh, such a loaded question. So one, of course, is the demand concerns, where you have tariff issues and any demand concerns. That's number one, right? Number two, clearly President Trump wants lower oil prices, and the Saudis have been more than happy to somehow also continue to pump oil. I don't know if there's a relationship there, but I'm just saying. The third one is if you look at the curve, so if you look at CCRV, which is the function on the terminal, right? So you see higher prices today versus higher prices in a year from now, okay? That's usually a signal to producers like, let's go. Like, there is tight supply. We need to pump more. There's a lot of demand. But it drops off real fast, and then it gets more confusing. And so oil producers kind of just don't know what the price is going to be like in, say, 2 to 3 years, and that's where it gets really confusing. Pump more now, but then wait a second. Oil prices in 3 years don't look so great, so what am I supposed to do with that? And it's becoming extraordinarily confusing, particularly if you're in the Permian, which is shorter cycle. So offshore stuff takes like decades to get going. Onshore in the U.S., it takes like 12 to 18 months, depending on where you are. So that's where you're going to see the pain first, and then you won't see any kind of pain reflected in investment decisions until like 3 years from now, kind of thing.
So how are we supposed to be kind of judging the effectiveness of the drill, baby, drill, I guess, proposal?
It's not happening, like full stop. I mean, you look at CapEx is down for all the oil producers, but production is barely flat. Like, it's down a touch because there's so many technological advancements, and these guys are just really good at getting oil out of the ground. Like, straight up. So even though they're lowering CapEx, their production's the same. Like, most companies don't operate like that. But you cannot incentivize oil producers to drill. To incentivize new production, you need like in the 70s. We're not even close to that.
Yeah, I was going to say you can incentivize them with higher prices.
That's literally the only way.
What's the magic number, 70s?
From what we hear, so in the 70s, 70, 75, I think 80 would be a happy moment for them also. 60s, it gets a little bit, I don't really want to drill more, but I'm not going to shut in. 50s are like, I don't know. And then 40s is like, all right, let's go. Let's shut in rigs. Let's shut stuff down. Let's rethink contracts.
Does the U.S. produce at current levels enough to satisfy demand for all Americans?
Oh, that's a great question. I don't actually know the information
because
right off the top of my head.
We still have to bring in oil because the type of oil that we produce isn't necessarily what we...
Exactly. Yeah. Number one. Number two, we produce like 13 million barrels of oil a day. I have no idea how much we actually consume. But to your point, refiners in the U.S., few and far between. We have 10 closures over the last 10 years.
That's the issue.
A lot of them are complex. Some are simple, and they can process the light crude that we have here in the U.S. A lot of them are complex, which means they take heavy, nasty, dirty fuel, and they turn it into a ton of things. Jet fuel, propane, gasoline, diesel, like you name it, they produce it. It's really hard. It's really complex. It's very expensive. And they need crude from different areas. They can't just do U.S. crude.
But just very quickly, you mentioned that number 70. Do we have to see the price of oil sustain that level for a period of time to incentivize the producers?
I think it depends on the curve. So it depends who you're talking about too. So for the shale drillers, like 70 feels pretty good. It's not going to drop $30 in 2 seconds, so they're going to feel better. But for the offshore and longer term projects, you need the curve to stay steady in a better range than that. Yeah, if that makes sense. Did you get what you wanted, Tim? Did you need more? He needs more. We need more time.
I was going to say we wanted like 5 or 10 more minutes with you, but you can always come back.
So. Oh my God, 15 minutes of oil talk? Dude, if you're up for it, I'm here.
That is how we would roll with Alex Steele. Alex Steele of Bloomberg TV and Radio. She has got to run to the close. Coming up next, a deep dive on media. And yeah, we got another member of the close joining us in just a few minutes as well. That's next on Bloomberg Business Week Daily.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Why won't you let me see it?
Because it's not done yet.
All right. I can't sit still. What do you like about my face, Tom?
You got lines.
Could you take the lines out? That would be good. How's your retirement going?
I love it.
So you're confident with your coverage?
Totally confident. Position's mutual. They're just so easy to talk to. They're great.
Oh, come on. Are you done? Hey, that's pretty good. I'm going to draw you.
Whoa, you really nailed it, Picasso.
Physicians Mutual, Physicians Mutual.
I'm certain it's level 5.
Are you for imprint certain?
I'm certain it's level 5.
Certainty matters, like the certainty of 4imprint. Your home for high-quality promotional gear, including exclusive items and brands they love. Printed perfectly and guaranteed to arrive on time. To wow your clients, nail your next event, or inspire your team, check out 4imprint.com.
4imprint, for certain.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Time to save the universe again, then, is it?
Absolutely. This is where I start to have fun. This is going to find Pandora's box.
It's your destiny to see what's inside.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index now trading at the best level of the day. 10-point gain right there, up by about 0.2%. Dow Industrials, though, remaining in the red. Dow lower by 68, drop now of 0.2%. NASDAQ Composite Index up 96. That is a gain of 0.5%. Our Mag 7 Index, the Bloomberg Mag 7 Index, up 0.4%, with a 10-year currently yielding 4.46%. The 2-year 3.94. Spot gold up $83 the ounce, up 2.5%, $33.72 right now on spot gold. West Texas Intermediate crude up 2.7%, WTI 62.42 a barrel. Media news: the Walt Disney Company is laying off several hundred employees across its film and TV businesses. Cuts that underscore the tough times in Hollywood are far from over. Right now, we got Disney down by 0.3%. And Jamie Dimon says his retirement from the top post at J.P. Morgan Chase is, quote, several years away, but the decision is up to the bank's directors. That word coming in an interview with Fox Business. Again, recapping, S&P 500 index up 15. That's a gain of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Shares of Stars soared 27% on a Friday. This after the company set it at 530,000 streaming subscribers in the U.S. during the fiscal fourth quarter. The company is now a standalone entity. It separated from Lionsgate Studios. It began trading independently last month. It's got a market cap now just north of $300 million. Today, it gives back some of those gains from Friday. Shares falling as much as 14%, down 9.4% as we speak. We're joined here in the Bloomberg Business Week studio by Jeffrey Hirsch. He's president and CEO of Stars. Jeffrey, good to see you. Welcome. Investors welcomed the streaming additions in the fourth quarter. You increased total subscribers in the U.S. by close to 2%. You attributed that to the premiere of the fourth season of Raising Kanan. What's in the product pipeline right now, the content pipeline, that will continue with the growth?
Well, thanks for having me. It's good to be here this afternoon.
We have a great slate in 25. You know, we're coming off a strike-affected year where we only had 3 big tentpole shows. And so that created a little kind of gaps in our content. And so what you see as we roll into 25 is we've got 5 big shows coming. We have BMF, which premieres this weekend, which is a 50 Cent show, one of our biggest shows. So we're excited about that premiere this weekend. We roll that into Outlander prequel called Blood of My Blood, which I think the fans will really like.
This is why Carol's going to be so mad she's not here today. She's like the biggest Outlander fan around. Yeah, that's okay.
We'll
tell her. We'll tell her.
The prequel's, you know, it's 20 years prior to the first season of Outlander. It's back in Scotland. It's Clanlorne. It's 2 romance stories. So it's how each of the leads of Outlander's parents met and fell in love. So one of the stories is a Romeo and Juliet story, rival clans, forbidden love. The other is World War I, you know, with a gentleman on the front and a woman reading the letters. And it's a phenomenal tale. There aren't any books. And so the fan base, it's all new to them. And so I think it's going to be a really great show. We come back with a fan favorite from 12 years ago called Spartacus. Which is going to be, you know, I was talking to the producer on the way down here. He's like, is it coming back? I'm like, this fall. And so that's going to be, and Stephen DeKnight's doing that. It's going to be as good as, if not better than the original. We come back with Force, which is one of our Power spinoffs, and then back into Kanan. So real strong year of content. We wrap that with, you know, big movies from Lionsgate like Ballerina, and then Universal has a couple movies coming, Oppenheimer. So it's really great portfolio of content coming this year. We're pretty excited.
Talk about your target demographic here, because it's not every single person that wants to watch TV, right?
Yeah, we're really trying to be complementary to all the broad-based streamers. In 2016, when we launched our app, what we saw from the data, and it was the first time we really got data on our subscribers, it was that women was driving our business. And so we leaned in significantly into that. And so our content is really only focused on women and underrepresented audiences, and not only on screen, but in the director's chair, in the writer's room, all the way through the office. 70% of my direct reports are women and 80% of them are women of color. And so it's really a network for buying about women and underrepresented audiences, run by women and underrepresented audiences.
Do you see yourself trying to broaden out the content to bring in more people? Or make it a bigger tent, or is this the niche you want to focus on? And look, it's not. I'm not saying it's a niche. It's a huge target market. But like Emily said, the other streamers want to have everything.
Yeah, look, they want to be all things to everybody, and they're competing with themselves. And we really are focused on, like I said, women and underrepresented audience. We think the TAM in the U.S. is about 80 million households. Okay. We're sitting at 20 million households today, so we think there's a lot of room to go. And if women is a niche, which are 49.6% of the planet small, then I'm happy to have everybody else focus everywhere else and let us do what we're doing. So we'll continue to be complementary. We'll continue to really be the destination of R-rated adult scripted content for women, and so we feel good about that.
So you don't have ads right now on the streaming platform. How do you grow revenue then if you don't have ads?
So I think there's really 3 ways we can grow revenue, and we think we'll grow revenue 1 to 3% in the next short-term period. One is subscriber growth. Like I said, we've got a lot of TAM still out there today. You saw that in the first quarter, we grew the base 1.8% in the U.S., and so we think there's a lot of opportunity. And as these broad-based streamers continue to compete, it'll look a lot like the old world where you have stars sold as an add-on or buy this service and get stars included. So we think there's a real opportunity for us to kind of replicate that unique position we had in the traditional world in the new digital world that we are today.
So you're saying look out for bundles?
Look out for bundles.
Do you have any now?
We are the most bundled service in the space today. We have 5 bundles. We are about to launch another one this week. In the first quarter, we had a BET Stars bundle on Amazon. We had an HBO Max Stars bundle on Amazon. We've actually bundled BritBox into the Stars app. It was the first one we bundled into ourselves. So we are set up to bundle with almost everyone.
What's a bundle you're working on?
Can't tell you that today, but
but describe it for us. Like in an ideal world, these we went through a few years about a decade ago where the major telecom companies were bundling this stuff. If you subscribe to AT&T or Verizon, you'd get X or Y for free. That was unique in the context of, okay, you're paying for a cell phone plan, you're getting content for free. What world do you want to see?
I think the nice thing about bundles, I think everybody looks at it and says, well, for the consumer, they get a discount and the companies get stickier. What really makes the bundle unique and special for the companies is you're lining up your content slates together. So, for example, last quarter with HBO Max, The White Lotus launched in February. They didn't have a big show launch in March, but we had Raising Kanan launch in March. So when you put those together, you have 2 big premieres working with each other to continue to drive subscriber acquisition. So when we look at the landscape that's out there today, We look at content that's either complementary or, folks that are servicing the other side of the household that we're not. And if you can put our service with their service and complete the loop for the household, it's a really compelling bundle for consumers.
Tim mentioned this is, you're relatively new as a public company. It's been not even a month, right? From separating from Lionsgate Studios. Talk a little bit more about just how that split is going to help Starz now.
I think the board 3 years ago looked at the combined company and said investors like a simplicity in story, and the fact that you had a studio and a network together wasn't that simple, and it was hard to figure out where to put your investment dollars. I think investors like to invest in content or distribution and not kind of a hybrid. And if they are going to put it in a hybrid, we were such a small cap company at the point you put money into Comcast or NBC Universal as or Disney as a hybrid there. And so, rightly so, made the decision to split the two companies to put value back on each of the companies. I think you've seen that in the stock performance on both Lion and Starz over the last couple of weeks. But ultimately allows us to focus on what we do best, which is really put great content on the air, own our own content, and drive our subscriber base to ultimately drive profit and return money. We got a 15% margin today. When we get into a steady state in 26, we'll convert 70% of that to unlevered free cash flow. So profitable business, generating a lot of cash for investors, and we think it's a very investable business.
Go ahead, Emily.
I'm curious, when you say own your own content, what does that actually mean in practice? That it's only on your platform and you would never sell it to others? Do you own the production supply chain as well? How does that work?
So today, everything that we have on Starz is exclusive to Starz for a period of time. It's a window that when you license Outlander from Sony, you get an exclusive window where they can't sell it to somebody else domestically against you, because we're only US and Canada. But you're licensed, you're renting that content for a period of time. When you have ownership economics, not only can you control costs better because you're actually in there daily making it and controlling the cost, but you create other revenue streams. So for today, if Outlander gets to be sold internationally, that money goes to Sony. If I own the show, I can actually put revenue streams on international sales and second window domestically, where I can net the cost down. So it allows us, as we turn the slate over and get to half the slate in 27 being Starz owned, we can start to drive margin for the business, which ultimately should be multiple expansion.
You're coming to this business, or you're at the helm of this as an independent business at a time when cord cutting is just absolutely rampant right now. I mean, when just a few years ago, this was for you, it was a 100% pay TV supported business. That's what Starz was. Now 70% of the revenue comes from streaming. You're still exposed to cord cutting headwinds for about 30% of the company. How do you combat that? How do you make up for the cord cutting revenue that you will inevitably lose with streaming?
So two things. One, I still think there's a lot of opportunity for us on the linear side, because remember, we're not a fully distributed ad-supported network, and so there's still opportunity for us to try to grow the business. And as you see with DirecTV, with skinnier bundles, and Charter now leaning back into video, I still think there's an opportunity for us to play in the bundle world on the linear side to drive growth for the business there. 80% of all of our customers, whether they're on digital, linear, or a la carte or rev share, which means two things. One, we're making money for our partners, but two, people chose Starz because they wanted the content. And so the content has to work. And so at the end of the day, as long as the content continues to outperform and be some of the biggest shows on television, we'll grow the business on both sides.
Emily mentioned that you don't have advertising. There were years when I was covering Netflix when they were saying, we're never going to do advertising. We're never going to do advertising. And look what they're doing now. They're doing advertising. Are you ever going to do advertising?
I don't think we're going to ever do advertising with the Starz content. It's, we don't have a lot of content. We have about 10 originals, so called 100 hours of content. It's about 600 minutes of advertising. It's very R-rated. It's very adult, so it cuts a lot of the advertisers that won't advertise on our service. But I do think, we built our own app. We have our own data stack that's very scalable, and that gives us the opportunity to actually help other linear networks that are marooned on the linear side that don't have a digital future, and actually do some commercial deals where we could actually take the linear feed, turn it into digital, launch it next to the Starz app, and have an advertising supported business next to our subscription business, and take some of the economics on behalf of our partners.
So essentially what you're saying is you could have maybe a less expensive consumer version that is ad supported in certain areas.
Correct.
When would that be?
Right now like we said, we're 3 or 4 weeks. It's about separation right now. We're really focused on making sure we're setting up the business, talking to investors, making sure everybody understands the growth story. And I think eventually the 2.0 will come pretty soon.
Cool.
Do you feel in this environment that you have pricing power? Because this is a space where consumers, there's so many options for what you get for your streaming. I know some people, it's like, I already have Max, I already have Netflix, and I have Hulu. There's just a lot of choice. And a lot of times people judge on price.
Yeah. So, as a complimentary service, we've always wanted to be priced significantly below the broad-based streamers. So, Netflix without ads is $24. I think Hulu's around 18 or 19. We're at 11. So as long as they keep continuing to raise their price, it gives us the ability to raise underneath it, because in the consumer's mind, anything that is, that much, it has that much gap, people see it as a complementary decision versus a competitive decision. So we always want to be significantly below the broad-based streamer. So I do think we'll have some pricing power. We've done 2 rate increases over the last 2 years. I think that's something we'll take a pause on for a while and get back to just pure subscriber growth for the way to grow. But we reserve the right to do some increases in the future.
Emily raises the question about pricing power when it comes to consumers. What about the pricing power that you have to compete with the huge companies such as Amazon, Netflix, Max, and the likes? When you're out there bidding up content, how do you compete?
So it's interesting. I think we have a specific mission. We really focus on women and underrepresented audiences, and we were just out in a very competitive bid for a book called All Fours, which has really taken America by storm and the 40-something women in America. And when we went out and met with Miranda July, who's the author, because we are so R-rated, we are adult, we allow the author and the writers to go where they naturally, authentically would go versus pulling stuff back. For her, the only destination to really put her book, to bring it to life on TV as authentically as she wanted to be, was Starz. And so we were able to win that competitive bid because of the mission that we have. And I think you see that not only in content, but when we hire folks, people come to Starz because they understand that we have a point of view and we have a mission and they want to be a part of that. And so it's been very helpful having a specific lane and really kind of leaning into that in a way that is very deep and authentic.
Jeffrey Hirsch, thanks for joining us.
Thanks for having me.
Yeah, good to see you.
Good to see everybody.
President and CEO of Starz joining us here in the Bloomberg Business Week studio. Now, I promised we would stick with media because producer and host Byron Allen has hired Moelis to find buyers for 28 local TV stations that his company owns, this in an effort to reduce debt while taking advantage of potential deregulation in the broadcast business. We got Romain Bostick with us. He's co-host of The Close on Bloomberg TV. Coming up in just a few minutes, he joins us here in the Bloomberg Business Week studio. So Allen Media, Romain, has the Weather Channel. They've got digital channels such as Sports TV.
Yeah.
They've also got a lot of debt.
They've got a lot of debt, and this has been an issue for a while. Remember, we're talking about a company that really expanded fast by borrowing. We saw, I think it was sort of at the start of 2024, the value of that debt or the pricing on that debt start to go down. Its main issue that it has out right now is a debt due in 2027. It's trading at about 50 cents on the dollar. It's got another issue it due in 2028 that's trading down around 39 cents on the dollar. So basically distressed debt at this point. And it's dropped pretty fast since, say, late 2024. And that was largely because of reporting by Bloomberg that the company had engaged in talks with Moelis and Kirkland & Ellis about some plans for restructuring. And that was never confirmed with Allen Media Group at the time. However, now the news story today that is out by Bloomberg reporters, also citing people familiar with the situation, that there is indeed a deal with Moelis to help facilitate the sale of some of those stations. Now, it's not clear if it's all 28 stations, but right now that portfolio is about 28 stations, down from about 36 just about a year ago.
Tim mentioned that this is about taking advantage of deregulation or potential deregulation in the broadcast business. Is there really deregulation going on?
This is really complicated. I don't know. Byron Allen's a very colorful figure. We talk about, I mean, he was a comedian. He has kind of the great distinction of being actually the youngest comedian, by the way, to ever appear on The Tonight Show.
Okay.
He's 18 years old.
And he's still performing. He's got a new show coming out soon.
He still performs.
Yeah.
He still performs. But at some point in the late 80s, 1990s, he hit upon this idea that you can kind of create really low-cost content, and you can get the local stations to pick it up for next to nothing, with the caveat that they would air this at like midnight or 2 a.m., and then he would get the ad revenue. He took this idea from his kitchen table. He's told the story plenty of times with his mother effectively acting as his secretary, and built this into $1 billion business. His net worth now, based on Bloomberg estimates, $700 to $800 million. Now, in that process, he started to buy up a lot of local stations. He bought up the Weather Channel. He bought up all of these sort of individual, very niche types of broadcast operations, with this idea that, yes, they were niche, yes, they were small, but you can make money off of that. Now, what we're seeing over the last couple of years, Tim and Emily, is that the ability to make money off of that, at least in terms of being able to service the debt that he took out to buy those things, maybe not quite in sync.
So it raises the question, too, about just what the market looks like in terms of buyers for these local stations. This isn't the 1990s anymore.
No.
Media is diversified, it's stratified. You've got a lot of young people looking at their phones instead of looking at the bigger screen in the home.
Yeah.
And that's an issue when it comes to valuations.
And this gets to the idea of scale as well. Remember, Alan has tried several times to sort of scale up. He made a bid for Paramount. He made a bid for some assets from Sinclair, and then there was a big Tenga deal that he that also fell through. And I think that was a big part of this. You know, we've been trying to get Alan on the phone today, and we should point out that we are reaching out to him for comment. He has not responded just yet, but this was a big part of the strategy, was to try to scale up. And I do wonder if the inability to do that may have hurt them. So when you look at Sinclair, which is basically one of the biggest owners of local stations in the U.S., they're faring a little bit better. They have their own financial issues, but they tend to be faring a little bit better, and that might just be because of the breadth of what they have.
All right, Romain Bostick, he's co-host of The Close. Thanks for joining us. Don't miss Romain and the rest of the team.
Later this afternoon?
You're going to see me.
All right.
You'll see Emily.
Where's Carol today?
She's out. She'll be back, though. She'll be back. Don't worry. She'll be back tomorrow. 3 o'clock is when you can see Romain and the crew on The Close. Meantime, we're going to be speaking to Angela Stent in just a minute, but we want to get an update on these markets. Here's Charlie Bell.
All right, I thank you very much, Tim. Here's what's going on. Best level of the day right now on the S&P 500 index, overcoming earlier losses. S&P right now up 13, gain there of 0.2%. First trading day of the brand new month. The Dow does remain lower right now. The Dow Industrials down 53, down 0.1%. NASDAQ Composite up 104. That is a gain of 0.5%. Year 10-year 4.46%. 2-year right now 3.94%. Gold up 2.6%, 33.75 the ounce. West Texas Intermediate crude up 3.2%, 62.71 a barrel. Recapping, S&P up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Our focus shifts now to the latest development when it comes to Russia's invasion of Ukraine. The two countries wrapped up a second round of talks, these happening in Istanbul, but they failed to bring the two sides closer to ending the war. They laid the groundwork for a new exchange of prisoners, however. The Russian delegation handed over peace proposals that include Kyiv surrendering control of territory it still holds in 4 partially occupied regions. This according to a Ukrainian official. We did also hear from the Ukrainian defense minister who said that Kyiv demanded an unconditional truce. For more, we bring in Dr. Angela Stent. She's senior fellow at the Brookings Institution. She's also former national intelligence officer for Russia and Eurasia at the National Intelligence Council. She also served in the Office of Policy and Planning at the U.S. Department of State, and she's author of the book that came out in 2019. It's called Putin's World, Russia Against the West and with the Rest. She joins us from Washington, D.C. Dr. Stent, good to see you. It's been about a month since we last connected. I do want to start with peace negotiations, but before that, kind of get to the context of what happened over the weekend, the drone attack, so-called Operations Spiderweb. Russia and Ukraine are each saying different things about what exactly happened, the damage, what was destroyed. Zelensky did say that about 1/3 of the strategic cruise missile carriers at airfields were hit. How does this complicate negotiations?
Well, I think you may remember that President Trump told President Zelensky at that unfortunate meeting in the Oval Office that Ukraine, quote unquote, had no cards. I think this was really an amazing operation. It had been planned for 1.5 years, we heard from the President Zelensky, and it shows that Ukraine does have some cards. It was capable of destroying these Russian strategic bombers that were being used to hail bombs on civilian and targets and infrastructure in Ukraine. And these, by the way, are old Soviet-era planes, and they can't be replaced. So it'll take Russia some time to rebuild, to acquire some more of these strategic bombers. It doesn't necessarily change the course of the whole war, but it certainly shows that Ukraine can fight back, that it's very good at this kind of advanced warfare, using the drones in trucks, if you like, the Trojan trucks, as they've been called, and really apparently taking the Russians and everyone else by surprise. But as you said, you know, at today's talks, yes, they agreed to exchange more prisoners, which is very important. But there's been absolutely no more progress made on approaching a ceasefire, any kind of an end to the fighting than there was, you know, when President Trump first took office.
I want to get to that ceasefire, but just briefly, I'm wondering if there's geopolitical implications of this attack beyond just how it affects Russia's war with Ukraine, but how this could potentially affect Russia's relationships with other countries?
Well, it has major implications for warfare in general. Some people are now saying that what Ukraine really did was to help NATO because it makes it less likely, at least, that in the immediate future, Russia would be able to attack a NATO member. But it has implications even for the United States. I mean, if you can now destroy planes and other military hardware through the use of drones like that, people are going to have to rethink where they position things and how they conduct warfare. So it potentially has major implications really for the way that countries fight wars in the 21st century.
But this was a difficult thing for Ukraine to pull off. I mean, some of the reporting around it indicates that this was over a year in planning processes. They were able to get drones into the country and then have them take off simultaneously to attack different strategic assets of the country. This is not an easy thing to do, Dr. Sten.
No. I mean, it took a lot of meticulous planning. Obviously, the Ukrainians had people inside Russia who helped with this. President Zelensky last night in his address said that some of these people were located very close to a major headquarters for the Russian domestic intelligence services. But it just shows you that this is a war that's partly resembles World War I and trench warfare, but is also a very high-tech 21st century cutting-edge type of warfare, of which we will see more in the future.
So where does this leave us now? Because the two nations spoke today, but it doesn't seem like they're any closer to making progress towards a ceasefire.
No, they are not. I mean, Vladimir Putin is not interested in a ceasefire at the moment. Russia has been taking incrementally more territory in the past few months. It's also sustained very high numbers of casualties as it takes this territory. But he is, I think, determined to continue with this war. Most people believe it's going to go on at least for this year, if not into next year. But the negotiations will continue because Putin has understood that if Russia doesn't take part in negotiations, then the prospects for improving U.S.-Russian relations, which President Trump had promised him, go down significantly. So I think we'll see. I know they've already said they're going to have another negotiation not in the not too distant future. They may continue to talk about these humanitarian issues. Again, very important issues, the exchange of prisoners, particularly disabled ones. But that doesn't mean that the fighting is going to stop anytime soon.
Dr. Sten, we're getting a question from some folks who are watching or listening right now. Want your view on over 3 years in, on year 4 of this war, when many thought it would last a couple of weeks, what you view as the original cause of this war?
The original cause of this war is that Vladimir Putin has never accepted the collapse of the Soviet Union. He has never accepted that Ukrainians are a separate people, that they should have a separate country. He believes that they should be part of Russia. He wrote that explicitly in a July 2021 5,000-word essay that he penned about Ukraine. So the root cause of the war is that Russia believes, under Putin, believes that it should control Ukraine, and that Ukraine shouldn't have any choice in moving westward, in joining Western institutions. So that's the original cause of the war. A lot of the discussion we hear about NATO enlargement causing it, that's not the cause of the war. I mean, the reason that Putin didn't like NATO, didn't want NATO to enlarge is because if Ukraine had been a member of NATO and Russia had attacked Ukraine, then it would have been involved potentially in a large-scale, possibly nuclear war with NATO. So NATO is not the root cause of the war. It's Putin's desire and the desire of many people around him to reconquer Ukraine.
Dr. Sten, we started the interview by you saying that this drone strike over the weekend was proof that Ukraine does indeed have the cards. Do they have the cards to force Russia to negotiate in a way that does not include actually giving up part of Ukraine's own territory?
So I would say they do not have those cards. I think what they have the cards is to make Russia understand that it's going to be more difficult as the fight goes on. But I think the only way to get the Russians to negotiate more seriously would be two things. One, there is a fairly robust sanctions bill that 81 senators, bipartisan in the Senate, support, and that Senators Graham and Blumenthal, who were just in Kiev, said that they would possibly pass this week. It hasn't happened yet. We'll see. But those would be very punishing sanctions on Russia, and it would be for the Trump administration to resume supplying Ukraine with the weapons and the financial assistance it needs to continue fighting Russia in such a way that Putin might have to understand that his maximum demands cannot be met, and that he would be willing to make some compromises in the demands that the Russians are making.
Just 30 seconds, but what's your current thinking on how the war ends?
Eventually, it will end in a negotiation, and there will be a negotiation clearly where both sides will have to compromise, and both sides will have to move back from their maximum demands. But I think neither side is at the situation yet where they're willing to make those compromises.
Dr. Stent, always appreciate you taking the time and joining us here on Bloomberg Business Week Daily. Dr. Angela Stent, Senior Fellow at the Brookings Institution, also the author of the 2019 book, Putin's World, Russia Against the West and With the Rest. We're actually seeing a little bit of buying in today's session. Look at that, the S&P 500 up close to 0.3%. The Dow down 0.1%. The NASDAQ Composite right now higher by close to 0.6%. Coming up next on Bloomberg Business Week Daily, we got some details on what's moving in those indexes. Stocks on the move. That's next.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Well, you're in the big leagues now.
How was your vacation, sir? Oh, I needed one.
With your 10% loyalty program discount, that's $225 for the night.
Not bad.
$155 for the night.
Hold up. How?
It's easy when you know where to look.
Trivago compares hotel prices from hundreds of sites, so you can save up to 40%.
Trivago is my secret tactic.
Hotel Trivago.
911 state emergency. Yes, somebody's killed two girls. My grandbaby and my friend. Dad? We're dead. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Let's do it. Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount+.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily on this Monday afternoon. Taking a look at the indexes. We did see some buying, or have seen some buying, as we've headed into the afternoon. The S&P 500 up close to 0.3%. The NASDAQ Composite up 0.6%. The Dow is down by 0.1%. I'm Tim Stenovec along with Emily Grafeo. Let's take a look at some stocks that are on the move today. With us is Bloomberg and managing editor for Bloomberg Markets, Christine Aquino. She joins us in the studio. What's on your radar?
Well, definitely Broadcom, Tim, because we know that that's going to be reporting later this week. And it looks like investors have a pretty optimistic view, right? The stock is currently up more than 3% at the moment. We have some previews from Bloomberg Intelligence analysts saying that the company may post slightly better results in third quarter guidance because of the strength in its AI offering. Key points of focus will be any programs related to its application-specific integrated circuits and, of course, its AI networking capabilities. The warning, though, is that the company may face gross margin pressure if it ramps up its ASIC capabilities, but that could be mitigated by other gains elsewhere. So we'll keep an eye on that later this week.
Yeah, a lot of focus on the AI still. And we're like months in.
We did speak to Jay Goldberg at Seaport last week. He was the only guy, or he's the only person on the street that has a sell rating on NVIDIA. And he said he would rather see money go into Broadcom than NVIDIA. He sees more of an opportunity there.
Yeah, probably because of the value proposition, right? I mean, definitely people have put forward Broadcom as a potentially cheaper alternative on the AI play, but you still are very much front and center of that theme.
I should note he does have a buy rating on Broadcom. Okay, Broadcom, on your radar, what else?
Looking at Moderna as well, Tim. I mean, we did get that FDA approval for its second-gen COVID vaccine. The stock, though, earlier was up more than 3%, but now up less than 0.5% at the moment because there is a lot of kind of caveats related to that, right? The vaccine will be for all adults over 65 and anyone over 12 who has at least one risk factor. Some analysts are divided over this, right? Barclays saying that the one-time approval definitely removes a major overhang to the stock. But then those at William Blair are saying that it's only really an incremental victory given the views that are very public of Health and Human Services Secretary Robert F. Kennedy and, you know, what we know about his views on vaccines. So,
okay, we have another stock. It's in the red. But not by much, right, Christine?
That's right. Yeah, that is Walt Disney, ticker DIS. That's down just 0.2% at the moment. So it's mostly in the news because of this continuation of layoffs, right? So the latest is that they're going to be laying off several hundred employees now in its film and TV businesses. Remember that they did this across their ABC outlet and their entertainment TV networks in March. And so in total, they've eliminated more than 8,000 positions in recent years. I mean, that cost-cutting effort you'd think would be a positive for investors, but I suppose the negative press that comes with it and the potential costs of managing all those people out would be a potential counterweight to all of that.
Yeah, 180,000 employees roughly. So
yeah.
Okay, cool. Thanks for joining us. Christine Aquino, managing editor for Bloomberg Markets live blog. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. You can listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. As I mentioned, seeing a little bit of buying as we get into the last hour of trading. Stocks pretty much at their session highs right now, with the NASDAQ moving higher by 0.6%. The S&P 500 right now higher by 0.3%. The Dow is in the red, just down by about 0.1%. If you are sticking with us on Bloomberg Radio, we've got a great program coming up, Emily. We've got a great group of CEOs joining us. We got Mike Brown, CEO of Travel and Leisure. We're going to talk to him all about the health of the travel industry. After we heard from Delta CEO Ed Bastian, who basically said overnight that we're seeing a little bit of a rebound, kind of counter to what he said in recent months.
Yeah, I mean, it's been tough for these travel CEOs to just contend with, I mean, headlines about inflation, immigration issues, aviation safety. I don't think I'd want to be a travel CEO right now, but I'm looking forward to the conversation.
Yeah, we've also are going to be joined by Bill Phelps, CEO of Dave's Hot Chicken. There's a $1 billion deal that they announced a little earlier today by Roark Capital. This is a private equity firm that has just a host of big chains, including Subway and others. So what they're going to end up doing with the company, we'll be asking him about that. Also, everybody thinks AI is coming for their job.
Yeah.
Do you share that view?
I do sort of share that view when it comes to potentially like writing and maybe some part of the research. But I'd like to think, you know, this banter that we have, this humans on TV, like, wouldn't it be really awkward if AI did that?
Haven't you seen what some of the, like, Google's new AI video service can do? It looks so real.
Really?
It's
they can
really
emulate news anchors.
Oh, yeah. They've been able to do that for years.
That's true.
At this
News
point.
anchors are a little stiff, so.
So that's a little concerning. We also had Dario Amodei, the CEO of Anthropic, just in the last week or so come out and say he sees this leading to a huge increase in the unemployment rate, upwards of 20% just in the next couple of years. So we're going to be talking with Rachel Metz all about what she sees in her reporting around this. Also, Lauren Grush is going to be joining us on the president's withdrawal of Jarrett Isaacman's nomination to lead NASA. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. Once again, stocks up at close to their session highs, 0.3% to the upside for the S&P 500. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Market angst mixes with market optimism to create a bifurcated trade. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. We're kicking you off to the closing bell right here in the U.S. Happy June, by the way.
Yeah. Is it starting? Off on a good note?
Yes, not a sell in May and go away just for this last day. But, you know, we're seeing a continuation of what we saw back in May. You're seeing equities okay, with tech really leading the way and tech outperforming continually. You're seeing yields higher, and you're seeing the dollar lower. The Bloomberg Dollar Index now at its lowest level since July of 2023. So steady as she goes, right? Sell the U.S. dollar, sell U.S. bonds, buy equities, Romaine.
Absolutely, and specifically big tech, and that really is the bifurcation we're talking about here. The latest twist, of course, in the trade war was that doubling of steel and aluminum tariffs on Canada, Mexico, and the U.S., fueling a touch of market angst on this Monday. U.S. and China also trading barbs of accusations on their trade dispute. That's not helping matters, nor are the dramatic attacks that we heard about in the Russia-Ukraine war over the weekend. Now, while equities, of course, are taking it in stride, if you want a real look at where the angst is, the agita is, look to commodities. Aluminum contracts right now linked to the prices that manufacturers pay for delivery to the U.S. Midwest. That surged 54%, the highest since 2013. Meanwhile, spot gold jumping more than 2%. That's the 11th time so far this year we've seen a move up or down of that magnitude, and that compares to only 9 times for all of last year. Now, adding to the log pile was fresh ISM data on U.S. manufacturing that reflected widespread uncertainty amid the on again, the off again, the higher again, the lower again rollout of those U.S. tariffs. Factory inventories down, imports of foreign components posting one of the largest monthly slides on record, and supply managers now realizing that for now, there is no efficient way to source their goods and materials.
All right, well, speaking of that, Romaine, let's get to this chart, which shows where we're seeing the issues of tariffs, and it focuses on the commodity market. Now, I realize that the steel and aluminum tariffs are in that market specifically, but now we're having some agita when it comes to copper. So the blue line is the front month U.S. copper price, and the blue line is the London copper price. And that divergence that we see, Citi says that since we have these aluminum and steel tariffs coming up and doubling to 50%, that raises the possibility that copper will also see some kind of increase with that critical mineral and copper S-232 investigation. Citi says it's been underpriced, and now it continues to be underpriced. So it raises that tariff risk yet again, Romaine.
Absolutely. Let's bring Ian Bremmer into the conversation to kick us off to the close. He's the president and founder of the Eurasia Group and G0 Media. And Ian, I do want to start first with these metals tariffs. Of course, a big announcement made on Friday, and we should point out this all kind of started during the first Trump administration, of course, when he imposed those 25% tariffs on steel, 10% on aluminum, and 7 years later, here we are once again.
Yeah, unclear why people are believing that Trump is touching the hot stove and then going to find more market rationality. It's like, oh, the markets are constrained. I hear it every day. from clients. The markets are constrained. They are much less of a constraint on Trump this time around than they were in his first term. He's not running again. He was almost assassinated. He's incredibly confident. He believes that he has all the answers. He shouldn't listen to his advisors. And his advisors aren't willing to tell him when they think that he's doing something wrong. And so it's not the markets don't matter, but they matter a lot less as a constraint on the president this time around. And so, you know, when the judges say, sorry, we're not going to let you use IEPA for your Liberation Day, he's going to find 20 other ways to try to get the outcomes that he wants done. And that means forcing countries around the world to capitulate. It doesn't mean backing off and saying, oh, sorry, I guess I couldn't really do that.
Well, I am curious whether those countries will capitulate. We know that some nations have sort of made overtures, some in earnest, some maybe not so. And I am curious as to whether these nations are going to feel compelled to really come to the table with something substantive, or if they maybe feel compelled to either A, wait this out, or more importantly, Ian, maybe just try to walk away.
Well, I was annoyed at the FT guy that used the term taco trade. You know, the Trump always chickens out. Since, I mean, the first country, when I hear taco, the first country I want to make sure it applies to is Mexico. And it's exactly the opposite of what Mexico's done. It's a critical trade partner of the United States. Over 80% of their exports come to the U.S. You know, all their tourism comes to the U.S. Their remittances flow back to Mexico from the U.S. All their drugs go to the United States. I mean, they rely on the U.S. for everything. And as a consequence, they capitulate. And that's exactly what they've done. It's what they've done on the border. It's what they've done on fentanyl. It's what they've done on Chinese transshipment of goods. It's even what they're doing for water at a time of drought when their own farmers aren't getting what they need. So, I mean, if the taco trade doesn't apply to Mexico, then, I mean, it explains why they have such bad tacos in the UK, perhaps. More seriously, there are countries around the world that won't capitulate, like China. China recognizes this is going to hurt them more economically than the U.S., but they can handle the pain politically much better than Trump and his democratic system with checks and balances, albeit weakened. And then there are other countries that are going to slow roll a little bit because they'll see maybe I can get a better deal now. Maybe, you know, it's going to be harder now given that the judges are making it more challenging for Trump, that there are, you know, all of these deals he wants to get done, but they aren't getting done as quickly as he'd like.
Right.
So, I mean, like so many things out there, it's complicated. And, you know, in the media, we want to say it's black or it's white, that Trump is a coward or he's a predator. And in reality, it really depends on who he's fighting against.
Yeah, and we love our acronyms, so there's also that as well. Ian,
that's true. That's true. It's a good acronym.
Yeah, it is a really good one.
It really is a good acronym. I mean, it's almost Bricks-worthy in that regard.
Almost. Like maybe we keep that for a while. Nonetheless, though, the result seems to be a change in how America sees itself and puts itself out there on the geopolitical stage, economic stage as well. Does that translate into a sell U.S. exceptionalism, or is that also too black and white?
Oh, we've been selling U.S. exceptionalism for decades now. And by selling it, I don't mean pretending it's working when it's not. I mean that the reality is that other countries around the world are hedging. But hedging U.S. exceptionalism takes a long time. You know, de-risking China is hard, and they're a far less important economy than the U.S. They're not, you know, essential for the world's financial transactions the way the Americans are, or you know, and many other things. So, I mean, when you see that American exceptionalism doesn't work for you, you try to find other ways to get things done. And I think that everything we see from Europe now in terms of how much money they're spending on defense compared to the last 30 years, that is the Europeans selling American exceptionalism. But when you watch over the coming weeks, when those same European nations get together with Trump at the NATO summit, you're going to see a lot of the reality that the Europeans are literally a decade or more away from being able to supply their own defense capabilities autonomously, from having their own intelligence autonomously, that they don't rely essentially on the Americans. So the reality is this process is going to be a very, very slow-moving one.
Yeah.
Trump's damage to U.S. exceptionalism is something that our children will face. But, fortunately, as one of the most short-term oriented nations in the world, that doesn't bother us very much. Same thing is true with our deficit, of course.
So I wonder, though, where that will eventually show up the most. Will it show up in a structurally weaker dollar, a structurally higher yields on the back end of the curve, for example?
Not in the near term. I don't see it. Again, I think these things are long-term. I think that, you see that when people don't want to come to American universities, that benefits other countries long-term. When you see that people that aren't white, that are really talented, and most of the really talented people in the world don't happen to be white, now feel like the U.S. isn't as welcoming to them as it was to my grandma, for example, fleeing Armenian genocide, coming to Ellis Island. Yeah, that's going to hurt you long term. I think there are lots of these things that will matter long term, but in the near term, you got to understand that over the last 2 decades, we have not been heading to a Thucydides trap where China rises and America declines. That's not what's been happening. What's been happening is America's allies have been becoming more asymmetrically reliant on the United States. The power imbalance that's been growing while China has done well has been between the U.S. continuing to do well and its allies being weaker. So it's European productivity coming off. It's the Europeans not building on their defense. It's Japanese and South Korean demographics falling apart. And that didn't just suddenly happen under Trump. That's been happening for decades. So if the fact that America's allies suddenly get it and they're going to start hedging 3 decades too late, I mean, you're not going to suddenly change your views on bond yields and the U.S. dollar on the basis of that come to Jesus moment.
Absolutely, and it's always important to think about those disparities that still exist. Ian, always a great conversation. Ian Bremmer there is the president and founder of the Eurasia Group, as well as G0 Media. We're going to take a closer look at the market reactions to the developments over the weekend when we come back after the break. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Anything better than settling in to watch our favorite shows?
Want to know what you're playing for? I love when Jeff says one of his catchphrases.
Well, come on in.
I'm Madeline Matlock.
And spend time with the CBS stories we love.
You're my Sherlock now.
I'm very good at what I do.
Go, go, go!
Full seasons are all available on Paramount Plus.
I like it. Yes!
So get comfy. We're here for you.
I could use an ally, someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
It's a beautiful day in this neighborhood.
Make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
My neighbor.
The The sell-off in the bond market continues in June. 30-year is up another 6 basis points after as much as a 47 basis point increase at one point in May. Double line leading the charge of a wave of investment firms like TCW and PIMCO that are staying away from the long end of the bond market. Double line's Bill Campbell writing, in other strategies where it's purely long only, we're just basically doing a buyer strike and moving to invest more in that middle part of the curve. Here to give us more insight is Christian Lawrence, head of cross-asset strategy over at Rabobank. You short in the long end?
Yeah, well, I'm certainly not long the long end at the moment. I think the bottom line is having more term premium being built in at this point makes sense, right? There's a lot of uncertainty out there. For me, the big concern, though, is the breakaway from the safe haven status that we're seeing alongside the dollar as well. Seeing those correlations break down over the last couple of months, I think that that's the big concern at this point, because are people still going to be buying US assets? Mm-hmm. Yes. Mm-hmm. I think the big concern is, of course, moving out of long durations and into the middle and the front end of the curve. I think that continues. But I think the other point to note is the FX hedging side of things. You know, when you look at the longer holders in Asia, private investors I'm talking about, not official institutions, they are starting to look at FX hedging those positions now. Might not be offloading them per se, but actually hedging that FX risk. And I think that that's a big concern for the dollar going forward.
So how does that translate then into price action? Just like a lot more heaviness in the dollar, like unable to really catch a bottom?
Yeah, that's specifically for the dollar, mm-hmm. As opposed to the yields.
Sure.
I think when it comes to the yields, I do think another 30 basis points of term premium would make sense. I mean, if you look at term premium for the last few decades, it's been very low compared to historical standards. We are in a world where the fiscal stance is, of course, getting worse, and that isn't going to change anytime soon. Yeah. Everything points in that direction. And there is just, I would say, a loss of faith in US institutions is far too sensationalist. But versus a year ago, are there some concerns about how big a role the dollar is going to play globally? I think that's fair.
Well, that's an interesting point, too, because we made a whole lot of hay on here about the decline of U.S. exceptionals and the rotation out of U.S. assets. And at least when you look at the data, you're certainly not seeing that on the domestic institutional side. Yeah. You are seeing that to a certain extent with foreign investors, but a lot of that is playing out in the FX space. So when you see not just the weakness of the dollar, but the idea of what's at the top of the leaderboard, whether it's the Swedish krona, whether it's the Swiss franc, even the euro, surprise, surprise, is that going to last, or is this just temporary tactical trading?
Well, I've always been a bit of a perma-dollar bull, quite frankly, and I do think we need to put things in perspective. You know, heading into 2025, everyone was long the dollar, right? This was such a hugely consensus trade. At the same time, everyone was short the euro. Again, another very consensus trade. So such a dramatic repricing, I think, happens when you see positioning so stretched. And the bottom line is, after that meeting with Zelensky, Europe has said that they're going to spend nearly $1 trillion on fiscal expansion. Now, the issue is that a lot of this has been baked into the price over the last couple of months. There's huge implementation risk in Europe, and Europe's coming from a pretty weak position when we think about overall growth, when we think about the health of the German economy, the health of the European consumer. And when you look at equity markets, yes, of course, we've seen a huge switch in terms of the outperformance of Europe versus US recently. But when you look at the structure and you look at some of the top companies in the US, I'm not convinced that this is a trade that continues. I think a lot of that has now happened, and we're going to see a bit more of a rebalancing into US assets over the next couple of months.
And it's a good point, too. I mean, Europe obviously is facing a lot of issues that predate everything that we're going through now. Then when you throw in whatever the heck's going on in Poland right now, whatever's going on in some of these other countries, and the maybe less of a union than maybe what it appears on the surface, how much long-term bets, how deep of a long-term bet can you make on euro strength, or on the strength of German bonds, or even private assets over there in Europe? I mean, just take public markets out of it.
Yeah, I mean, certainly from my perspective, I wouldn't make those long-term bets. Okay. I still think the US is the place to be. Now, granted, there's a lot of uncertainty at the moment. There's a lot of question marks, but I think it's more this repositioning from pretty extreme valuations, essentially, and pretty extreme ratios. I mean, if you look at the performance or the ratio between US and European stocks at the end of last year, we were at record levels. So to see this partially unwind makes sense, but is it lasting? I suspect not.
Does that mean that you aggressively sell US, or you just rebalance within it? And if that's the case, is it like a sell Mag 7 by small caps? Is it that?
No, I don't like selling Mag 7 at this point.
So you still like the Mag 7?
I do. You know, when you look at a lot of them aren't as impacted by tariffs as other companies, and when you look at them structurally, these are great world-changing companies. And I suppose my counter-argument would be, how many of those do you see in Europe at the moment?
One. Yeah.
Yeah, exactly.
Yeah. All right, Christian. Great conversation. Great to have you. Christian Lawrence, head of Cross Asset Strategy over at Rabobank. And we should point out the Mag 7 doing pretty good today. Tesla, Google in the red, but everything else in the green, including a 4% bump for Meta on the day. And we're going to talk about that stock in just a bit. But when we come back, we want to focus in on what's been going on with DraftKings. A big drop in those shares today after the state of Illinois proposed a tax increase on sports betting. We'll discuss when we come back. This is The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
All right, time now for our top calls. Big movers on the back of analyst recommendations. And we start off today with Boeing. Bank of America upgrading the plane maker to buy from neutral. The 12-month target on the price lifted to a street high $260 from $185, with the analysts seeing blue skies ahead as orders for Boeing or aircraft have actually emerged as a favored bargaining chip in those U.S. trade negotiations. That stock right now at its highest level since February. Next up, Nucor, BMO, raising its recommendation on the U.S. steel maker to outperform and modestly increasing the price target to $145. The upgrade comes on the heels of President Trump's announcement that he plans to increase tariffs on steel and aluminum to 50% from 25%. At one point, those shares were up 15%, up 10% right now as you head towards the close. And finally, Knight-Swift, Goldman Sachs upgrading to buy from neutral with the price target going up to 65 from 45. The firm sees a favorable valuation and earnings potential for the trucking company going forward. Nevertheless, though, those shares moving lower, largely because of concerns about the uncertainty around tariffs. Another stock that we're keeping an eye on right now is DraftKings. That stock falling about 7% right now, as the online shares of betting operators are down after Illinois lawmakers proposed a sports betting tax increase in their fiscal 2026 budget. David Katz joins us right now to discuss. He's managing director and equity research analyst over at Jefferies. He's got a buy rating on DraftKings. All right, David, so when we talk about the potential impact of this, I've seen a lot of estimates showing that this tax, when you sort of factor in the existing taxes that are already out there, could sort of take it up to as much as 50%. Is that realistic to you?
Well, look, we've done our math. We've published our math. We're getting about 72 million this year, and that's against a full-year estimate of around 800 million of EBITDA, right? So it's a high single-digit hit this year. Probably 80 million or so next year against $1.5 billion current estimate, right? So less impact. I think the important part is that it's a total surprise, right? We had not read or heard, from any of our sources that this might be coming down the pipe. And more importantly, I think investors today are focused on whether this emboldens other states to do it. And in my long tenure of covering gaming, both land-based and digital, we find that certain states behave this way, right? This is what Illinois has done since 2003. Right, because they need to make budgets and they find something to run. That doesn't mean that other states that are legal are going to do the same thing. We've seen that over the past 12 months since Illinois started this tax increase cycle that we're going through. Most of the states just don't behave that way.
So I am curious what options that DraftKings and the other operations would actually have. So if these tax increases do go through, is that just basically a pass-along cost to the consumer, to the bettor?
Look, I think what operators will talk about with us is, the mitigation efforts of that. This one's a little harder because it's directly on the wagers rather than a tax on NGR, which is what we saw last year. However, I think dialing in pricing on bets or the odds on bets, I think dialing in the promotional activities that are out there in an appropriate way. Those are the tools that are available to operators to try and optimize their margins. So they're not without, resources to deal with this. It's not great. There's no getting around it, but they do have some resources.
David, does it change maybe expansion plans or growth plans for these kind of names that are exposed to this?
It doesn't outside of Illinois. It certainly does within the confines of Illinois. Right? I mean, this is still, we keep our eye on the big picture. And this has been a noisy, tough 12 months. For DraftKings and for the others in the industry, with some of the tax increases, some of the other, endeavors they have in lotteries in Texas and so forth. Bad hold through the football season was particularly tough. But the big picture is that this is a growth market in the United States, right? The TAM has turned out to be much bigger than anybody anticipated. And player values at the state by state level bigger than anybody anticipated. And so that's where we're still focused. It's going to expand elsewhere, but certainly not in Illinois, which has proven itself to be a very business unfriendly state for all things gaming over my career.
Yeah, fair enough. Just not there. So you have a buy rating on DraftKings. What company is kind of best levered to navigate all of the messiness that you're describing?
So also in our coverage is a bit smaller name is Rush Street Interactive. And they are inherently and by design more disciplined and smaller scale. Right? They only are operating sports betting in states where they also have iGaming, which is legal in 6 states in the U.S. And, frankly, they've executed superbly well. They also are in Latin America, in a number of states, Colombia being among them, just going live in Peru. And they're very focused on profitability. And their expertise really is the gamification of play, of features and functionality that engage players. And, frankly, we meet with them all the time. Investors meet with them all the time. They're very disciplined about what they're doing. And in their case, it's less than $1 million hit in Illinois.
All right. Great perspective, David. Really appreciate that. Thank you so very much. David Katz joining us, Managing Director and Equity Research Analyst over at Jefferies. I'm a Texas Hold'em person.
Are you? I didn't know you were a gambler.
No, I'm not, but I like it. Oh. I mean, I'll do it. I'm just not very good at it. My husband's much better at it than me. Do you have a favorite?
I do not gamble.
This is not surprising.
At all, sorry.
Yeah, okay, that's okay. We still like you. All right, coming up, well, not craps. I'm not gonna do craps. All right, Andrew Bilecki, there we go. Klaviyo CEO will be joining us next, what he's seeing in the business.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Is there anything better than settling in to watch our favorite shows?
Want to know what you're playing for? I love when Jeff says one of his catchphrases.
Well, come on in.
I'm Madeline Matlock.
And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do. Go, go, go!
Full seasons are all available on Paramount Plus.
I like it. Yes!
So get comfy. We're here for you.
I could use an ally, someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
911 stage emergency. Yes, somebody's killed two girls. My grandbaby and my friend. They're dead. They're dead. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. The same goes, same goes. We have the NASDAQ continuing to lead the way higher, tech outperforming, but overall, not a lot of movement necessarily happening within the broad index level.
Not at all here. On the individual level, yes, but it's still a lot of concerns right now, Alex, about where the heck we are going right now when it comes to trade policy.
Yep, got no idea, unless you're a steel company, and then maybe you have an idea. And that really sets the question for Jobs Friday and what we're going to see from the employment number, and then what that means for the consumer, because all of this uncertainty is going to be roiling consumer spending habits. Now, a company with unique insight on this is Klaviyo, a company that combines marketing automation, analytics, and customer service into one unified solution to help businesses know their customers and grow faster. I'm pleased to say the CEO of Klaviyo joins us now, Andrew I can't do it. It's too hard. Bielecki. I practiced in break and I nailed it. Andrew, sorry. So from your point of view with your product, it's basically trying to make my life easier as a shopper. How are people like me doing? How's the consumer doing?
Yeah, no worries. We're very excited about the results we're putting up at Klaviyo and how we're helping over 169,000 businesses, like you said, get closer to the consumer, understand who their consumer is, and then build great experiences across marketing, service, analytics, all the core components of CRM. So for your question on how are they doing, I talked to a lot of our customers. I'd say they're cautiously optimistic and very resilient. And one of the things we've been doing at Klaviyo to try to help them out is we've been running weekly pulse surveys with consumers across the US and around the world to understand their buying behaviors. And some of the big insights we've seen is, one, probably predictably, consumers are being a little more thoughtful, with how they're, where their spend is going. But we find a lot of them are reverting back to brands they already know. So we're excited to work with a lot of great brands. We added, the Hershey Company, Belkin, Mattel, some of these brands. And they're going back to these brands. We also find that consumers are a little bit more looking for a discount right now. So the ability to figure out, which consumers maybe need a coupon or something extra, that's making a big difference as well.
Right, I was going to say, how much of it is here's a great experience for the customer versus here's the best deal, and how much it's really being driven by that deal and by that price?
Yeah, it's very much a mix of both. So I'll give you one example. Tatcha, luxury skincare brand, great business. They're using Klaviyo, one, to get to consumers on the channels that they care about. Traditionally businesses would take the approach of, well, I'll have an email strategy or I'll have a social strategy. With Klaviyo, we're bringing all that together. So if you find somebody that prefers to learn about new products through, say, text messaging or mobile or email, you can reach them at the right point in the right time, and then also give them the right content. So in the case of skincare, recommending the right product really makes a big difference. So we're finding that actually can compensate for a lot of the discounting that brands might otherwise have to do. And it definitely drives engagement, because if a brand knows the kinds of products that you're into, they're more likely to come back.
I mean, how effective is this effective more for folks who are already in that ecosystem, meaning that they've already bought the brand's products or at least brought maybe a competitor's products? Is it also effective on people who maybe are new to this altogether?
Yeah, it actually works for both. And this is actually one of the places where we've been able to leverage AI quite a bit. We're able to take, say you're net new to a business. It's your first time visiting their website, or you're a new subscriber to their marketing list, or maybe you're reaching out and you have questions and you're chatting with them. We're actually, through AI, we're able to build models that look at, hey, other customers that look similar, other consumers that look similar, what are their likes and dislikes, and then help make recommendations. And we can embed that across marketing channels, even into the actual customer service experience. And that drives a lot of uplift. So even from a little bit of signal, maybe just from those first couple of products somebody looks at, we can actually then cluster and pattern match folks across the entire customer database of that business to help them make better decisions.
I am curious that when we get to a point where we're concerned about economic conditions, we're concerned about consumer spending, I am curious as to whether marketers or whether these brands sort of, I guess, push deeper into this, or they pull back. Is this the type of thing that maybe brands will cut if they do see a material drop in consumer spending overall? I'm just talking about the macroeconomic conditions.
Yeah, well, at least what we're seeing from our customers is they know their existing consumers, people who have bought in the past that are loyal customers. They're so much more likely to buy again that they're leaning into technology that can help them deliver a better experience to those folks. I think actually we think about Klaviyo as a bit of an all-weather product. When you're growing really fast, you have a lot of new customers. We can help make their experience great. But maybe when there's a little more uncertainty and you find people are going back to the to the businesses and brands that they know and love, the more you can show up for them in that moment, the more they're going to value you. Mm-hmm. We also believe that consumers, a lot of marketing now happens through word of mouth. So if you deliver a great experience to one person, they'll talk about it to their friends, and that's obviously a very cheap and efficient way to to grow your business.
All right, Andrew, we have to leave it there up against the break. I really appreciate you taking time for us. Andrew Bialecki is the CEO over at Klaviyo. It's kind of interesting to see how fast, Alex, this company has grown. I mean, it was just founded, back in, I think, 2012 or so basically about a dozen years ago. But I am very curious about this idea, and I know investors embrace this company because it's, like I said, there's a sort of a predictable business model to it, but has this company really stood the test of a true downturn in the economy, a true downturn in consumer spending? We don't know if that's going to happen, but if it does, what do these brands do?
Right. Also, the tariff universe is just so radically different than anything we've ever seen before. So having to manage that as well on a customer side would be very difficult.
And you shop a lot, I assume, right? So,
what? I don't.
Sorry to stereotype, but no, I mean, all seriousness, how do you feel about the ads? Because I shop a lot, and I've noticed a big change in the ads that I get through email, through text, which I would prefer not to get,
I know, I hear you.
But, and they have gotten better, I will say that. I felt like a few years ago it was just complete garbage, and now I feel like, oh, this is actually interesting to me.
If it's useful to me, I really like it.
Yeah.
If it's not, I can't stand it. But sometimes it's like, oh, thank you for noticing what I'm looking at, instead of just like putting me to there was something else that's really random.
Yeah.
I was on Temu the other day, and I was like, "Don't you guys know what I want? Like,
Yeah.
I'm literally Googling this in your website, and they still couldn't get me the right thing. I didn't like that very much."
Timo, big spender.
I know, we're cutting down the budget, man.
All right, we're going to continue focusing in on this space and take it from the lens of advertising. And how about AI advertising? Because Meta's going all in on it. The tech giant making a big bet on automation and marketing. We're going to talk to one of the big players in the ad tech space when we come back after the break. This is The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Being able to look at a screen and see myself is like no feeling in the world. Get it. That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
Every disappearance.
You think Sean's been kidnapped?
Every deception. We had a drop go bad. Every episode. On demand. Without a trace. Watch it anytime on demand on Pluto TV. Stream now. Pay never.
All right, shares of Meta outperforming, up about 3.5%, as the tech giant is making a big bet on automation and advertising. The Wall Street Journal reporting that it's working to enable brands to fully create and target ads using AI by the end of the year. That's according to people familiar with the matter. Let's get some insights on a real person who knows a lot about this. Mark Douglas is the founder and CEO of the newly publicly traded Mountain, the ad tech platform Mountain. All right, Mark. So, I mean, the gist of this article is basically like, okay, I'm a brand. I go to Meta. I say, look, here's my product. Here's my detergent or whatever. They take that image, they take my budget, they figure out, how to create the imagery, the video, and all that goes into the ad, and then hopefully target it to the right person who's in need of, my, fantastic detergent. Is that generally how this works? And were we not already doing that?
Well,
It's where the market is trending. I think the thing is the marketer, is the brand owner, is the chief marketing officer, whatever that role is, are they going to be at the center of that, or are they going to just like hand it off to Meta or Google to do that for them? I think what's going to succeed is keeping them at the center of it. What's kind of being articulated is the world in where I guess like AI bots will become your marketing team and you just sit back and watch them do your job. And I actually don't think that's going to succeed. I think the brands want to own their messaging, the feeling, the emotion, and that's still going to be a big part of it, even with the automation.
How do you do that, though, Mark? How do you sort of pair those two worlds together?
It's actually very doable. There's a lot of work going into this. Now we're doing work in this area. Obviously Meta and other companies are doing work in this area. And it's just, when I talk to marketers, they just want help. They want to feel like all of the AI tools essentially give them the effect of a bigger team, but they're not looking to like abdicate this to someone else. If they do, then what happens is, every Monday, another company just gives Meta, a marketing budget and says, just create me company. I'm company A. My company is B. Just create me company A. That's not an area where anyone can be differentiated. It's not really where I think brands, how they market now and where they want to go. But they do want the assistance. They want the leverage and they want to lower their costs.
Well, because you're commoditizing something that wasn't commoditized before. So
exactly.
But is that going to be the future to some extent? And then how do we commoditize something and still differentiate?
I was watching, we have some tools we're working on, and I was watching someone use it, and one person just said generate, and another person kind of said, I want it to be engaging and funny, and they kind of brought their own personality into using AI tools, and you can imagine the difference in the results. So I think hearing Mark Zuckerberg articulate it like, basically Meta will become your turnkey marketing system and you will play no role in it and you'll just give us money, I don't think is actually how it's going to play out. But there is a lot of automation coming. I mean, a lot. And it's going to substantially lower the cost of marketing products, which is an interesting part of the story. Lower the cost of marketing, you also lower the cost of the product that the consumer is selling. Because a lot of that cost in every product is the marketing cost.
Oh, that's such an interesting point. You can see that like on calls too. The marketing spend is always front and center a lot of the time. Checking in here on the IPO. Your stock's trading at 26. You IPO'd at 16. How do you feel about it? Was this a success for you? Did you leave money on the table?
I think I'm in a quiet period right now, so I'm literally not allowed to talk about the stock. But I'll say I think the market considered it a big success. So I'm not allowed to offer my own opinion, I think, for another 19 days. But I'm happy you asked about it.
Okay. He's like, no thanks, bye-bye. All right, Mark, we appreciate it. Thanks a lot, Mark Douglas, founder and CEO of Mountain. We appreciate that. But hey, I mean, for an IPO when the market was really closed,
yeah,
$10.
Yeah,
can't be the worst thing in the world.
It's not doing bad. I know a lot of people make a lot of hay when you see that big pop in the secondary market.
It's always something.
Okay, yeah, it's always going to be money.
If it doesn't pop enough, it means it wasn't. It's always something.
When was the last time you saw investment bankers get it exactly right on the nose?
But do we want
rare.
it to be exactly right? Did we say we do, but do we?
I'm a perfectionist, yeah.
What? You are?
Yeah.
It's brand new information. No, I'm kidding. I totally know. Okay, I'm heading out. I'm going to catch a train to D.C., so you have fun. Yeah, bye.
That is right.
We're at 15 minutes to the closing bell. You get the NASDAQ is up by about 0.6%. The S&P is up 0.3%. Romain will take you through that closing bell with Mo Hagman, Managing Director of Strategic ETFs with ProShares. This is the close on Bloomberg. Taking a look at other parts of the market here, that bond market, the rally, the sell-off still continues with yields continuing to push higher. That 2-year yield up by 4 basis points, that 10-year yield up by 5, as equities honestly pretty much go nowhere.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You didn't even know me, LL Bean. There are questions that I would say are straight up homicide inducing.
Hot tech. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
911 emergency. Yes, somebody killed two girls. My grandbaby and my friend. Dad? They're dead. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's involved.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Let's do it.
Now stream. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Is there anything better than settling in to watch our favorite shows?
Want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in. I'm Madeline Matlock. And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do.
Go, go, go!
Full seasons are all available on Paramount Plus.
I like it. Yes!
So get comfy. We're here for you.
I could use an ally, someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
When you need your sports news all the time,
We've got breaking news to bring to you.
CBS Sports HQ gives you a snapshot of all the sports that matter to you.
Big news coming out of the NFL. A lot of movement in the rankings this week.
With highlights.
What a finish at the final round of play.
And in-depth analysis.
Can they three-peat?
Tony Romo joins the conversation.
What can you say about this game?
When you need your sports in the snap,
We're bringing you that breaking news right here on HQ.
find it on CBS Sports HQ. Streaming free anywhere you are.
All right, we are just about 10 minutes away from the closing bells here. Let's get you the lay of the land with the S&P 500 up about 0.3%. 6 of the 11 S&P sectors are in the green, with the biggest gains, of course, coming from big tech, but also a big boost right now coming from energy. And it is a little bit of a tale of two cities when we talk about what happened over the weekend with regards to the concerns about trade policy, with regards to concerns about the war in Ukraine and some of the other geopolitical events here. You are taking a look there at what we're seeing on the bottom of your screen with General Motors down about 4% here. And we've seen the automakers and a lot of the tariff-exposed companies, particularly those with outsized exposure to Europe, now on the back foot. Not so much concerns about U.S. tariffs, but more importantly, the potential for retaliatory tariffs coming out of the EU. Now, that the third line on your screen, you're taking a look at Omnicom there. We were just talking about the big gains that we're seeing in Meta, a bit of a pullback there. Has some concerns here as we move into a world of more automation in the advertising space and how that might weigh. on some of those companies. The VIX is down, but so too is the dollar, and you are seeing yields in the Treasury market up across the board. Let's bring Mo Hagman into this conversation. He's Managing Director of Strategic ETFs with ProShares, counting us down to these closing bells. Would you point out, Mo, we came into this morning, and it looked like we were going to have a sell-off, and we got a nice boost from big tech today. That's given a lift to the NASDAQ and to the S&P to a smaller extent. What you're not seeing is necessarily people embracing small caps, mid caps, cyclical stocks. And I am curious at what do you make of investor sentiment right now when it comes to everything that's going on in Washington, everything that's going around the world, and whether there still is an opportunity to buy?
Sure. Well, thanks for having me on the show again. I think you're absolutely right. Sentiment has been actually skewed a bit more defensive. And when you think about defensive positioning, you should think about the NASDAQ and growth as a bit more defensive given the underlying companies in that space. So you think about higher quality companies, high return on invested capital, low leverage. These are companies that tend to produce more stable earnings and are resilient to things like tariff uncertainty or supply chain disruption. So we continue to see retail flows being incredibly strong. And, you see ETF flows, for example, being probably on record pace. If you think about last year versus this year, we're trending at record pace. So the retail flows are pretty strong. I will say we're reaching a level of exhaustion, though, and you could see the upside and downside calculus starting to change. We are starting to see prices for hedging getting a bit more expensive as people think about how to protect the downside.
So when you look at the rally that we had in May, and I think someone said, like, in terms of the month of May, that was the best May that we had in like 35 years or something.
Yes.
But then you look at some of the proprietary data coming out of JP Morgan, Bank of America, and some of the other big brokerages and institutions. That was all retail driven. I mean, the vast majority of it. And I do wonder where the institutional money is, and if that actually creates more upside opportunity if they finally find reason to come off the sideline.
Right. Well, we know there's always the potential for large block trades and assets to move off the sideline. Cash, money market funds, bank deposits are still pretty elevated relative to history. When I speak to asset allocators, it's a really tough time to be an asset allocator. It's a headline-driven market. Many of the things we're seeing right now from the administration can move markets very quickly. I think it's important to be nimble, maintain more of a tactical asset allocation posture. But right now, a lot of institutions are actually taking very little risk versus their policy benchmarks. If I had to say one area that I've seen quite often is a little bit underweight equities in favor of fixed income, but in the belly of the curve, not necessarily in the long end.
Well, we've been talking a lot about that on the show, this idea of, I guess, in theory, a buyer strike on the long end of the curve. And you have Double Line and a few others making it very clear they just don't find the term premium that you're getting out there attractive at this point. If everyone's crowded, though, into the shorter end of the curve or even into the belly of the curve, does that create, in your view, any sort of potential market risk? The idea that if everybody's on one side of the seesaw, so to speak, and things go wrong, then what's the catastrophe if everyone tries to go to the other side?
Well, I think about everything relative to the benchmark. So if you're a 60-40 investor, how do you maintain your duration profile versus that benchmark? Many of the clients I speak to today are hugging that benchmark. They're not really looking to take duration risk. And it's always been difficult to make money in rates. Rates and FX historically have been difficult areas to drive alpha. And right now, I'd argue, even harder. So for now, I would say maintaining that policy benchmark tracking error to a level that's comfortable is what we're seeing from the institutional space.
What about inflation risk right now? And I know that's still a question mark when it comes to trade policy, but are you seeing people sort of take those types of hedges out, whether it's through ETFs or even more directly through TIPS?
I think it's the other way around. I think there is an element of uncertainty that is built into portfolios and how do you position for what could come, right? So inflation is tame. Like if you look at the numbers, we're seeing pretty little concern, but it's not about current inflation. It's about expected inflation or forward inflation. And if these trade wars and things that are happening around trade start to go the other way, I think we've had a lot of positive news, at least more recently. There has been at least a attempt to resolve some of these issues. If that goes the other way, I think that inflation surprise could come back into the market.
There's a risk right now, though, that we could end up in this sort of range-bound market. We've had a nice rebound. We're back to 5,900 on the S&P. But to make the case for getting the S&P back to 6,100 or even beyond, at least in the next 6 to 9 months or so, that's going to be predicated not just so much on a tamp down in Washington, economic conditions, but for corporations to really deliver on the earnings side. And I know they kind of delivered this past quarter, but the guidance they gave going forward certainly didn't seem like there was a huge light at the end of the tunnel.
Right, and it's a mixed bag, right? I think what we're seeing in the tech sector and the higher quality companies is a year-over-year growth number that's really impressive. That's not uniform across the board. So to your early comments, we see higher quality companies both in the mid-cap and large-cap space as more attractive than low profitability or small-cap companies. Again, that uncertainty is hanging over the whole market. And what are the companies that are going to be resilient? What are the companies that are going to deliver? Those earnings numbers are going to matter, and fundamentals will eventually matter again, right? So thinking about that allocation to those higher quality companies in this market, I think, is very prudent.
Just real quickly, like of all the products you guys have over there, I mean, where are you seeing the most activity and most buying?
Sure, yeah. So infrastructure has actually been an interesting conversation. Real assets has been one area that we've seen a lot of interest. If you think about inflation, if there's inflation surprises and growth is low or stable at kind of 2.5%, those assets tend to do well. The other is, I mentioned, dividend-paying stocks have been an area that we've seen a lot of interest in, especially in the mid-cap space.
All right, Mo, great conversation. Mo Agben is the Managing Director of Strategic ETFs with ProShares, helping us count you down to the closing bells here on this Monday afternoon. Just about 2 minutes until we get there. The S&P holding on to its gains, up about 0.3%. Steel companies, gold companies leading the charge on a percentage basis to the downside. Solar and automakers. A full breakdown starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Food, taking you through to the closing bell, a global simulcast. It starts right now. Alex Steele off on assignment. Carol Massar has the day off. Emily Grafeo filling in for her. And of course, Tim Stenovic joining us as always as we welcome our audiences across all of our Bloomberg platforms, television, radio, and our partnership with you too, Tim. A bit of a bifurcated trade here. Big gains in the NASDAQ on the day, but you're still seeing the Russell, the transports, and the mid-caps basically straddling in the line between gains and losses.
Yeah, and it's kind of like not really what we saw earlier in the session. We saw stocks were really doing nothing earlier. They got a little bit of a bounce just in the last couple of hours, and we've been hovering around this area. I don't know. Maybe they're thinking about the investors are thinking about the economic data that we got today that we'll get later this week. Broadcom earnings after the bell later this week. Not too many catalysts in the near term, I think, that are kind of moving markets right now.
But if you're a cross-asset reporter, it was an exciting day. Across asset classes, you look at the move in long-term treasuries, oil moving higher, Bitcoin is lower, which you wouldn't expect that on a risk-on day. So under the hood, the cross-asset is interesting.
And don't forget the U.S. dollar near a 2-year low as well. I mean, this could all change later on this week if President Trump and Chinese President Xi Jinping end up having their conversation that we've been teased on for so many days now.
Yeah, I mean, what's that conversation going to look like, though? Because at this point, I'm so confused as to exactly what either country wants. I think I have a sense here of what President of the United States wants, but I'm not really clear how that dovetails with what the Chinese government, at least what they've communicated publicly. All right, we get the closing bells here in New York. Let's take a quick look here. With the Dow Jones Industrial Average relatively unchanged on the day, as it takes a while for these numbers to settle. Seeing EW Scripps actually ringing the bell there on the NASDAQ. And look at that, over at the NYSE Grinder ringing the bell there in honor of the start of Pride Month here in the U.S. The S&P 500 higher by 24 points, or about 0.4%. The NASDAQ up about 0.7% on the day, and the Russell 2000 clinging to gains higher by 4 points, or 0.2%.
Kind of evenly split between gainers and decliners in the S&P 500. 241 stocks moved higher, 261 to the downside.
Yeah, you look at the sector performances, and there's a lot of green here on the IMAP. The only sector to finish in the red is industrials, losing about 0.25%. Healthcare and REITs were basically unchanged on the day, although they did tick into the green at the close, with the S&P 500 ending at its session highs. Energy energy, the best performer here, as crude oil, as Emily mentioned earlier, getting a big bid. And tech and communication services all gaining as well.
All right, let's take a look at some of the gainers on this day today. Applied Digital up more than 48%. It's a digital infrastructure company, i.e. cloud services for high-performance computing. Shares surged, and get this, it was only the biggest jump going back to September. This after the company entered into 2 lease agreements with CoreWeave in North Dakota. Remember, CoreWeave is the cloud services company. So under these agreements, Applied Digital will deliver 250 megawatts of critical IT load to host CoreWeave's AI and high-performance computing infrastructure at its North Dakota Center campus. Also, keep an eye on what happened with steel and aluminum stocks today. A host of these companies moved higher. I picked out in particular Steel Dynamics, higher by 10% today. This after President Trump said he would be increasing tariffs on steel and aluminum by 50% from 25%. The president did say on Friday that the move would help protect American workers. This was as he visited a U.S. steel plant earlier late last week, I should say. The president also said he would raise aluminum rates in a post on Truth Social. That post said the new rates would become effective this coming Wednesday.
Why did you choose Steel Dynamics and not the others, Tim?
Steel Dynamics was the best performer when I looked in the S&P 500 on a percentage basis.
Okay.
Yeah, so in the S&P 500.
There's a method to his madness.
Okay.
Yeah, there is a method. It was actually a hard decision. I, in fact, even looked at some steel ETFs if I wanted to do one of those.
Yeah.
But it was only moving higher by like 2.5%, 3%. I thought this was a more dramatic move. So.
All right. Well, Cleveland Cliffs up 23% on the day.
That was the one.
That stays since 2016.
But that's not in the S&P 500.
How's that for a superlative?
It's not in the S&P 500.
Oh my gosh.
And the market cap is only a fraction of what Steel Dynamics is. So yeah, there is a method to this madness.
He's got big cap bias.
Hey, there is a little merger action happening. M&A Monday. Blueprint Medicines Corporation higher today, just surging 26%. Sanofi agreeing to buy the company for at least $9.1 billion. Sanofi is looking to further expand its rare immunological disease portfolio. The company plans to finance the transaction with a combination of cash on hand and proceeds from new debt.
All right, and looking at the decliners right now, DraftKings falling as much as 8.5%. But it actually ended the day down 6% after Illinois lawmakers proposed a sports betting tax increase in the fiscal 2026 budget. Flutter Entertainment was also lower, but the DraftKings drop perhaps more significant here. This was a surprise move from Illinois following last year's unexpected boost. According to analysts at Truist and Oppenheimer, they say that online sports betting operators will have to pay a 25-cent fine on the first 20 million wagers accepted and then a 50-cent charge thereafter. I'm also looking at shares.
I just want to say, too, we caught up with David Katz at Jefferies because I was kind of confused as to why the shares are reacting so much. And he said the bigger issue here was that if Illinois does this, then it gives sort of a green light for other states to follow suit, and that would be the real risk. That's his view, not mine.
Right, yeah. I feel like we typically see those fears of like a contagion effect when it comes to anything around sports betting proposals like this one. But now flipping back to Tesla, shares dropped as much as 3.8%, finished the day down 1%. A French industry association said today that Tesla sales plunged 67% to an almost 3-year low in France. And this is undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. And then finally, advertising agencies fell. Interpublic Group is one of them. The Wall Street Journal reported that Meta is planning to enable brands to fully create and also target ads using AI by the end of next year. And we saw this company, $8.4 billion market cap. It's an organization of ad agencies, finishing the day down 4.5%.
All right. Just real quickly, speaking of trade, we are getting some headlines here out of the border, Customs and Border Administration here in the United States saying that they have extended the pause on U.S. tariffs on some Chinese goods to August 31st. And of course, there's been a lot of chatter today about more high-level talks between the U.S. and China in resolving this trade dispute here. And of course, it's hard to keep track of exactly which goods and which tariffs this actually applies to, but the headline here is that it has extended the tariff pause on some Chinese goods until August 31st. Let's take a quick look at yields. It did finish up across the board and across the curve here by about 4 basis points, almost evenly. You're taking a look at that 2-year yield, still holding just below that 4% level. Your 10-year yield at 4.4, and your 30-year yield right now at about 4.9.
Hey, one of the stories that caught our attention today has to do with everything that's happening at Newark Airport. I know a lot of people in the Northeast are focused on this.
Is there anything happening at Newark Airport?
There is. They actually finished a runway ahead of schedule.
Ahead of schedule?
I know. It's pretty wild. They finished a runway ahead of schedule, and now they're set to actually increase flights later this month. This follows the completion of construction at one of the busiest hubs runways. This, according to the FAA, earlier today. The FAA also saying it's going to allow 34 hourly arrivals once it certifies the recently rebuilt runway. It's now limited to a maximum of 28 per hour under restrictions imposed by the FAA to reduce delays. That compares to the typical maximum capacity of roughly 38 landings each hour.
So this increased capacity, it's expected to alleviate congestion and delays at the airport. We'll have to hold them to this. It's interesting because even if the flights are going to increase, will the demand increase? The New York area has a number of different airports that consumers can typically choose from. So it's interesting.
What's your favorite airport, Emily?
What's my favorite?
Yeah.
LaGuardia. But obviously, I mean, you can't fly international, but I love LaGuardia.
Yeah, well, no one can. Unless you want to go to Montreal. I think there's some nice Montreal flights from LaGuardia.
But you can't go to California, for instance, Tim, and you want to go home. Like, that's not a possibility.
It's JFK or Newark, and I was a Newark person until a few weeks ago when I switched all my travel for the summer over to JFK because of the issues that Newark has faced. This is a huge issue for United Airlines, of course, which has one of its busiest hubs at Newark Airport.
Although it has that partnership now with JetBlue, so that does give it more of a, I guess, presence at JFK.
Not overnight, right?
Not overnight,
When they do get those slots at JFK, and then JetBlue gets some spots at Newark, we'll see.
Yeah. Okay, so good. That's good. Things kind of returning to normal at Newark, and maybe the IPO market is returning to normal as well. One can hope. Circle Internet Group, as well as its shareholders, increasing the size and price of its IPO. So that, of course, signals perhaps strong demand for the stock. This is the stablecoin issuer. They're now offering 32 million shares between $27 to $28 a pop. That's according to a filing with the SEC.
Yeah, I mean, this is interesting. I mean, we've actually had a lot of IPO activity over the last couple of weeks. And I was actually curious when we were talking about, I can't remember if it was the Mountain or the Toro one, and someone was showing the data about the number of IPOs so far this year, at least through the month of May, higher than last year over the same stretch of period, and the number of companies going public has been higher as well. You would kind of not think that given all the chaos.
Well, I think what's so interesting is there was this pullback right after the so-called Liberation Day and when markets were in chaos and leading into that. And then as we've seen the steady drumbeat higher, more than 20% from those lows on April 8th, we've seen some of those companies dip back into the markets, and we've seen a stability come back, and we'll see what happens throughout the summer. But it does look like at least some big news coming from when it comes to those tariffs on some Chinese goods coming into the U.S. We'll get more details on that headline on both of our programs. That is going to do it for our cross-platform coverage of the close. It is the closing bell. You guys are going to do your thing on TV. We're going to do our thing on radio, YouTube, and originals, but we'll see you tomorrow, same time, same place.
And we continue our coverage right here on Bloomberg Television. A big week for economic data here in the U.S., including that big jobs report on Friday. A breakdown with Francis Donald over at RBC. That's coming up next here on The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
has all your soon-to-be favorite entertainment in one place.
I smell something burning.
The latest hit movies.
I'm just giving the people what they want.
The newest shows and seasons.
I think we have a situation.
Son of a... And thrilling live sports.
It's do or die.
Looks like you just found a new favorite streamer.
Are you with us?
Explore what's new to stream on Paramount Plus.
Join Light the Views on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostick, coming off what was an incredibly strong May. A little bit of a mixed start here to the month of June. It looked like it was going to be a lot worse at the start of the session, but stocks did get a little bit of traction as we got closer to the bells. The S&P 500 finishing higher by about 0.4%, about a 6 to 0.7% gain for the NASDAQ indices on the day. We did see yields creep higher across the yield curve on the day here, but there are two big stories that to keep an eye on, and they're both in the metal space. With regards to precious metals, spot gold, 2.75%. We should point out, you do not see moves like this on a normal basis. We've had 11 days just this year alone where we've seen a move of 2% or more up or down for spot gold. That only happened 9 times in all of last year. A lot of that, of course, has to do with that bid for Haven because of the uncertainty around tariffs. And speaking of tariffs, you also saw a big pop today in when it comes to the industrial metals, Scarlett, because of, well, some new tariffs, some additional tariffs, I should say, on steel and aluminum.
That's right, that the president announced last week. All right, let's take a look at some of the names that are moving on those tariffs announcements. Steel Dynamics up about 10% on the day. Nucor also gaining today along with Cleveland-Cliffs. As for Steel Dynamics and Nucor, which are bigger cap, they rose the most in 2 months. President Trump doubling the tariffs on steel and aluminum imports to 50%. They are scheduled to go into effect on Wednesday, which also means there's plenty of time for it to perhaps change as well, given what we know about how this is kind of unfolding. Blueprint Medicines up about 26% on the day. This is after the company is being acquired by Sanofi for $129 a share in cash. That's equivalent to about a 27% premium to Blueprint's last close. And CDW down about 3%. It's an example of an IT company that is reliant on government contracts. According to the Wall Street Journal, the White House is targeting tech companies as it looks to cut more federal contracts. So we're seeing declines in names like CDW, like Booz Allen Hamilton, as well as Leidos. We'll keep an eye on those developments. Now, our top story this hour is how will the constant on-off tariffs show up in this week's economic data? We got an early glimpse in a pair of surveys tracking manufacturing activity, and they showed a pullback in activity as well as a plunge in imports to a 16-year low. That's a stark contrast to earlier this year when some companies were importing more to get ahead of tariffs. In coming days, of course, we're going to get a read on the services industry, which is a much bigger part of the U.S. economy, along with a steady drumbeat of jobs data leading up to the government's big monthly employment report on Friday. Romaine?
Well, speaking of employment, some headlines crossing on Uber. They have a new COO, Andrew McDonald, who basically ran the mobility business, being promoted to CEO. And this is the first chief operating office role at that company since 2019. We're going to get you some more details on that in just a minute. We should also point out that the CEO of the company, Dara Khosrowshahi, says he's, quote, not going anywhere. We're going to get you some more details on that and bring you an update as soon as we can. But we do want to refocus back on the broader U.S. economy here, and particularly the labor market with that big jobs report coming up this Friday that Scarlett just talked about. Francis Donald joins us right now, Senior Vice President and Chief Economist at RBC. And let's start off with Friday's numbers here. I mean, we're not really expecting any material surprises here, but I am curious about what the long-term trend has told you, Francis, about the health of the labor market.
Oh, it's a good question to focus on the long term, in part because we're still getting material distortions in the short term in April data and likely also May. Our focus notice in a lot of this jobs data moving forward is the structural trends of mass retirees and a significantly aging population. Now, that typically remains a structural story that shows up 5 years, 10 years later in a forecast, but we know it's impacting things right now. For example, we're expecting about 160,000 jobs to land this Friday, but half will be in healthcare. So parsing out the structural trends from the cyclical ones will be really clutch. And at the end of the day, we stand by this story, which is America needs workers, not jobs, and this labor market will remain very tight off of supply issues over demand.
Well, that's what I'm curious. Where are those workers coming from, Francis? I mean, is the supply, first of all, of homegrown, native-born Americans going to be enough? And I'd be remiss in not pointing out the crackdown that we've had on immigration, illegal immigration, to be fair, but of course that has ramifications for legal immigration too.
We'll pivot back to just the actual native-born population. The United States has the largest share of those over the age of 65 it has ever had. Over 1 in 5 Americans over the age of 65. And while labor force participation rate seems low for the total economy, it's down near 63%. If you look at those prime age workers, those 18 to 54, that's near record high labor force participation rates at 84%. So every year that goes by, we're seeing more retirees in the United States than they were the year before. That's going to make the employer's job really complicated. It also messes with a slew of our data. For example, if you retire, you don't go into jobless claims, and employers are going to realize if they replace an employee that's retiring with a new hire, that actually doesn't flow into non-farm payrolls. It counts as a zero-sum game. So recognizing just how important these structural trends is and this retirement trend is, it matters now on a month-to-month basis. We can no longer think of demographics as being this long-term structural story alone.
Yeah, that's a really important point, especially as we focus so much on that monthly number. Speaking of the monthly number, at least on the headline, I'm looking at estimates, and they range anywhere from 75,000 to 190,000, with a consensus estimate at about 130,000. Are we going to get a sub 100,000 non-farm payrolls number this month?
Well, that's not our call, but at this point, every economist will tell you the range of outcomes is extraordinarily large, and that's because we're having a very difficult time understanding how this concept of uncertainty will weigh on the economy. Well, if you look at the hard data, especially in April, honestly, when I look at April data, apart from the trade data, you would not be able to convince me if I hadn't seen the news that there was a trade war going on at all. It was a very resilient April economy, but that massive drop that we've seen in sentiment indices, we're still trying to get a sense of how that's going to change behavior. And Scarlett, we just don't have historical playbooks for this huge amount of uncertainty that's weighing on the economy. We see it in things like the ISM data. There was one comment in there today that the administration tariffs was creating supply chain disruptions that rivaled COVID-19. We're looking for any sort of clues that give us a sense of that uncertainty, soft data, hard data side, but we just don't know as economists, and so the range of outcomes is very large. We're scenario analysis over point forecasts right now. That's the name of the game.
You know, as you mentioned, the on-off tariffs are starting to show up, of course, in the soft data and in some instances in some of the hard data as well. I think about the second read of first quarter GDP, and that definitely showed up there. Is it safe to say that once it starts showing up that we're going to start seeing all the hard data reflect the tariff uncertainty?
I don't know how much hard data we're going to see this in. We are anticipating a slowdown over the course of 2025, but Q2 is tracking pretty well. And of course, we're still in massive distortions of front loading and then having too much of an inventory build coming off. But critically behind the surface here in this soft data to hard data story is a theme we've seen for the past several years, which is soft data of consumer confidence is probably oversampling low and middle income households. Those top 10% of Americans are spending 50% of all of the money in the system. So if you want to have a sense of how the consumer in aggregate or the whole economy is going, you really have to bias your analysis much more towards that wealthy American consumer. And that's why we're keeping a very close eye on accommodations, hotels, airlines, discretionary spend as being a better or more helpful indicator than maybe it was even 10 years ago.
Got it. Francis, always appreciate your joining us. Francis Donald is Senior VP and Chief Economist over at RBC. Now, coming up on the close, we've got the top three, where we focus in on the top three movers and shakers at the center of the day's big stories. This is the close on Bloomberg.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper, pick peppers, but run back, grind, Humpty Dumpty fell down, kids all time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It's time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Marc Maron, turning off his podcast mic. The host of WTF with Marc Maron is ending his run after 15 plus years.
Yeah, I mean, this guy basically kind of pioneered this kind of format. I mean, we go back to sort of the old days when he was broadcasting from that, little, tiny garage that he had out there in California. And he really came to my attention, of course, when he had that interview with the president of the United States, Barack Obama.
Yep.
And everybody like, why is the president of the United States, a leader of the free world, going to some guy's, garage in, Fresno or wherever the hell he was.
Participating in a podcast. But he really kicked off that golden age of podcasts, right? Where all these guys get paid a lot of money. But he's hanging it up and going out on a high.
Well, speaking of the golden age, Jonathan Anderson is now joining the luxury brand Christian Dior, naming him as the sole creative director across their men's, women's, and their couture brands. We should point out that he previously was at a brand that just up until about 2 seconds ago I thought was called Loewe, which was Loewe.
Yes.
So I'm not as cultured as I thought I was.
I had to get schooled on how to pronounce it. But before that, he was creative director of Loewe. And Dior, he has his work cut out for him because it's been underperforming all the other LVMH brands in the portfolio.
Yeah, absolutely.
All right, let's take a look at the last person on our list. Jamie Dimon, the longtime JP Morgan Chase CEO, says his retirement is several years away, but the decision is up to the bank's board. Of course, Romain, the 69-year-old Jamie Dimon is chairman of the board, so it's not like he doesn't have a big say here.
Sigh. All right, Jamie's going to do what Jamie's going to do, and of course he's earned it. So we'll see. One day he will step away, but according to him, not for several years. Speaking of changes, though, in the C-suite, we do want to say on that topic, particularly when it comes to the CFOs, a lot of shakeups there, particularly as turnover hit a record in the first quarter. Nina Trentman is senior editor at Bloomberg Editorial who covers this, and I guess I'm not surprised. I mean, it's been a tough job, but what are the numbers telling us?
Yeah, it's a tough job. That's fair. The numbers certainly show us that there's an increase in turnover. Not a surprise if we're thinking about what happened this year. So I'm referring to the first quarter, which is the only period for which we have data.
Yeah.
So we have 95 CFO changes at global companies around the world, which is up from 89, which was a prior year record. And of course, is a testimony to the fact that the job is really hard, and it just got much harder with Trump
and there's no way
doing what he's doing.
Yeah, and there's no way to know if those people voluntarily left or if they were kind of, nudged out.
Yeah, there's always a mixture of wordings that you see in filings.
Spend time with the family.
Retiring,
blah, blah, blah,
then also
all that code.
Moving on, new opportunities. And of course, with some people, you see them landing elsewhere, but also in other cases, you know that they would have just been gotten the boot.
So with all this CFO shuffle, which kinds of CFOs are the most valuable, the ones most in demand right now?
What I'm hearing from recruiters is certainly that people are saying experience and more experience is what people want to see, specifically because right now. Of course, it's not as if anybody can claim that we've seen this before, because for all of us, this is new, and what we're seeing in recent headlines and what Trump is doing is new. But I think what people want to see is some kind of experience of having navigated prior crises, prior sudden changes. So, for example, during COVID. So what I'm certainly hearing from CFOs is that they're saying, and also from recruiters, this is not the time for first-time CFOs.
I don't want to put you on the spot, but I do want to just go back to some breaking news that we had a little while ago involving Uber, elevating the guy who ran the mobility business to the title of COO. And it's kind of, two things I found interesting about it. They haven't had a COO since 2019. And I am curious about the reshuffling that we see at the top. Isn't just about, of course, filling slots, but it's also about the CEO, and more importantly, the board, making a decision about what's most important. So we talk about the importance of, obviously, a CFO's importance, but these roles and how they're changing and what they're supposed to be doing. What are you seeing there?
We're certainly seeing that more CFOs are taking on COO responsibilities as well. So in addition to those very straightforward COO appointments where companies oftentimes might not have had one for a long time, we're seeing also that CFOs are taking on the additional responsibility, for example, at Salesforce and also at other companies, where basically companies are merging roles and giving somebody a really big beat. Interestingly enough, if we look at CEO succession, then the people who most often succeed the CEO come from the COO position. So it's certainly maybe an indication for that. I don't know if I have any inside knowledge there, but...
Well, we should point out the story says Dara Khosrowshahi says he's not going anywhere.
So, well, that's what they all say, right? That's the code that goes along with everything. All right, Nina, always appreciate it. Thank you so much. Bloomberg's Nina Trentman. And don't forget to sign up for Bloomberg's CFO Briefing. This is a weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance by our very own Nina Trentman.
Look at that portrait. I got to get somebody to redo my shot. That is great, by the way.
It's high end.
All right, when we come back, we're going to take a closer look at what's been going on in the world of trade, what's been going on in the world of steel trade. I know you were probably shocked by the big announcement on Friday, right?
It kind of came from nowhere. No one expected it.
Yeah, well, it's kind of interesting, too. It might be a little bit of deja vu all over again. When we come back, we're going to take a look back in history to the origin of these steel tariffs, which, believe it or not, weren't that long ago. This is The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
You're busy. Deadlines are looming. You've got events to plan, people to impress, and a brand to elevate. With 4imprint, you get more than promo products. You get certainty. From trade shows to team milestones, 4imprint gives you personal service, design expertise, and unmatched quality. On time, every time, with a 100% satisfaction guarantee. Be 4imprint certain. Visit 4imprint.com for promotional products that work as hard as you do.
4imprint, for certain.
Got my eye on you, Jake Paul.
Hook me up with a treat.
I love it!
All right, so we know now, President Donald Trump on Friday threw another grenade in the sprawling trade war with the world. This time, the target, steel and aluminum, a vow to boost tariffs on the metals to 50% from 2025. 25%, excuse me. Futures tracking the prices that U.S. manufacturers actually have to pay for that surged today, up more than 50%. But we've actually been here before. In fact, exactly 7 years ago, on this day in history, that was when the Group of 7 finance chiefs meeting in Whistler, Canada, issued a rare rebuke of a member nation, claiming that U.S. trade tariffs at the time would undermine global economic confidence. That rebuke, made on June 2nd, 2018, came just days after U.S. Commerce Secretary Wilbur Ross announced new duties of 10% on aluminum and 25% on steel shipped from Canada, the EU, and Mexico. Canadian producers of everything from oil to farm equipment sent reeling, and Canadian Finance Minister Bill Morneau, well, he went seething, issuing a blistering summary of an acrimonious 3 days of talks with then U.S. Treasury Secretary Steven Mnuchin. A week later, as is customary after the finance ministers meet, the heads of state of the G7 gathered, and things were no less tense. The summit saw the fractures within that group laid bare, as Trump advisor Peter Navarro said there was a special place in hell for Canadian Prime Minister Justin Trudeau, and German Chancellor Angela Merkel famously photographed leaning on that table in a stare-down with an unmoved President Trump. The U.S. president then threatened Japanese Prime Minister Shinzo Abe, refused to sign a joint G7 agreement, and then he left the summit early for that now infamous meeting with Kim Jong-un in North Korea. That was something. And now you fast forward to 7 years later, and it might be deja vu all over again. The players are slightly different, but the acrimony is about the same, if not worse. And that is the backdrop for the next round of G7 talks, which ironically takes place in Canada, starting on June 15th. And yes, President Trump said he will attend.
I can hardly believe that that was 7 years ago. I'm not sure if it feels like less or it feels like longer. I'm still kind of trying to figure that out. But of course, the U.S.'s trade policy is going to be high on the agenda at G7. And here with more on all of this is Lonnie Chen. Lonnie is the David and Diane Steffi Fellow in American Public Policy Studies at the Hoover Institution and Director of Domestic Policy Studies in the Public Policy Program at Stanford University. Lonnie, always a pleasure.
Great to be with you.
Good to see you. So as Romaine showed us, Donald Trump puts himself at the center of all these trade negotiations, the tariff discussions. Right now, he's handed things off to Scott Bessent, the Treasury Secretary. And I wonder how you think about whether he will let Bessent do all the negotiating and come up with a number, or whether he's got to come in at the last minute.
Well, I think it's going to be a combination of both. First of all, Scott Bessent is clearly the ascendant figure right now in the administration on these talks. A lot of trust from the president. Great communicator. You see him out on Sunday shows talking about the president's agenda. So I think there will be a lot of delegation to Jamieson Greer, the U.S. trade rep, Secretary Lutnick, and of course Secretary Bessent. But President Trump's going to want to play a big role in this. He's going to be the one that comes in and eventually closes the deal. I think he sees himself as the closer, the one guy who can probably impose upon President Xi to reach certain agreements. I think it's important to recognize, though, that's not how the Chinese work. That's not how President Xi works. There has to be an orchestrated conversation that starts at lower levels, then mid-levels, and senior levels. That structure is very different from the one that President Trump likes. So we'll have to see how we cross those T's and dot those I's as we get closer to this next gathering, and then potentially when Trump and Xi get together later this year, maybe in the fall.
So I'm glad you bring that up, because President Trump also says that he's likely to speak with Xi Jinping this week. Is that the U.S.'s version of trying to push Xi into a conversation that he's not ready to have?
I think so, but, you know, look, the Chinese leader never comes to these conversations unprepared. I think he will recognize what President Trump is trying to do. I think the big question, of course, will be, is there something that President Xi can offer? Is there something that he, on his side, believes he can give up, so to speak, in this negotiation that will allow President Trump to say, look at what I was able to get, look at this short-term deal we have. I think we're locked into a cycle, Scarlett, of short-term deals until we do reach some of the more difficult structural questions, and that's going to take more time to resolve.
I know the big focus right now is on China, and maybe to a lesser extent the EU, but what about some of the other nations? We haven't really talked at all. I can't remember last time we really had a meaningful conversation about Mexico, and who knows what the heck's going on with Canada, but Trump is going to be there in a couple of weeks. All the G7 leaders are going to be there, so there's an opportunity, at least for the G7 nations, to maybe hammer out something, or at least to try to move talks along, right?
Well, I think that the Canada and Mexico conference conversation will take place in the context of the USMCA renegotiation. I think President Sheinbaum of Mexico has handled the negotiation pretty deftly so far. I think the Canada conversation will have a lot less friction now that Justin Trudeau is gone. I think Mark Carney is a much more, I think the president probably sees him as a straight shooter, someone who's a business guy, someone he can deal with. So I think that discussion will be much easier than it would have been with Trudeau. So I think Canada and Mexico are in progress. The ones I'm really looking at are Japan, Korea, and India. We always thought those would be the first three countries out of the chute. We got the UK. Now the question is, what's holding up Japan? What's holding up Korea? What's holding up India? India is going to be the toughest of the three. I think Japan and Korea relatively easier. But that's what we got to watch for.
Well, Korea's got some issues right now with their leadership that they've got to deal with. But Japan actually seems like that's a little bit more promising, at least based on what we've heard publicly from both sides.
I think so, and the resolution or apparent resolution of the Nippon Steel situation, I think helps to ease some of the background noise that was there. And look, I think the Japanese have made the calculation that in this U.S.-China overhang, they're going to edge a little closer to the United States. And that does make it easier for us to reach that agreement with the Japanese. And I think the interests are much more aligned there. That's why I'm much more hopeful about that negotiation.
How much do you think the U.S. dollar plays into the discussions with Japan, India, or Korea? Because there was some concern on the part of Taiwan that perhaps the White House wanted to ensure that Taiwan agreed to a stronger Taiwan currency in any kind of trade deal in order to make sure that U.S. exports saw a good reception in Taiwan.
Yeah, I think it's part of the discussion. You know, it's very difficult to see these broader trade deals being done without some currency context behind it. And we know how President Trump feels about the dollar. We know what his point of view is there. I have no doubt that some conversation there is going to be part of the scene setting around both of these deals, both Japan and Korea.
All right. Speaking of deals, I want to get your thoughts really quickly on the bill that's making its way now through the Senate after it passed the House. Will this get done before the X date when the Treasury runs out of different options for the debt ceiling?
I have a little more confidence that we'll see that. I don't necessarily think July 4th is a reasonable deadline given the fact that the Senate's a gauntlet. And let's not forget that the agreement that is in front of the Senate now that passed the House was very delicately negotiated. So if you try to take out any piece of that, let's say they try to take the SALT deduction and take that from 40 down to 30 or 25, that may not be satisfactory back to the swing state Republicans who have to vote for this in the House. So my sense is that the Senate is going to have a really tough slog for the next couple of weeks. I think they will get there eventually. But between now and then, you're going to hear a lot of reporting, a lot of news coming out of, we heard this person doesn't like this, Ron Johnson said this, Rand Paul said that. I think it's important to stay away from the noise and recognize that it is fundamentally in the interest of Republicans in the Senate to get something done and to get it done reasonably close to July 4th. I just don't have confidence it'll be done before July 4th.
Yeah, well, I'm curious, though, too, when we talk about the cooperation or maybe lack thereof, I mean, what does that mean for other bills? I mean, we were just talking about trade. I mean, ostensibly, these trade deals, in theory, are going to have to funnel through Congress at some point.
Yeah.
And I wonder if they can't even get, consensus right now on what they want to do with the budget. What does that mean for these big, beautiful deals that might come down the pike?
I think they want to try and structure the deals to avoid congressional approval if they can, because as we've seen, as you said, in Congress, it is a slog. Now, the challenge, of course, now is that the president's use of the International Emergency Powers Act has been questioned by the courts. There's another question about whether they can do these deals legally in the context of this legal situation that's going on in the background. But I think avoiding Congress would be the goal, because once anything gets into Congress, it's game on in terms of potential changes and ways of boxing up the process.
All right. Lonnie, great to have you here in New York. I know it's far away from Stanford over there, out there on the West Coast, but we got some nice weather out here. Lonnie, Jen, David, and Diane Steffi, Fellow in American Public Policy Studies at the Hoover Institution and Director of Domestic Policy Studies over at Stanford University. We do want to continue this conversation on trade, specifically from the side of the EU, the potential for retaliatory tariffs from them, and of course, whatever tariffs we have here in the U.S. that could potentially actually block things here. The EU is warning that it could speed up that tariff retaliation on the U.S. with the next round of trade talks approaching, and that could present a big hurdle for small businesses with ties overseas. That includes a company like Belgian Boys. Now, it's based here in the U.S., Brooklyn, but it's a distributor of European-inspired breakfast foods and was named Instacart's #1 fastest-growing emerging brand last year. Will tariffs upset that? Anouk Gottlieb joins us right now, the CEO of Belgian Boys, and she joins us right here on The Close. Anouk, great to have you here, and I love your products, and I love the progress that you've made in building this company. When you look at the tariffs that the U.S. has imposed, and more importantly, just the general disruption and uncertainty being caused with our supply chain, how have you adjusted, if at all?
First, thank you so much for having me. Really appreciate it. Very excited to be here and talk about our brand and how everything is, how we're on the back end navigating through those. You know, I think tariffs is just one of the business challenges that it's going through. We've navigated through many over the years. As you know, entrepreneurs, you start a business because if you have that passion, that drive, and what we aim to do is to bring that joy to the breakfast table, and we want to navigate all those challenges, including tariffs that are, you know, up or down, and our team is being really, really thoughtful about scenario planning and seeing how every scenario affects so that we can be agile and adapt according to what it will bring.
Are you already facing higher costs to import your goods?
I mean, there are higher costs regardless of the tariffs. I would say the egg market has been something as baked goods that right now eggs are on the way down. Shelled eggs are, but commercial dried eggs are not yet at those levels. So even without the tariffs, costs are up, and what we really want to remain for our consumer is remain attractive from a price perspective, and we're hoping to not have to increase the cost for our consumer.
The chocolate in all your products comes from the Belgian chocolate supplier Callebaut, and I apologize if I can't pronounce that correctly. Have you looked into making alternate arrangements, perhaps getting your chocolate from somewhere else that's not in Europe, maybe sourcing it domestically?
So we have chocolate chips, bite-sized pancakes, and that's real Belgian chocolate that goes in it. We want to bring quality to our product. We have, though, moved some of our manufacturing domestically. We have done that at the beginning of 2024, and I would say that our company, with that shift, has been positioned in a way that we can easier adapt to everything going on right now.
What are your conversations with buyers at grocery chains like in terms of how much flexibility are they requiring from you? What are you able to do, and how are you able to respond as a result of their requests?
We're really being open, having those open dialogue, transparent, sharing that we're working on it with our partners, that we have plans to mitigate, and they're understanding, right? Like everyone is facing those question marks and those uncertainties, but just like any challenge, you just, I think entrepreneurs and small business owners are optimistic to default, and I think that optimism is really what stays grounded. My team has been excellent at the communication, the transparency, and I'm really looking forward to just moving through this as a hurdle, and we'll get out of all of this stronger. I know that.
What are you doing right now, Anouk, in terms of your long-term planning, in terms of growing this business? When we talk about small businesses, I know you have to deal with a lot of the day-to-day, week-to-week stuff, but I'm sure you also have an eye on what this business will look like 5-10 years from now and beyond. Given the short-term issues right now, what is that outlook?
Well, we keep focused on our strategic plan. Our strategic plan has not changed. We are today in 12,000 stores nationwide, and we're growing our distribution, just bringing more breakfast to Americans nationwide by partnering up with new retail partners, getting into new channels, and we're just excited to have our product be more available in more retailers across the country.
All right, Anouk, really appreciate your joining us. Anouk Gottlieb is CEO of Belgian Boys, and she is joining us from Brooklyn today. Waffles, so good.
Yeah.
This is, I mean, you are a big fan. You have this regularly, it sounds like.
Well, I don't have it regularly, but yeah, I mean, I enjoy a nice little waffle. And I mean, look, I just don't understand how these companies, though, continue, right? Because it's the idea that the costs are going up, and it's also the uncertainty, right? They might go up how much? 10%? Maybe they go up 30%.
25, 30, yeah.
You don't know. So how are you modeling that in as a business? And I would just think that has to be very difficult for her to do right now.
Right. I really liked your question. Appreciate the question about what does this mean for your long-term plans, because you still have to make those plans regardless.
Yeah.
And if you can't see 3 months, 6 months out, how can you see 6 years, 10 years out?
Yeah.
All right, let's take a look at how markets closed on the day.
Well, here's a big question. Are you a waffle person, pancake person, or French toast person?
Waffles.
Okay.
Belgian waffles all the way.
Why? Because it holds all the syrup?
Yeah, it's just good. I mean, pancakes I feel like are a waste of carbs, but waffles to die for. All right, let's take a look at how markets closed on the day. Stocks did open under pressure because of the weak manufacturing data, but we closed at session highs. The S&P 500 adding 0.4%. What's been consistent throughout this, though, is a weak dollar. The U.S. dollar falling against all the G10 currencies. The Bloomberg Dollar Index now at its lowest in almost 2 years. Oil prices higher, so we often see those move against each other. And Romain, you highlighted this earlier. Yields higher across the curve, especially at the long end.
Yeah, absolutely. And this is going to be a big part of the story. We were talking earlier today about potential buyer strike that we're seeing on the long end of the curve. Of course, a lot of economic data and some big this week, and of course some big auctions next week. This is The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Has all your soon-to-be favorite entertainment in one place.
I smell something burning.
The latest hit movies.
I'm just giving the people what they want.
The newest shows and seasons.
I think we have a situation.
Son of a...
And thrilling live sports. It's do or die. Looks like you just found a new favorite streamer.
Are you with us?
Explore what's new to stream on Paramount Plus.
Media mogul Byron Allen is selling 28 of his local TV stations, hiring investment bank Moelis to help source buyers. The move comes as Allen looks to reduce debt and take advantage of potential deregulation in the broadcast business. Chris Palmieri joins us right now, who helps to lead our media and entertainment coverage out of Los Angeles. He spent a lot of years, Chris, building up this portfolio of TV stations. Why is he selling now?
Yeah, 6 years to be exact, spent over $1 billion. A couple of things. We've reported that the bonds, he owes almost over $1.5 billion in total debt. And it's been trading at a discount, which suggests investors don't think they're going to get paid. There was some of them organized last year to sort of committees to sort of protect themselves if there was a reorganization. On top of that, it was a very strong year for broadcasters last year because of the election, of record political spending, and a lot of excitement in the industry, as you mentioned, over potentially deregulation. And so for those reasons, he sees as an opportunity to sort of sell and pay down debt.
Okay, so he's looking to sell 28 local TV stations. Where TV stations located, and how many does he have overall? Is this just a portion of his portfolio?
Them all. It depends on the offers, but they're in 20 different cities, all in the U.S. Honolulu, probably the biggest market. Tucson, Madison, Wisconsin, Tupelo, Mississippi. In some cases, he owns a couple of stations in each market. They're all affiliates of the big four networks. What the thought process is, if the FCC allows people to own, right now there's limits both nationally and in local markets. If people can add more stations, they can save money, operating them together. So that's the play. That's been the play for a while, and there's potentially a lot of opportunity there.
Is there anything to read through into this potential sale, about just the health of local stations? Because, I mean, he made a big bet, not only on this financially, but he, as you know, he was a big evangelist for this idea that local news, particularly when it comes to weather and things like that there was a huge market for that would stand the test of time, even as you saw the rest of sort of maybe the linear TV space kind of implode to a certain extent.
Yeah, that was the play, and it's certainly been true in terms of sports. Everybody's watching the big football games, basketball games, still on broadcast TV. It's been a lot more challenging on the entertainment side, and overall, there's just a feeling with everyone cutting cable TV subscriptions, and they're not really being able to replicate that audience online. That it's just going to be a challenging business for people that own local stations.
What is he looking to expand his investment on, his efforts on? I know that he was kind of a perennial name whenever we were talking about the bidding war for Paramount, his name was always mentioned, although it didn't get as far as the others. So I'm just curious what his long-term strategy is here.
Yeah, he definitely threw his name in the ring whenever a big deal came about. Look, he's a really remarkable guy. I think he got his start on The Tonight Show when he was 16 years old as a stand-up comedian. He produces over 70 TV shows. He's got one coming up in September on CBS in the 12:30 a.m. slot after Colbert, Comics Unleashed by Byron Allen. So just a really busy guy, a very unusual individual to be both a TV host and a business person like this. Still owns the Weather Channel, cable network, has these digital channels aimed at all kinds of niche audiences, produces the shows. He'll still have a substantial business, even if he sells all the local stations.
All right, good stuff. Chris Palmieri, thank you so much. Bloomberg's Chris Palmieri covering media companies for us there in Los Angeles. Still ahead on the close, we'll give you an idea of what to watch for over the next 24 hours. There are still more earnings, believe it or not. This is The Close on Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving. Now stream. Celebrate your favorite music at the American Music Awards.
Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
Paramount Plus has all your soon-to-be favorite entertainment in one place.
I smell something burning.
The latest hit movies.
I'm just giving the people what they want.
The newest shows and seasons.
I think we have a situation.
Son of a... And thrilling live sports. It's do or die. Looks like you just found a new favorite streamer.
Are you with us?
Explore what's new to stream on Paramount Plus.
Join Meredith Vieira and play along to 25 words or less on Pluto TV. Clever.
Catch 25 words or less all weekend long right here on Pluto TV. Stream now, pay never.
All right, let's set you up for what the markets are going to have their eyes on over the next 24 hours, and that includes some earnings both here in the U.S. and in China.
Yeah, we've got EV maker NIO reporting, of course, its ADRs trade in the United States, and Dollar General, another read on the low-income consumer. Earnings are expected to decline because they're dealing with a higher promotional activity and also lower margins.
And kind of weird, too. You would think that if there is economic softness, consumer softness, that a company like that would benefit, but all the benefits seem to be flowing to Walmart. We're also going to focus in on the tech space with HPE CrowdStrike reporting after the bell tomorrow.
Yeah, and certainly we've seen CrowdStrike in the cybersecurity sector of tech become a real safe haven for a lot of investors.
Absolutely. And then about 5 a.m. Eastern time, we're going to actually go over to Europe where we're going to get some economic data.
Yeah, and I was looking at this. CPI is set to slow to 2% year over year, and on a month-over-month basis, no inflation.
Well, that's good for us. So should they be starting to cut rates then?
Well, they're not necessarily here.
Meanwhile, back here in the U.S., we are going to get a closer look at our economic situation, a drumbeat, of course, to the jobs data, but also a closer look at what's going on in U.S. factories.
Yeah, U.S. durable goods as well as factory orders, and both of them are seen falling for the month.
Yeah, and of course, we got that ISM data this morning, which seemed to suggest softness in that space. Of course, an update on the S&P PMIs as well. Of course, Team Surveillance will have full coverage of all of the economic data that comes out 8:30 a.m. Eastern time, and then Scarlett and I will be back tomorrow for all of your markets coverage. For all your political coverage, stick around. Balance of Power is up next.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Anything better than settling in to watch our favorite shows?
Want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in.
I'm not letting that walk.
And spend time with the CBS stories we love.
You're my Sherlock now.
I'm very good at what I do.
Go, go, go! Full seasons are all available on Paramount Plus.
I like it. Yes!
So get comfy. We're here for you.
I could use an ally. Someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hosier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus. Join Meredith Vieira and play along to 25 words or less on Pluto TV. Clever.
Catch 25 words or less all weekend long right here on Pluto TV. Stream now, pay never.
Every episode, we're in on demand. Without a trace, watch it anytime on demand on Pluto TV. Stream now, pay never.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
Tonight, the Trump tax bill's next big hurdle, the Senate. We're on the Hill this evening as the Senate reconvenes, poised to make major changes to the president's signature big, beautiful bill that narrowly passed the House.
We'll speak with our reporters and discuss what this bill could ultimately look like when North Dakota Senator, member of the Senate Banking Committee, Kevin Cramer, joins us.
Plus, a brazen drone strike deep inside Russian territory. Ukraine taking out Russian long-range bombers and leaving Moscow alarmed over their sudden vulnerability. What the escalation means for a potential ceasefire as another round of truce talks ends.
Also tonight, the expected phone call between President Trump and Chinese President Xi, as both Washington and Beijing accuse each other of violating their latest trade agreement. What it means for the long-term prospects of those much-promised trade deals.
And a horrific attack in Colorado, targeting a march in support of Israeli hostages. Now the president blaming lax immigration policies for the presence of the suspect. Why? And the charges against the alleged attacker up ahead.
But we do begin with the developments from Capitol Hill, where senators are returning to town for the first time since the House passed that big, beautiful bill, as President Trump likes to call it. Now, time for them to make their mark. And joining us live from Capitol Hill, of course, as always, Bloomberg's Eric Wasson is on the scene. Eric, how many changes this legislation in for?
You know, I think it's going to be quite significant. Have a ping-pong effect going back and forth that could delay the process. He also said the next 2 weeks are going to be taken up by working with the Senate Rules Keeper to see how much in the House bill, whether it's AI regulation, something called the REINS Act that basically sunsets existing regulations and it gives Congress a say in them, can make it through. There's a lot of doubts among budget experts whether they're allowed, because the Senate says anything using this special expedited budget procedure has to be budgetary in nature.
Yeah, so the parliamentarian could cause some problems here. When we think of other potential troublemakers, Eric, whose voices will be the loudest and most influential? Those who argue cuts are not going far enough, or those that argue cuts to Medicaid and other programs are going too far?
I'm starting to think that they may neutralize each other. We do have four key senators, Mike Lee, Rand Paul, Rick Scott, and Ron Johnson, who are all saying they want deeper cuts. Ron Johnson's talking about $5 trillion in cuts. There's about $1.5 trillion in cuts in the House bill. He's probably not going to get that amount, but he could put some more concrete proposals on the table and try to get them through. But one of the key places they could go is to Medicaid, which already sees the deepest cuts of any program in the House bill. But to really do that beyond the work requirements and cost sharing, such as copays that are in the House bill, you would have to really go and start limiting the federal match to the states, sort of really eroding further Obamacare's expansion of Medicaid to less poor individuals. And that's really a no-go for these moderates like the Lisa Murkowskis of Alaska of the world. Josh Hawley today tweeting that he talked to President Trump and they agreed no Medicaid benefit cuts. It's unclear what he means exactly by that. There's a sense that the president's also cognizant that a lot of his supporters may be using Medicaid to afford health care and health insurance, and it could be politically disastrous to cut it further.
All right, Bloomberg's Eric Wasson, thank you so much. And Bloomberg is just learning via spokesperson for the Senate Majority Leader John Thune. Thune met with President Trump today. To be a fly on the wall in that room. And a question, of course, as to whether the president echoed what we heard from a member of House Republican leadership earlier today. The Republican Conference Chair, Lisa McClain of Michigan, warning about possible changes the Senate could make to this bill.
I hope they don't do many changes to reduce the amount of savings, right? I think we've hit the sweet spot. I don't believe they'll make many changes to Medicaid because, again, that was a very delicate balance, and SALT is obviously very important. So I don't see a lot of changes that they really can make. We really can't have a lot of changes. It is not going to be positive for the American people if we do that. It just makes everybody's job way more difficult.
Joining us now from Capitol Hill for more is Republican Senator Kevin Cramer of North Dakota, a member of the Senate Banking Committee, live with us here on Bloomberg TV and radio. Senator, we appreciate your time. Would you be prepared to vote yes to the House bill as is? And if not, what changes do you need to see?
Well, that's a really great question. I think I start with a yes vote. I think, Kaylee, that's where I begin. I want this to pass, but there's no reason that the Senate should just simply rubber stamp it when we can do so much better, in my view. I think it was interesting listening to the leader from the House say that they hope we don't, that they don't think there's any way to find more savings, and I think that's really the thing we have to do. We will not be able to pass the bill without finding some more spending cuts, to Eric's point, by the way, in the piece, and I think he summarized it very, very well. And we can do that without going after Medicaid benefits, but we ought to go after some of these schemes around the country where individual states are using Medicaid to pad their own state pocketbook rather than actually providing the services. So there's things we can do. SALT, she brought up SALT. She hopes we don't reduce SALT. Well, it went from $10,000 to $40,000 of deductibility. It seems to me that anything over 10 should be something that a moderate from New York would like. So maybe we can bring it to 30 or 20. I do think, though, by and large, it will look similar to the House bill, but we just may be able to find some other places for savings and maybe make some of those tax policies permanent, by the way, that you talked about up front. I mean, the biggest piece of the Tax Cuts and Jobs Act from 2017 that we need to fix is to make those tax cuts permanent. Those are pro-growth tax cuts, and if we want to make a dynamic economy even more dynamic, I think that's got to be sort of the foundation of it all. So it will look largely the same, but I think some of the numbers will change.
Mm-hmm. Of course, the parliamentarian's going to weigh in here, Senator, and I'd love to ask you about what you think survives the bird bath, which is just getting underway here. What would comply with the Byrd rule, if you will, when it comes to budgetary procedures that end up in a reconciliation bill? I don't know what bird droppings you see ending up on the floor here, but will the current policy baseline method of accounting that was used in the House survive the parliamentarian?
Yeah, that's a great question. I don't know, but I think it should, because the fact of the matter is that, to your point, it has to be budgetary. So that means it has to, any part of this bill has to either deal with revenue, i.e. taxes, up or down, or spending. The appropriations piece, up or down. And to the degree that there's some policy changes, that has to be, sort of incidental, not extraneous. So no doubt some things may not make it, and there may be some things Republicans in the Senate want that may not be able to make it. On the other hand, there might be some real opportunity there. So the parliamentarian has a lot of, final say over here. We're not likely, if ever, to overturn the parliamentarian on the Byrd rule. Otherwise, it would be, violating the Senate basically. I don't know what's going to make it or what's not going to make it. All I know is that the Tax Cuts and Jobs Act, making those pro-growth tax policies permanent, is the first thing we ought to do, and then finding further savings in spending ought to be the other thing. One of the reasons we're doing the big bill rather than pieces of legislation is, you might recall there's a little PTSD around here from those of us that were here in 2017 when the House first passed repeal and replace of Obamacare, and it failed by one vote in the Senate. I think everyone thought if we put it all together, all of these pieces together into one big, beautiful bill, you get more people supporting it. At the same time, you find more things that people can be opposed to. So we'll see if the strategy even works out.
Well, of course, the strategy from this administration is also, when looking at the holistic impact on the deficit, it's one thing to consider the tax mechanism, which can be scored by the CBO, but they also argue tariffs have to be factored in, that the revenue driving force of tariffs will help offset some of these tax cuts. But you just spent time over recess on a congressional delegation to Canada trying to potentially smooth things over with Mark Carney on trade. Is it your opinion that tariffs need to be lowered with key allies like Canada, or that they should remain where they are so that you get the income?
Sure. Well, I think tariffs as a trade negotiating tool are fine, and with that in mind, I don't think every country's treated the same, because I don't think every country behaves the same. And so I do think there's some room for improvement with Canada. There might be room for improvement with other trading partners. What I worry about, and to the degree that tariffs would be considered as part of the reconciliation package, the problem with that is, while you can certainly score a tariff, if you can presume a certain amount of revenue coming from a tariff, I think that's relevant. But it's not relevant to the bill itself unless it's part of the bill. So you don't get to really score it against the reconciliation package. And that gets a little clumsy. But what really matters here is reduction of the deficit, to your point. And that's why I think you have to look at the whole of the Congress, the whole of the administration over the course of an entire Congress, 2 years, not just one bill versus another bill.
Senator, I'm sure you stopped in your tracks as a member of the Senate Armed Services Committee when you saw this attack by Ukraine against Russia over the weekend. Remarkable to see them smuggle drones into Russia and cause the amount of damage they did against the country's strategic bomber fleet. Two of your Senate colleagues, Democratic Senator Richard Blumenthal and Republican Senator Lindsey Graham, were in Ukraine over the weekend to meet with President Zelensky and had this to say about it. Bipartisan bill that you support that would impose new sanctions on Russia. Let's listen together.
The Senate and the House of Representatives in the next 2 weeks will be moving forward with a sanction bill that's bone-crushing.
There are very few causes that will take 41 Republicans and 41 Democrats, put them on record on a single piece of legislation. It doesn't happen these days. The cause of Ukraine is doing it.
Senator, there are great questions about whether Russia will strike back and how. What would make these sanctions different than prior rounds?
Yeah, so these sanctions are bone-crushing, to Lindsey's point, because they go after not just Russia, it's not just primary sanctions on, say, Russian banks or Russian oil, but secondary sanctions on those that would do business with Russia. And when forced, when other countries are forced with the binary choice of, gee, do we want to be a customer of or a provider or a supplier for Russia or the United States of America? Do we want to face the onslaught of American sanctions, or would we rather hang out with our buddy Vladimir Putin? And I think given those options, it would be a very bleak moment for Vladimir Putin, not just, by the way, because of the drone strikes, but the economic problems that he would be created for him. Well, first of all, he wouldn't be able to afford the war. Too many of even some of our frenemies are helping him supply cash for fighting this war. So I think they would be bone crushing. He should be concerned enough that there are 82 senators on this bill. The fact that they would pass easily, and I think it should incentivize Vladimir Putin to get to the ceasefire and get to the table. And then you throw in the drones and Ukraine's ability to do what they did is really remarkable. But the other thing, as a Senate Armed Services Committee member, that I can't help but think about is our own vulnerability as a nation. We're working on this Golden Dome to intercept and take down missiles that would come from distances far, far away. But we also have to guard ourselves against exactly what happened to Russia, and lest we be watching the skies as we get attacked from within.
Could the Golden Dome, we're out of time, Senator, could the Golden Dome have stopped an attack like that with drones, as we saw?
Well, this is why the Golden Dome has to be multi-layered. We think of a dome as just sort of looking out into outer space, looking at ballistic missiles, if you will. But no, you have to have a multi-layered from under the sea, the top of the sea, the ground, underground, and all the way up to space. Right. It has to be very, very, many, many layers. And I'm not sure we're as prepared as we need to be.
Let's talk more about that next time you join us. Republican Senator Kevin Cramer of North Dakota. We thank you, sir, for being here on Bloomberg. Some Republican lawmakers have been facing tough crowds, as we've told you, during local town halls because of the proposed cuts in the tax bill we were discussing with the senator. One of those lawmakers, Republican Senator Joni Ernst of Iowa, at an event last week was asked about the impact of these proposed Medicaid cuts. It went viral. Here's what she had to say to critics in the follow-up response.
People are not, well, we all are going to die. So, for heaven's sakes, folks.
I was in the process of answering a question that had been asked by an audience member when a woman who was extremely distraught screamed out from the back corner of the auditorium, "People are going to die." And I made an incorrect assumption that everyone in the auditorium understood that, yes, we are all going to perish from this earth.
Bleak. For more, we turn now to another lawmaker from Iowa who held her own town hall, by the way, during the recess over the holiday. Republican Congresswoman Ashley Hinson of Iowa, member of the Appropriations Committee, the House China Select Committee, is back with us on Bloomberg. Congresswoman, welcome. It's good to see you. Did your senator just make a political mess for you, or did Joni Ernst put this story to rest in that graveyard?
Well, thank you, Joe, for having me. First and foremost, I can tell you that the Democrats' fear-mongering is the real problem here about Medicaid. They're out there continuing to lie about what's in the big, beautiful bill, and so I actually really enjoyed the opportunity to get out in my district and do 2 in-person town halls. I did one in Elkader and one in Decorah, and I will continue to do that, get out there and answer Iowans' questions, because I had people who legitimately need Medicaid coming to ask me these questions. I had Nicole from my district saying, hey, I need to make sure that these are around for me because I am disabled. And so I was able to actually dispel a lot of the fear-mongering and misinformation out there about these benefit changes. And so I think that the Democrats' fear-mongering is the real problem here.
But Congresswoman, it's not just Democrats. There are Republican United States senators who also have concerns about these cuts for Medicaid and are pushing for changes to the bill as a result. Is there any changes they could make that would make you a hard no when it returns to the House?
Well, I think the Republican senators probably are looking at all of the details right now of how many illegal immigrants we're removing from this bill. 1.4 million illegal immigrants getting health care. I'm pretty sure they support getting them off the health care rolls. I think they probably also support making sure that we don't have people who are enrolled in 2 states getting Medicaid benefits. And I'm pretty sure that they also support making sure that able-bodied adults are the ones who are actually in the workforce if you're going to be receiving a government benefit. I think most Americans also agree that we should make sure that that policy is in place.
So I think that we'll be willing to have conversations with our Senate colleagues about this big, beautiful bill, but it is of utmost importance that we make some of these changes to Medicaid for the program long term, because this is about preserving benefits for the people who actually need them, not making cuts. Again, I think most people can agree people who can work should be working.
It sounds like you don't really see many changes coming from the upper chamber, Congresswoman. I don't know if I'm right about what I'm hearing from you, but do you expect that this bill comes back in similar shape that you sent it?
Well, I think so, and I think ultimately, I've had conversations with many of my colleagues in the Senate. We all want to make sure we're executing on President Trump's agenda, making sure we're providing tax relief for hardworking Americans. Again, the fear-mongering that's out there about this bill, I think it is driving a lot of the conversation about making changes. And I heard Senator Cramer just a few minutes ago.
Well, I don't think Republican senators are fear-mongering about deeper cuts, though, right? If they want deeper spending, isn't that something you'd support?
Yeah, I want to get the most conservative bill passed that we can get consensus on, and that's what I will continue to support. So as we continue to have those conversations with our Senate colleagues, we do have a very narrow majority in the House, and I think everybody saw the conversations that we had to have with some of our members who maybe had a little bit of disagreement as well about how much to cut, or maybe thought it was cutting too much. So I think we, again, hit that really sweet spot in getting that bill passed, and I look forward to continuing those conversations, and hopefully in the future we can do more. Let's prove to the American people that Republicans are the ones who can govern. We're the ones who know what to do with the economy. We know that returning taxpayer dollars to taxpayers is what we should be doing. And we also know that making these changes long term will help to right the direction of our country. This is what President Trump ran on. This is what I ran on. And that is exactly what we have to deliver for the American people.
Well, Congresswoman, you and I both know the president also ran on tariffs, and given your seat on the China Select Committee, I do want to ask you about the accusations the U.S. and China are now trading, each saying that the other has violated the agreement struck in Geneva. President Trump and Xi Jinping potentially could speak by phone this week. Is China a credible actor in these negotiations?
Well, I think those allegations are categorically false, but I think the most important thing is that we get to a good deal, a deal that's enforceable with China. I'm hearing from Iowans every single day. We want to make sure that we have access to markets, and China is an important market for our farmers and our manufacturers in Iowa. But at the end of the day, we need to realize, eyes wide open, that China can't be trusted. They're looking for every loophole, and they've worked around every single policy that we've put into place. I believe in strong enforcement of tariffs and duties, and so I'm working on legislation that will also help to make sure our Department of Justice can go after the bad actors who are trying to cheat. And so that's the mindset that I would go into in any conversation with President Xi. And I know President Trump's the one to get that deal done. He's a master deal maker, as we know.
All right, Congresswoman, great to have you back on Balance of Power. Joining us from Bloomberg's global headquarters in New York, Republican Congresswoman Ashley Hinson of Iowa. We appreciate it. And coming up, the fallout from President Trump's steel and aluminum tariff announcement and what it means for those ongoing trade deal negotiations.
But first, Russia and Ukraine wrapping up their latest direct peace talks in Istanbul a day after Kyiv staged one of its boldest aerial attacks deep inside Russia, destroying long-range bombers and other aircraft. We'll discuss what this means for peace negotiations next. This is Balance of Power on Bloomberg TV and radio.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Emergency. Somebody killed two girls. My grandbaby and my friend. We're dead. We're dead. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons. Russia and Ukraine held their latest direct peace talks in Istanbul today, with the two sides exchanging documents and preparing for another prisoner exchange. But this was held just after Ukraine staged a bold aerial attack inside Russia, destroying long-range bombers and other aircraft. And joining us now with the latest is Bloomberg's Greg White, here with us in our Washington, D.C. studio. So, Greg, obviously this was a kind of show of covert force for Ukraine. How did it change the nature of the conversations that were had today?
Yeah, absolutely. It's a really remarkable asymmetric strike by the Ukrainian forces. They, according to their account, they smuggled drones into the country and were able to launch them from close to these bases, strategic bombers that can also carry nuclear weapons, deep, thousands of miles deep inside Russian territory. And according to the Ukrainian accounts, and some of which have been confirmed by the allies, that destroying at least a couple of the planes. So that's really a big boost for Ukrainian morale, and so at a time when the Russians have been arguing that time is on their side, and that this is going to that they have all the cards, and that's a line we've heard also from the White House for Kiev to show that they actually are able to pull off this sort of daring attack is really a big boost on that side.
Incredible to see. If you saw this in a movie, you would think it was impossible. They worked on this for over a year, apparently, to get this many drones. They smuggled over 100 drones into Russia. That would suggest there could be a lot more where those came from. Is Ukraine capable of another strike like this?
It's hard to know. I mean, they've adapted tactics over the course of the war. They said for a while, they were doing relatively long-range strikes with their own drones flying from Ukraine. But then Russia got pretty good at shooting those down. And so this is a kind of new twist. And whether they'll be able to pull this off, again, obviously the logistics are quite challenging. But it definitely shows a weakness in the Russian defenses.
We just have 30 seconds left, Greg. But will there be another round of talks between Ukraine and Russia after today?
So the Ukrainians said that they're going to look at the Russian proposal, which they first saw today, which seems very far from their own. And there was talk about a possibility of a meeting later this month. But it looks like nothing so far has been set.
Boy, we've got a long way to go, it sounds like. Bloomberg's Greg White, thank you for the update. After a remarkable weekend, Kaylee, this is the type of thing that we never thought we would see from Ukraine this deep into Russia. They hit a target in Siberia.
Yeah, a military target specifically, of course, also coming as Russia over the weekend hit more civilian targets inside Ukraine.
Pretty remarkable. And we'll have much more on this coming up. We'll continue the conversation on the latest between Russia and Ukraine. Hagar Shamali of Greenwich Media Strategies is up next. With myself and Kaylee on Balance of Power, this is Bloomberg TV and Radio.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Introducing Wegovy through Hims. Ready to lose up to 20% of your body weight or more? Through Hims, this FDA-approved treatment for weight loss is available for 50% off. Now you can feel confident about losing weight and keeping it off, all at an affordable price. Hims offers access to personalized weight loss treatment plans that promote sustained, long-term weight loss and improve your overall health. Get weight loss results that last with Wegovy through Hims. Start today at hims.com.
Is there anything better than settling in to watch our favorite shows?
Want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in. I'm Madeline Matlock. And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do.
Go, go, go! Full seasons are all available on Paramount Plus. I like it. Yes! So get comfy. We're here for you.
I could use an ally. Someone I can really trust.
You can trust me. CBS Originals now streaming on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris! Sorry. This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink! The Late Show with Stephen Colbert. You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
911 emergency. Yes, somebody, don't you go. My grandbaby and my friend.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50% the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that.
President Trump at a U.S. steel facility in Pennsylvania on Friday, announcing a doubling of steel and aluminum tariffs, which threatens to increase the cost of critical building materials. For more here on Balance of Power on Bloomberg TV and radio, let's turn now to Bloomberg's Catherine Lucy. And Catherine, indeed, we saw futures for steel and aluminum spiking today, but we also saw a big boost for shares of U.S.-based steel companies like Nucor, for example. And the president is arguing that for whatever potential higher input costs some businesses could face, this is still good for the industry.
Right. He's arguing this is good for U.S. steel and good for U.S. workers. Obviously, there is a push-pull with these things where these are complicated global equations, right? You also saw today that European officials are threatening that this could be problematic for negotiations on a trade deal with the EU. And so there could be real implications here if this goes forward.
This announcement came Friday. In fact, we were carrying Donald Trump's speech from outside Pittsburgh that we just saw a piece of. It was pretty deep in the speech, which surprised us that this wasn't a headline announcement as soon as the president got to the podium. Would that suggest that it may not be permanent? What do we make of the timing?
Yeah. Trump is always going to do things his way. Sometimes honestly, I think sometimes he likes to build up to things. So it could be as simple as that,
But
quite
the timing
honestly.
in terms of now, why double it now?
One, I think he wanted to get out in front of workers in Pittsburgh. He wanted to have something to deliver there. And Trump always takes sort of a maximalist or like a big approach to these negotiations. So if he feels like things aren't moving as quickly as he wants to with other countries, with these tariff talks, he feels like going big can sometimes force people back to the table or force progress. So some of that thinking is injected into a lot of these announcements.
Sure. Well, certainly the president is of the mind that things are not progressing in the right direction when it comes to negotiations with China specifically. And we heard from the White House press secretary Caroline Leavitt about that earlier today.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
The two leaders she's referring to, Catherine, being Xi Jinping and President Trump, both sides having had accused each other of violating the Geneva Agreement in recent days. Is this really going to happen?
The relationship here is not in a great place. Both sides are accusing each other of bad faith for different reasons with what is a pretty fragile detente. And as far as we know, they have not spoken since Trump took office. So if there is a call, that would be a significant step forward. But we really have to wait to see if this actually happens. Trump, I think, is more eager for it to happen. He sees direct negotiations, direct conversation as a way to push this forward. And some of his top officials are saying the same thing. They think that this is what needs to happen for the recent progress here.
Bloomberg's Catherine Lucy. We thank you, Catherine, for the great reporting here on Balance of Power. Here's Senator Michael Bennet earlier today on the Senate floor addressing the attack that took place over the weekend in Boulder, Colorado.
People all over this country and all over the world have marched in solidarity for our hostages, and yesterday the people in Boulder, Colorado were savagely attacked by a terrorist while they were expressing their First Amendment rights. That should never happen in this country.
Here's what we know. A 45-year-old man was arrested for allegedly throwing an incendiary device into a crowd at a Colorado event supporting Israeli hostages in Gaza, injuring at least 12 people.
The suspect used a makeshift flamethrower, yelling "Free Palestine" during the incident, which the FBI is investigating as a targeted terror attack. 16 unused Molotov cocktails were later recovered from the scene. Today, he was charged with a federal hate crime and 16 counts of attempted murder. The man is a citizen of Egypt and has been living in the U.S. on a visa that expired in 2023.
The incident sparking renewed concern now about anti-Semitic violence here in the U.S. Less than 2 weeks after the two members of the Israeli embassy staff were killed just outside the Capitol Jewish Museum here in Washington, D.C.
This afternoon, President Trump responded to the incident in a post on Truth Social, saying in part, quote, "Yesterday's horrific attack in Boulder, Colorado will not be tolerated in the United States of America." He goes on to say acts of terrorism will be prosecuted to the fullest extent of the law.
We'll continue to bring you updates from this story as it develops. Joining us now with their reaction, Bloomberg Politics contributor Jeannie Sheehan Zaino, senior democracy fellow at the Center for the Study of the Presidency in Congress, and our Democratic analyst tonight, alongside Republican strategist Matt Gorman, executive vice president at Targeted Victory. It's great to see both of you here. Jeannie, we've been talking about this terrible story since the early edition of Balance of Power. Now that you're actually seeing that this could have been worse, unused Molotov cocktails, it does make you wonder what kind of violence could be spreading onto our shores here as this conflict continues in the Middle East.
Absolutely, Joe. And it's been throughout Europe. We've seen incidents at synagogues and at other Jewish community centers in France. We've seen attacks on young Jewish people in London. We've seen these attacks in the last several weeks. You know, everyone from the governor of Pennsylvania to the two young people from the Israeli embassy, and now this horrific attack. So it does seem to be spreading, and it is an enormous concern. You know, the Anti-Defamation League is reporting that incidents of violence and terror against Jewish people or people of Jewish descent in the United States were the highest in five of the last 6 years, were the highest that they'd ever recorded. And that is saying something. And of course, our hearts go out to the poor victims in this attack, which was horrific, and one of whom was a Holocaust survivor.
Well, and that is why, Matt, that this is raising concerns about anti-Semitism. But the president is actually taking this beyond that. The part of the Truth Social post that we didn't read also suggests this is yet another example of why we must keep our borders secure and deport illegal anti-American radicals from our homeland, given this was someone who had overstayed a visa years previously. Does that risk kind of muddling the wider issue here on anti-Semitism?
There's two issues, I think. Clearly, this jives with his immigration agenda. He should not have been here in the first place. But secondly, I guess what I'm troubled by is we don't see the same sort of reckoning we saw in the summer of 2020 with race that we should be seeing right now with this anti-Semitic violence. I mean, obviously you pointed out the Capitol Jewish Museum murder, but also there's the Josh Shapiro firebombing of the executive mansion in Harrisburg, Pennsylvania. These are not one-offs. And, you know, I think it's an incredible state of our society right now. This keeps happening, and we have to have it stop. It's absolutely unacceptable.
Mm-hmm. Free Palestine was chanted in both of these cases, with the two murders here and with what happened in this case in Boulder. How do politicians need to be talking about this? You're the Republican on our panel. Is Donald Trump setting the model for that here?
It's in two ways, right? Immigration absolutely have placed his strengths. It's a very valid issue, and certainly what he's talking about it, but also Michael Bennet, who's the son of a Holocaust survivor, running for governor of Colorado. He was right on this too, and I think, you know, the middling statements, there's no time for that, and I think both of those have hit the right note on this.
I do want to mention some news that just crossed the terminal, according to Senator Ron Johnson, saying that he spoke with President Trump today. Senator Johnson, of course, being one of those in the upper chamber who have raised concerns about the House-passed tax reconciliation bill that is likely to see changes in the Senate. We spoke about that with Republican Senator Kevin Cramer of North Dakota earlier this hour.
The biggest piece of the Tax Cuts and Jobs Act from 2017 that we need to fix is to make those tax cuts permanent. Those are pro-growth tax cuts, and if we want to make a dynamic economy even more dynamic, I think that's got to be sort of the foundation of it all. So it will look largely the same, but I think some of the numbers will change.
Some of the numbers will change, Jeannie. We're just wondering if they might change in a deal-breaking way for the House. How drastic could these Senate changes realistically become?
Yeah, I mean, they're going to have to try to keep them in line with something that can pass muster in a very thin margin in the House, and that's going to be the challenge here. And, you know, so far, and it's fascinating to hear Ron Johnson talking to the president, because so far there are enough deficit hawks on the Republican side in the Senate to stop this bill without substantive changes. Now, I think in the end they will get those changes. I think this will pass the House and the Senate at some point. But then you're going to have a Republican Party that has to go out and sell this bill to the American public. And what are they going to be facing? They're going to be facing pictures of Elon Musk with a chainsaw talking about cutting people from the federal government while they are cutting Medicaid for people in their own districts and states, children and elderly people. It's going to be a very, very tough sell, which is why these deficit hawks, in a way, are doing them a favor by putting this concern up front. And by the way, on the deficit, it pocks on both of the houses, both Democrat and Republican, because nobody has been responsible on this, and this bill is not responsible on it.
Well, that's sounding like Ron Johnson. Jeannie, he says Donald Trump pressed him to support the tax bill. But when you step back and look at this, Matt, you've been through a couple of these. Ron Johnson's got something in common with Mike Crapo's got something in common with Mike Lee's got something in common with Tom Tillis. Yep. You've got a lot of arms to twist here. Is this how it's done? Phone calls from the president?
We're in the posturing phase right now.
Okay.
No one's going to want to be seen to be taking this at face value from the House. But the political reality is this. There's a much thinner margin in the House than it is in the Senate. So this is going to have to look a lot more like the House version than whatever the Senate people have in their dreams. That's just the political reality of this. Because, frankly, if they can't pass anything, then everybody loses on this. And I think that is, the Senate doesn't want to be seen as taking this outright from the House. I understand there might be a little bit of hierarchy there in their minds. But at the end of the day, it's going to look a lot more like what Mike Johnson wants than what the Senate wants.
Considering Mike Johnson has members in states like New York who could make or break his majority in 2026. But I also want to talk about the state of New York, not for House electoral reason, but for the gubernatorial race. Jeannie, you're obviously up in New York, where we've just gotten news that New York's lieutenant governor is going to challenge in the primary Governor Kathy Hochul. The quote from that Lieutenant Governor, Antonio Delgado, says people are hurting and New York deserves better leadership. What does that say to you, Jeannie?
It is just fascinating. I am not surprised. I think we saw this coming. Kathy Hochul has struggled. She is not particularly popular. And you do see a contingent of Democrats saying we need to go in another direction if we are going to retain the gubernatorial seat, the governorship here. And of course, they can have a formidable Republican challenge on their hands, whether it is, you know, one of the representatives from New York. We've heard a lot about maybe a Mike Lawler or somebody else, or Elise Stefanik. I mean, there's a bunch of people on the Republican side. So this is going to be a hard-fought race. And of course, we also have the mayor's race coming up in New York City. And I mention that only because the leader on the Democratic side there is Andrew Cuomo, who used to be governor of New York. And I was really hoping to see him and Kathy Hochul re-established together, which would have been fascinating, but it won't happen.
There's just nothing like New York politics. That's why Jeannie's here. Look, I guess this is a gift for Republicans. What do you do, though, if you're a governor and the call's coming from inside the House?
I mean, this speech says more about Kathy Hochul's weakness than Antonio Delgado's strength. I mean, she has the political acumen of this desk. She's always been a bad candidate. But look, you know, Antonio Delgado's an ambitious guy. He won his seat in Congress when I was at the NRCC. He shouldn't be underestimated. But Jeannie's exactly right. The New York mayoral race between Zora Mandani and then Andrew Cuomo is subtly also having a lot of juice in a way that I think a lot of folks didn't expect either. Mandani could sneak out at least a victory in the primary.
Well, that's one of the races that we'll be watching ahead. Another race we're going to be watching in 2026 that arguably you would think would be a senator that would be seen as safe is Senator Joni Ernst, who's up for re-election in Iowa after having in a town hall this weekend when pressed about whether or not there was a risk to people's lives due to SNAP and Medicaid cuts, said we're all going to die, and then seemed to double down on it in a social media post in the graveyard that we all need to kind of come to terms with our own mortality. think that's the right strategy here, Matt?
It was a joke, certainly. But like, I think one of the things, Joni is pretty talented politically. We're far off away from Election Day. And it's also, she won her seat in large part through Bruce Braley's comments that were caught on video back in 2014 that were unfortunate. But I think she'll easily come back from this. J.D. Schultz running against her as a Democrat. He's been in the state legislature a little while. She's pretty talented. I don't worry about Joni. I worry about a lot of other people, not Joni's.
I don't know. Are we making too big a deal out of this, Jeannie? This is the age of Trump. You don't apologize for something. You make your critics look ridiculous, right?
Well, you try, but it's awfully hard to sort of parrot and do what Donald Trump does. And for me, the video, the folk apology fell really, really flat. I do think she's a good politician. She hasn't been displaying that in the last few days. And of course, the reality is Joni Ernst was under attack not that long ago from the far MAGA right
in terms of the Pete Hegseth nomination. And so she's feeling the heat and she's responding.
All right, Jeannie Sheehan Zaino, Matt Gorman, great analysis and a great panel. Thank you for the conversation.
And there's another story we're watching tonight, Joe, following Poland's presidential election. The victory going to nationalist candidate Karol Nawrocki, complicating efforts to shift the nation back into the European Union mainstream. Nawrocki won 50.9% in Sunday's ballot, according to the results reached by the Electoral Commission early Monday.
The election outcome may add to elevated instability in an increasingly fraught geopolitical environment, with the country's prime minister now, Donald Tusk, seeking for a vote of confidence to shore up support for his coalition government. Tusk is aiming to reestablish unity in the cabinet and has an emergency plan in case of difficult cooperation. His words with the new president, Karol Nawrocki.
The ascent of the conservative historian and one-time boxer with scant political experience also marks a rare win for Trump's MAGA movement abroad. We'll continue to follow his new role and how it will impact relations between the U.S. and the EU moving forward. But still ahead, we'll revisit the conversation on the latest between Russia and Ukraine. More of that next on Balance of Power on Bloomberg TV and radio.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you. It's very satisfying to be able to... Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Who's our suspect now? Who did this?
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel. For a stream-along of Mission Impossible Rogue Nation.
We saw credible evidence of a summer, early fall invasion, a new offensive by Putin. He's playing the game at the peace table. He's preparing for more war.
Putin is playing President Trump. He's taking him for a sucker. He is, in effect, stalling and stonewalling, prolonging the conversation so that he can mount this offensive and take control of more territory on the ground.
Democratic Senator Richard Blumenthal there, along with Republican Senator Lindsey Graham, speaking after a visit to Ukraine over the weekend. The pair also urging the U.S. and Europe to take steps to stop China and India from purchasing cheap Russian oil, with Senator Graham now aiming to have new sanctions imposed on Russia before the G7 summit in late June. For more, we turn to Hagar Shamali, the CEO and founder of Greenwich Media Strategies, former director for Syria and Lebanon on the National Security Council in the Obama administration. Hagar, it's always great to see you. Welcome back to Bloomberg. I know I'm supposed to ask you about sanctions against Russia, but after what we saw over the weekend, the resourcefulness and the cleverness to execute a mission like that, Ukraine striking deep inside Russia, if that had been going on the last couple of years, would we even need sanctions? To execute a mission like that.
It's remarkable what they did. The sheer creativity and genius of that attack that they had been planning apparently for 18 months. They called it Operation Spider Web, I believe, or Spider something, where they smuggled in drones into Russia through trucks, and then these roofs opened up and the drones flew out and struck these air bases. And the importance of that is that there are restrictions on U.S. and European weapons that go to Ukraine in terms of how they're used inside Russian territory. And the Ukrainians showed yet again that they can be very creative, very scrappy, and very lethal. And they're certainly trying to fight this war as smart as they can. But to answer your question as to whether we would have needed sanctions, yes. I mean, you know, I'm a sanctions lover. And so I do believe that sanctions are important still in undermining this extent to which Putin can finance his war machine.
Well, it is what Putin might do next that I want to ask you about, Hagar, because today on the early edition of Balance of Power, we spoke with Kelly Grieco, a senior fellow at the U.S. Reimagining U.S. Grand Strategy Program at the Stimson Center, and this is what she had to say about Russia's potential response, specifically what she wouldn't rule out.
I don't think Russia's going to use a nuclear asset in response to this, but I can't totally rule it out. I think it's worth saying, and that gives me pause that I'm even having to say that. I think they're going to look, though, for something that is very visible, and I think signaling not just to the Ukrainians, but I think at this point they're going to want to signal to the United States and even China, that its nuclear arsenal is not vulnerable, that it's able to still operate effectively. They want to signal to the United States and even China.
It gave us pause as well, Hagar, when she said that. Do you agree with her?
Well, I mean, to be honest with you, for the last 2 years, Putin has been playing that nuclear card. He's been publicly saying, anytime he feels desperate or cornered, he does say publicly, oh, well, I have these tactical nuclear weapons that I could easily use in Ukraine. And he doesn't. And that doesn't mean he's bluffing. He's not somebody that I would just assume is bluffing, because that's dangerous and would be naive. But at the same time, he's not an idiot, and he knows what using his nuclear weapons would mean, and that it would elevate this to a whole other level. And he is, and we need to remember this, that both sides are trying to still actively appease Trump. That's why they're even involved in peace talks. Otherwise, they wouldn't be right now. Both of them are still at it, to be honest with you. And Ukraine is there because they don't want to lose their aid, and Putin is there because he wants to maintain this positive relationship with Trump, and he doesn't want to face additional sanctions, which is a threat he takes seriously. But if he were to use nuclear weapons in Ukraine, then any relationship he has with Trump is off the table. So I don't want to say it's not a threat to be taken seriously. Of course it is. But I also wouldn't jump to that conclusion so quickly. That said, Putin will respond in a tough and strong manner. to be taken seriously.
So that's going to happen. We're going to be talking about it at some point, if you're right, in the days ahead. Hagar, when you consider the talks that were held today in Turkey, the events of this weekend, what you just predicted, are we moving further away from or closer to peace? When you consider the talks that were held today in Turkey,
so here's the things that I would look for in these peace talks. I would not expect any major breakthroughs, certainly not a negotiated end to this war. But there are small things that you could look forward to. For example, another prisoner swap. That's what you got out of the last time they had talks. Potentially just a promise to continue those talks. Or, for example, one of the things that Ukrainians have put forward is a direct meeting between Zelensky and Putin. So there are small steps that could come out of these talks. That's the type of those are the type of deliverables I would look for, but I wouldn't expect anything major at all.
What about your expectations around the proposal that has been put forward by the U.S. to Hamas and Israel for cessation of hostilities there, Hagar? We know there has been some pushback from Hamas. Steve Witkoff has called Hamas's response unacceptable. Is this also just an effort that will yield little there, Hagar? We know there has been some pushback.
So I'm glad you asked me about this because we're going to rinse and repeat this a few times, to be honest with you. And the reason is that you've got three different parties with three completely different conflicting goals. And as a result, I expect multiple outcomes of proposed ceasefires that don't end up happening. And the reason is that on the Israeli side, Netanyahu's goal is to obliterate Hamas completely, no matter what, and try and release the hostages in the process. But he wants to see Hamas obliterated at any cost. On Hamas's end, they're just trying to survive. They want to maintain some kind of weaponry, perhaps the potential for governing again. But most importantly, they don't want to touch their weapons, and that is a complete red line for Netanyahu. And on the U.S. side, the goal, frankly, has been the same as it was under Biden, which is a general end to the war, humanitarian aid going in, and the release of hostages. And that's why the U.S. continues to push these proposals and why Israel accepts the idea of a temporary ceasefire, because that's how they can at least get the hostages back. But they're not willing to negotiate an end to the war because it's not in their cards, and Hamas won't negotiate without that as part of it. So they're going to keep pressuring Hamas more and more. So sorry to give you the down and dirty of it, but I don't have a lot of optimism for this, unfortunately.
Well, that's why we come to you, Hagar. We appreciate it as always. Hagar Chemali, CEO and founder of Greenwich Media Strategies, of course, also formerly with the National Security Council. Thank you so much. And as we continue to follow geopolitics, we'll be following domestic politics as well. As the Senate is back on Capitol Hill, we're learning some senators have had conversations with President Trump about this big tax bill. The Majority Leader, John Thune, yes, but also holdouts like Ron Johnson.
Yeah, the phone's already ringing. This is going to be an interesting week as we work our way to the jobs report on Friday with a lot on the line here for Donald Trump and his reconciliation bill.
And of course, you can find more coverage of it in the Washington Edition newsletter on the terminal and online. And we'll see you back here tomorrow on Balance of Power on Bloomberg TV and radio. Of course, you can find more coverage of it in the Washington Edition newsletter on the terminal and online. And we'll see you back here tomorrow on Balance of Power on Bloomberg TV and radio.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns. Try to keep up. Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits. I love it. Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Let's do it.
Now stream. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hosier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus. Watch all the excitement.
911 emergency. Somebody took him, girl. My grandbaby, my friend. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you. It's very satisfying to be able to look at a bad guy.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Release the mink.
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Pluto TV has 3 classic sitcoms all in one place.
And what if upstairs and pull around? No.
Classic TV Families channel on Pluto TV has 3 classic sitcoms all in one place.
There's no doubt that 2023 was the year of Barbie.
Hi, Barbie.
Hi, Ken.
From the doll's big screen debut to 165 brand integrations, Barbie Pink was inescapable.
Here we go, Barbie Day 1.
But years before cameras started rolling on the Barbie movie, Lisa McKnight had been working on transforming the iconic doll's image.
So we did a lot of soul searching, and we did a lot of work to go back to the original purpose of the brand. Why does Barbie matter?
As Chief Brand Officer of Mattel, Lisa has gone from reintroducing Barbie to the world to championing everything under Mattel's umbrella. So you're taking some of those successful initiatives and moving it across to your other properties as well.
Yes.
Turning the toy maker into a global brand powerhouse.
We believe Mattel has one of the strongest catalogs of IP in the broader industry.
But can Mattel replicate the Barbie movie's success? Or was she a one-hit wonder? I am Raja Rajamannar, Chief Marketing and Communications Officer of MasterCard and a best-selling author writing about our industry's future. Marketing as we practice today was founded on theories and principles from more than 6 decades ago, long before the advent of the internet, social media, or artificial intelligence. I have had a front row seat as new technologies, cultural shifts, and an explosion of data have disrupted the ways of traditional marketing. To connect with the savvy consumers of tomorrow, marketing as we know it must take a quantum leap forward. This is quantum marketing. Founded in 1945, Mattel is one of the largest toy companies globally. Boasting a portfolio of hundreds of products, Mattel is the owner of brands like Hot Wheels, Fisher-Price, American Girl, and of course, Barbie. Lisa McKnight has been at the company for over 25 years.
Great to see you.
She took over as Barbie's global head in 2016 and has played a leading role in the brand's transformation. I visited Lisa at her office in Mattel's headquarters to learn how she turned Barbie once again into a global phenomenon. You joined Barbie in 2016, and this is a brand which is more than 60 years old. Now you fast forward it to 2020 and 2021. It's the world's #1 toy property. That is one heck of a transformation. How did you do it?
Oh my goodness. Well, we had a bit of a situation almost 10 years ago where the brand was losing relevance. Barbie was still popular with kids, but parents that even grew up playing with Barbie no longer felt great about giving Barbie, for example, as a birthday present to a friend's party. They didn't see Barbie as a role model. They felt that she was out of touch in terms of reflecting the world that they were seeing around them, and they wanted something better for their daughters in particular. So we did a lot of soul searching, and we did a lot of work to go back to the original purpose of the brand. Why does Barbie matter? Why was she created? We looked and took a lot of inspiration from Ruth Handler, the co-founder of Mattel and creator of Barbie. And the reason why she created Barbie almost 65 years ago was to inspire her daughter that she could be anything when she grew up. She wanted Barbie to be a source of female empowerment. She didn't like what was in the marketplace at the time. There were only baby dolls available to girls.
When I grew up, I like to be a mommy.
You can play mommy right now with Ideal's Betsy Wetsy. So that encouraged girls to role play nurturing, caregiving, being a mom, which is wonderful. But she wanted her daughter to have other opportunities too, like her son had. He was playing with toys that encouraged him to be a firefighter, to be a doctor, to be an astronaut. So Barbie was created as the very first fashion doll, and we took a lot of inspiration from that original purpose. And we used that purpose to guide the next 6+ years of transformation. In addition to, of course, shifting our marketing message to focus on limitless possibilities and Barbie as a point of inspiration, we also transformed the product line dramatically. And that takes more time. We were able to turn on the marketing message sooner than we could affect the physical product. With the physical product, we added massive diversity to the line. Today, Barbie is the most diverse doll line in the world.
Wow.
Different body types, different ethnicities, different abilities.
A reflection of true reality.
A reflection of true reality. And, that took time to iterate, and we're still adding more to the line. We are really, taking that calling seriously. And then many other things that we've done over the years to make Barbie a positive role model, to get us to where we were, as you said, in our peak year of 2021, where we were the #1 doll, but also the #1 toy in the world.
It's extraordinary. After 60 years or 65 years.
Yes.
What an incredible accomplishment it is. And you have done something called the Barbie Dream Gap Project. Would you just elaborate it a little bit?
Yes. Well, as part of the brand transformation, over these past 8+ years, we felt that it was important that Barbie, with the North Star being around female empowerment, that we backed that up with a social mission initiative. We did some research partnering with a researcher actually at NYU who observed, about 7 years ago that starting at the age of 5 or 6, girls in particular start losing confidence in their abilities and their capabilities and start seeing themselves as maybe less competent than boys. And so obviously that was upsetting to us, and we wanted to learn more and understand, well, how do you mitigate that? How do you close that gap? So we created an initiative to even the playing field for girls and to raise consciousness around this dream gap issue. And we work with a lot of partners around the world, different organizations that work directly with girls, whether it's Girls Who Code, whether it's helping girls learn about finance, all sorts of organizations that help girls believe in their own capabilities, leadership, etc. We've been a proud supporter of. And today, I think our latest number is we've impacted over 25 million girls with the Dream Gap Project.
Congratulations.
Thank you.
Profoundly meaningful. Profoundly meaningful.
Thank you.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
The equivalent of what it took other leagues 25 to 30 years to achieve.
I have been in many industries before, but not in toy industry. I love toys, and I love indulging my friends' daughters or granddaughters or grandsons, giving them toys and playing with them and so on. What is unique about marketing in the toy industry?
It's obviously a very fun, emotionally charged category to market because most of us grew up playing with toys. Some of us still play with toys or we collect toys, but we have an emotional connection to the toys and brands that we played with. So that's very rewarding and satisfying, that emotional charge that you get when you pick up something physical and you have a memory of nostalgia and wonderful times playing as a kid. But what's unique about this business and what's actually more complex than meets the eye is that we have many constituents and audiences that we need to think about. We need to think about the core user, which in most instances is a child. We need to think about marketing, though, at the same time to the shopper, who's typically a parent or an adult, in that child's life. And now we're seeing an exciting trend with adult collecting and people and fans making self-purchases. So that's a third audience.
So this is grown-up adults who are collecting these dolls just as a hobby.
Yes.
Fascinating.
Yes. So we have three audiences that we need to think about. You've got to then think about stretching that media budget accordingly and prioritizing. But ultimately, what I would also say about toys, which people don't necessarily think about, is that it's a fashion trend business. This is a business that has low barriers of entry. Hot toys can come from anywhere and can take off. And so it's really important to be constantly innovating and reinventing even legacy brands like Barbie.
And in a way, Barbie did. After spending years developing a feature film, Mattel and Warner Brothers released the Barbie movie in theaters on July 21, 2023 in the US. Now, a company like Disney starts typically producing a fantastic movie, and then that equity flows into the products, the toys. You have put that on its head. You flipped it completely. You had an existing property and you took it to the film world. How did this work? And just give a little bit of insight into your thinking on this.
We see our toy brands as IP, and in fact, we believe Mattel has one of the strongest catalogs of IP in the broader industry, inclusive of the entertainment industry. And yes, our brands originate in physical toys, which is really interesting. So to your point, we think about how do we extend and expand the audience for those brands, and how do we create deeper connections and deeper engagement. And with the Barbie movie, for example, we have a history of storytelling with Barbie. We've created animated movies targeted to kids for decades, but we had never taken Barbie to the big screen and brought her to life in live action. And it was something that we had entertained, discussed, met with various folks for creative takes throughout the years, but it really wasn't until Anand Kreese joined our company as our CEO and comes from an entertainment background that he really helped accelerate conversations, in this instance with Warner Brothers. And from there, we got the right talent with Margot Robbie as a producing partner and certainly the star, but also Greta Gerwig as screenplay writer and director. And when we found that combination, as well as an incredible cast and many other amazing filmmakers attached to the project, we knew we had a story that we were finally ready to tell.
The film smashed box office records and became the highest grossing release of the year, earning $1.4 billion worldwide by year end. Barbie became Warner Brothers' highest earning global release ever, unseating 2011's Harry Potter and the Deathly Hallows Part 2. Greta Gerwig also made Hollywood history by becoming the first solo female director to have a movie hit $1 billion. Barbie broke all kinds of box office records, and some of the numbers behind, at least from what I have seen in the press, are pretty mind-boggling, absolutely. And not only that, beyond the numbers, there was also a lot of these cultural ripple effects. Can you talk about this?
Well, we worked on this film for almost 6 years, so this was a long time in the making. You know, and certainly the pandemics happened in the middle of all that. We had lots of time to think about the marketing activation and the surround sound that we wanted to create. I mean, you know, we wanted to paint the world pink, and obviously we wanted to have a giant sort of play date with the world, as well as have everyone recontextualize Barbie as we sort of look to the future. So we had time to think through all of that. But nonetheless, you know, timing is everything. And we were very fortunate to, frankly, be coming out of the pandemic when the movie marketing started to hit. Fashion runways were leaning into the color pink. Interior design was leaning into the color pink. That trend got named Barbie Core.
Wow.
It could have been Pink Core,
Right.
but it was named Barbie Core because there was that obvious connection between our brand and the color pink. And so that was something that we immediately, you know, jumped on and tried to amplify however we could in social and so forth. And then the first look pictures started to come out and leak from the movie, and the fandom started to build. And by the time we got to the summer of 2023, the world was ready to party. Everyone wanted a reason to convene and to celebrate and have conversation and build community. And that's exactly what happened with the movie.
Yeah, I think what's fascinating is it's not only a success as a movie, but the marketing behind that is also equally a huge success. And you don't have any previous experience marketing movies, did you?
No, no.
So how did you sort of cross that bridge and got into a completely new sphere of what does it take to market a new movie? And you know, extending brand is one thing that's terrific actually in itself. But if you're getting into different industries altogether, it's not just about brand extension, but it's also about new ways of marketing that would not dilute in any way of your core marketing, yet it extends the success in the new domains.
Yeah, it absolutely was a new muscle for me, for sure. I will share that, again, when Anand became the chairman of Mattel and CEO, he did establish a legitimate Mattel film division. And so we hired a colleague of mine, an amazing woman, Robbie Brenner, to run Mattel Films. So right out of the gate, Robbie and I had a great partnership where, you know, she absolutely knows about movie making and how to, you know, surprise and delight audiences. You know, we knew we wanted a bigger 4-quadrant film. This was not going to be a kid's movie, and I know the Barbie brand, and so we worked very complementary together as we provided notes and, you know, did immersions and so forth for the filmmakers. When it came to marketing, of course, I worked very closely with the Warner Brothers studio marketing team, Josh Goldstein. I'll never forget having lunch with him on the Warner Brothers lot, and right out of the gate, you know, he was basically sharing, you know, you're going to start getting uncomfortable because there's some things that we want to do to be provocative, especially when we think about teasing the film. And so the film marketing strategy was absolutely more adult targeted and was intended to make sure that, you know, we got a broad audience and that people that thought they knew what the movie was would be completely surprised. But to do that, there was some messaging that he and Greta, of course, put forth. And I'll never forget, in one of the first trailers, the line in the trailer was, if you love Barbie, this movie is for you. And if you hate Barbie, this movie is for you. Well, as a marketer, as a brand steward, why would I ever feel comfortable saying if you hate the brand? Why would I ever put that out there? So we had a lot of discussion and debate, but of course I got there. And, you know, it was all about trusting these incredible creative partners, appreciating their expertise, and participating and collaborating, but also, you know, recognizing that they you know, helped us reach sort of new heights that we didn't know were possible.
But you also had 100 plus partnerships, I understand, right? The key thing is when you're particularly looking at multiple industries targeting at once, and you're crossing over from your traditional domain, so to speak, these partnerships are vital. And you have got more than 100 partnerships in this whole space. Talk a little bit about that.
Well, that was also, as I mentioned, an important initiative of ours is we wanted Barbie to be omnipresent, and we wanted to show up in as many unexpected places as possible, as well as expected places. We wanted to fuel fandom beyond our core kid audience, and so we thought very differently about the partnership approach than maybe we've done in past years. We ended up working with over 165 partners around the world in almost every category you can imagine, from apparel to wall coverings to luggage to inline skates, beauty, and so forth. We were in over 500 million retail doors around the world. And we thought about brands that we either had a shared mission with, we worked with some female founder brands, or we looked at brands that just were leaders in their space. But we were choiceful. There were absolutely some brands that we didn't work with, even though it does feel like we had casted a wide net. Leaders in their space. But we were choiceful. There were absolutely some brands that we didn't work with, even though it does feel like we had casted a wide net.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
It's a beautiful day in this neighborhood.
Make your day extra. Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
It's a beautiful day in this neighborhood.
Make your day extra. Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
It's a beautiful day in this neighborhood.
Make your day extra. Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
It's a beautiful day in this neighborhood.
Make your day extra.
And the winner's car gets immortalized into a die-cast toy, which is really fun. Of course, the irony is that our die-cast cars are also all these other real-life cars. So we kind of, again, go back and forth. But Hot Wheels is doing really well also in digital gaming. Again, the racing play pattern naturally translates to digital games, console, mobile, etc. And, we do have a Hot Wheels theatrical in the works.
So you're taking some of those successful initiatives and moving it across to your other properties as well?
Yes.
Now, we have seen a bunch of announcements about other cinematic releases that are going to happen with your properties, other properties, right? Do you see any challenges now that you have set such a high bar for yourself, which is not easy to reach or cross? And how do you see about you'll bring the successful learnings from this to really take it to, as high as where Barbie is today?
Well, I'm really excited about Masters of the Universe, which we've announced. That will be coming to theaters in June of 2026.
Okay.
But we're very excited to see what that does to the franchise. It's an opportunity to reinvigorate the franchise. It's an origin story. And again, taking a lot of learnings from Barbie. But what's exciting is that because of the Barbie movie, not only do we have a ton of incoming interest,
not surprisingly,
to partner with us and to tap into our catalog of IP, but also I think a lot of these creators are wanting to also challenge maybe their way in to some of these brands and stories. You know, everyone, I think, is being pushed to think even more broadly, think even, you know, more unexpectedly. Robbie Brenner, who runs our film division, is about creating great stories that connect with audiences and build fandom for our brands. But not every film is going to be the size, the magnitude, or even have the budget of a Barbie, and that's okay. You know, we're looking at all different types of collaborations and executions. But the primary goal is to put great storytelling out there, and if we, again, accelerate other product purchases and, you know, create that deeper fan engagement, that's a big plus.
Has the company changed as a result of the success of Barbie?
I would say yes. You know, we've had for about 5+ years an approach to brand management called the Mattel Playbook, which is driven by 4 pillars. Brand purpose, which we talked a little bit about.
So all of our brands are focused on, you know, why they matter, what's that intrinsic value that they bring to consumers. Cultural relevance is another really important driving force for us. You know, how do we stay connected to culture? How do we ensure that many of our brands that are decades old are timeless but also timely? I would say 2 shifts that we've made recently in that playbook approach has been we now operate with a franchise mindset. So we think about our toys and any one category as brands, but also ideas. You know, we think about how do we translate these ideas to experiences, to other categories? How do we stretch our audience? And then relentless focus on the consumer. We've always been very consumer-oriented. We've always been a design-led organization, but we now are really honing in on consumer, audience, and fan in an even more surgical way than before.
So, Lisa, in all the marketing successes that I have seen in the recent past, your company certainly stands out beautifully. And Barbie is not just going to be a flash in the pan, even if it was a gigantic splash in the pan. But I think you'll have immense success, and I wish you the very best of luck. And thank you so very much. Much appreciated.
Pleasure. Thanks for coming in.
Thank you.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Oh. Hey, did you find the manual?
Yes, of course I found it. Ow. No, I need that.
Summon Dale!
Who's Dale?
A real human.
I'm Dale. American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
I need my phone back. Fix it over video chat with American Home Shield. Sign up today at ahs.com.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards.
Hosted by Jennifer Lopez. Now streaming on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
I must admit, I have not always been a Formula One fan. Cars just zipping past, and then you wait around for the action to come back. Where is the fun in that? But when I finally turned on the Netflix series Drive to Survive, I caught the bug.
It's the speed, it's the technology, it's the cars, it's the drivers, it's the race car, it's the politics, definitely a soap opera.
The docuseries, along with a myriad of other marketing initiatives, saw Formula One's numbers improve in North America over the last few years. But while the sport might have a new legion of fans, many of its racing teams go back decades. McLaren Racing is one of these teams. From its first race in 1966 to today's star drivers and high-tech cars, McLaren Racing is a true innovator in motorsports marketing.
Our sport is a sport on the field and off the field, and then you have technology that's woven throughout it, and then embracing technology and understanding how it works to have this very intimate connection.
I am Raja Rajamannar, Chief Marketing and Communications Officer of MasterCard and a best-selling author writing about our industry's future. Marketing as we practice today was founded on theories and principles from more than 6 decades ago, long before the advent of the internet, social media, or artificial intelligence. I have had a front row seat as new technologies, cultural shifts, and an explosion of data have disrupted the ways of traditional marketing. To connect with the savvy consumers of tomorrow, marketing as we know it must take a quantum leap forward. This is quantum marketing. McLaren Racing was founded by Bruce McLaren in 1963. Today, the team competes in several races, including IndyCar, electric car races, Formula E and Extreme E, and esports. And of course, they're one of the top teams in Formula One. Zak Brown, the CEO of McLaren Racing, has a background in both racing and marketing. I was fascinated to learn more about what it is like to lead a world-class racing team. You know, in fact, I must admit straight out of the door that I have not been in F1 till about maybe 9 months back. I started getting involved a little bit watching the Netflix series, binge watching literally, and reading about it and so on, and the bug had bitten me. Now I'm spending a lot of time following F1, the drivers, the teams, and actually getting passionate about it, which is pretty fascinating.
It's great to hear it. I can't tell you how many times I've heard, and I think we got to give a lot of credit to Netflix, people that didn't follow Formula One that have gone from I never followed it to avid fans. And it's been an amazing journey. I hear that often from North America, which Formula One wasn't that popular, and I hear it from a lot of women, a lot of youth. So it's brought in great new fans such as yourself all around the world, and it's been wonderful for our sport.
You know, this is one of the most iconic brands, and now what, you are 60 years old as a brand?
Yep.
Even after 60 years, it is still at the top of its game. Now, in a world where brands are they go up and down pretty quickly, the cycles are much shorter, 60 years is several lifetimes. Can you share something about the founder of the company, Bruce McLaren himself?
He was a racing driver, team owner. He was a designer, an engineer, very aspirational, and I think a bit of a marketeer. If we go back to how we became Papaya, that was Bruce McLaren's idea. He wanted in a black and white era for the car to be more noticeable, so he actually painted it Papaya because he wanted it to stand out in black and white television because it kind of reflected differently than other colors. So I think Bruce was very well-rounded, a Grand Prix winner, won Le Mans, so a proper racing driver, and so he founded the racing team in 1963, passed away at Goodwood in an accident in June in 1970. It's his legacy and his inspiration that drives us forward to this day, and I think very much what McLaren stands for today is what it stood for 60 years ago with Bruce McLaren pioneering, engineering, racers, marketeers, and just a real passion for motorsports.
McLaren's popularity and success hit a high point in the 1980s with the rise of Brazilian racing superstar Ayrton Senna.
Who was Ayrton Senna? If you know, you know. But if you don't, he was the Babe Ruth of our sport. A total legend, icon, 3-time world champion, won all his 3 championships with McLaren, and he unfortunately was tragically killed in Imola, Italy in 1994. May 1st, I remember it like it was yesterday. Very passionate Brazilian legend of our sport, and sorely missed by all of our fans. What we did this year was his 30-year anniversary of his passing, so we celebrated Ayrton Senna. This is his helmet here, very iconic colors. So we actually painted our racing car this year at Monaco Grand Prix, where we finished 2nd and 4th, both cars in Senna's livery. And it was the largest ever livery takeover campaign, so we changed the identity of our entire car, and the fans went nuts. And everyone in Brazil, which is a huge market for Formula One, was so appreciative.
Now, during the days of Senna, the McLaren was riding extremely high. I think down the period of time after his passing away, there has been a little bit of a slowdown, so to speak. And you have joined at a time when I think the transition happened that Liberty Media has bought F1, and you came into McLaren around the same time. And if I remember right, prior to that, you're running your own marketing agency, correct? So you're a marketer, quintessentially at heart and in spirit, and you joined to take over a highly technical, technologically sophisticated, data-intensive organization.
So my background, obviously, I used to race professionally, and then when I stopped, I created a motorsports marketing company. I always had a big passion for kind of marketing, fan engagement. I've never really been super technical. I still am not, just don't tell that many people. And so what I was used to was racing that I felt comfortable with. Running an organization of 1,300 people, I was comfortable with because that was the size of my marketing organization. I was comfortable with the commercial side of the sport. So when I joined, we were 9th in the championship. It was the worst year in the history of McLaren. Our corporate partnerships were at a record low. Our morale was at a record low. Our fans were pretty upset with us. It was not a good environment, but I saw that all as opportunity that it could kind of only go one way. So to come to marketing, the first thing I felt I could do to help the team was rebuild the commercial side of the sport of our racing team, because I knew if I could do that, I could bring in resources to let the technical team get a new wind tunnel, new CFD, new manufacturing facility, because we had fallen behind in technology. So I immediately went to where I was most comfortable, which was making a commercial difference. I knew that McLaren was this mega brand, mega team that made it easier to bring in partners and share with them the vision of where we were going. Started doing that, which then made the technical team happy because I was starting to give them more toys to work with. It took some time, but I believe sport and the world is all about momentum, and I needed to reverse this downward momentum and get the kind of the snowball picking up pace going the other way. And you know, I've been here now 8 years. The first 2 years felt like 8 years. And this 8 years now feels like 2 years because now it's fun, and we're winning races on a regular basis.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Now, taking a little bit of a different tack, you got two companies. You got the racing company and you got the car company. How do they both coexist and feed into each other and to sort of, be symbiotic in terms of adding back to the brand and also deriving back from the brand?
Absolutely. So our automotive company, it was interesting, Ferrari built road cars to go racing way back when. We're a racing team that has now built road cars, and we're all about technology, we're all about innovation. So when you buy a supercar, you buy them for different reasons. A McLaren, you're buying for the technology and the forward thinking, and there's a real passion between our automotive customer base who love our Formula One team, and then our Formula One team, not everyone can afford a McLaren, but it's very aspirational. So we work very closely together. We leverage our kind of dealer network to talk to our high-end customers, and so we're very much collaborating. You'll very rarely see a McLaren road car without a Formula One car next to it, and vice versa, because we do share a brand. We're two separate companies with common ownership, but the businesses are different, but I think we have a lot of commonality in how we bring our brand to market, how we engage with our fans and our drivers level.
McLaren's skill at building high-performance cars is critical to the racing team's success. Roaring around hairpin turns at 200 miles an hour requires precision engineering and technology, both inside and outside the vehicle.
We're definitely the most technically sophisticated sport in the world. So from a racing point of view, we're running 50 million simulations over a race weekend. We're pulling down 1.5 terabytes of data, 300 sensors on the race car. There's nothing going on that race car at any time that we don't know exactly what's going on.
You know, it came as such a big surprise to me when I started getting into this space. The engineering apparently is as sophisticated as rocket engineering.
Oh, yeah.
And I think the good thing or the great thing that particularly McLaren is doing seems to be how you are taking those into the field of marketing. Whether it is the data analytics and the sophistication, the impact is absolutely unimaginably huge. And very excited, particularly, being the data nerd that I am, the possibilities of what you can do with this is fantastic.
I think with our fans, we can understand what part of our sport gets you most excited, and then that's where you can start using things like AI and start feeding to you what do you want to see when you're watching a Formula One race. Might be different than what I want to see when I'm watching a Formula One race. So we can now have fans that have all these different tablets up that they're watching the TV broadcast, but then they're, on their tablet consuming some specific data, and they're on another tablet watching in-car cameras and data, and they're actually able to really kind of understand how the whole sport is working.
One of the recent innovations that I have come across in the context of Formula One and the racing is your digital advertising panels on the car as well as on the helmet of the driver. Can you talk about that? I found it pretty fascinating.
Yeah, so we were the first to do it. We've had a couple people copy it, which I think is always flattering. And so we have on a couple parts of our car where literally one brand one moment and another brand the next moment, or a message from that brand. And it captures your eye because you're watching the broadcast and it's an in-car camera, and all of a sudden you see this logo change, and so it draws your attention to it. It weighs a little bit more, so it's something that we run at some circuits and not others, because we're all about weight management in the racing car. But that was new and pioneering for Formula One, and something that we're glad that we were able to lead the charge in.
Do you see a future where the whole car will become a digital screen in future?
I don't think with how technology is going you can rule anything out.
While technology can open up new avenues for marketing, there is no substitute for gripping storytelling. Netflix Drive to Survive has taken a sport once seen as insular and exclusive and opened up its inner workings to a mass audience. US-based Liberty Media, which acquired Formula One for $4.4 billion in 2017, developed the show in hopes of attracting new fans with high-speed action and behind-the-scenes drama.
I think what Liberty saw when they acquired the sport was, here's the world's largest annual sport. Only the Olympics and the World Cup, which aren't annual, have the same size and scale. And a sport that hadn't really focused on the fan or showed kind of what goes on kind of behind the curtain. What's the Wizard of Oz really look like? We were behind times on digital marketing. So they felt like, here's this huge opportunity that if we bring some marketing and modern day capabilities to it, should take off. The first year, 2 teams didn't participate because they were stuck in the kind of older mindset of the sport. And I don't mean that from an age standpoint, I mean that from how the sport worked, which is, you're not paying us enough. We want a disproportionate amount of the money versus everyone else. It's, intrusive. I was like, no, this is about the fan. And By the way, now everyone's in and they participate as much as anyone else. Our sport is so vibrant and fast and loud and violent, crashes and things of that nature. And then the whole political side, which Netflix was able to show, because they actually concentrate a little bit less about what happens on the racetrack. If you want to see what happens on the racetrack, tune into TV. But if you want to see what's going on behind the scenes and how the mechanics of the sports work, it's been fascinating. So they've been wonderful for our sport. It's been wonderful for Netflix. We're now entering our 7th season, and every season has been bigger than the previous season.
I think it's one of the boldest initiatives because it does require a lot of courage to sort of bear things in front of the camera or in front of the mic and say this is how it's going to be, which is amazing.
It's brought in North America. It's brought in women. It's brought in youth. I now have more comments from people that come up to me on the street, and it'll be a dad, a brother, a husband, and they'll go, my daughter, she loves Lando, she loves McLaren. It's like, and it's brought in that audience that Formula One needed to grow.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It's just like our new house. I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your covered item, then replace it, no matter its age. Sign up today at ahs.com.
Party's here! It's like we beat up that beat. GTL, baby. Kim Tan Laundry.
We are here to blow this place apart. I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
Between 2019 and 2022, Nielsen found that Formula One's American audience grew about 10%, coinciding with a rise in viewership for Drive to Survive. So it's likely that the sports forays into new kinds of media are indeed having some impact. But the heart of sports marketing is experiential, the thrill of the live game. And so much of that experience comes down to the athletes themselves. The race is essentially all about the drivers.
That's what the drivers would like to think.
As they should, actually, right? You have got two top-notch drivers. These are like not just your brand ambassadors, but in some sense, they're your product. A driver typically loses weight to the tune of 5 to 8 pounds during the course of one race of about 2.5 hours. Which is unbelievable. So this is a high-performing product with a tremendous amount of resilience. If you were to look at the drivers as a product in that sense, how do you go about managing your products?
It's interesting. On the physicality side, I think the sport needs to do a better job of communicating what athletes these drivers are. Some of the best athletes in the world who have to be highly intelligent because you need to understand strategy, what's going on with the car, how to make the car better. So they're not just driving fast, but they're kind of mini engineers themselves. And then, they're driving 200 miles an hour. They're battling with other drivers. It's kind of life or death, very gladiatorial. Meanwhile, they have over 300 different adjustments they can make on the steering wheel. They're listening to engineers. We are doing real questions. We're doing fake questions because all the teams are allowed to listen to each other. It's kind of like the third base coach at a baseball game is doing all these signs, but when he touches his hat, the next sign counts. But until he touches his hat, so we do that verbally. So if we say to Oscar, how are your tires? That could be that is a real question. If we say to Oscar, anything we say after tires, if we say anything, it's a bogus question. Oscar, how are your tires doing? And what we're trying to do is we then want him to give us a fake answer back. So all our competitors who are trying to figure out when we might make a pit stop are thrown off. So, Oscar, how are your tires doing? Bogus question. We want them to go, I don't think I can last much longer. And then the other teams go, McLaren might be getting ready for a pit stop. And they start building their strategy around what we're doing. So high performance sports, so the first on the list that they won't get to number 2 on the list is, do we think they're capable of being world champions? Criteria 2, are they good guys? What are they like as quality individuals? How are they going to react under pressure? How are they going to be as teammates? How well do they communicate? Because the drivers, the quarterback of the team, they have to be great with our partners and our fans, because our partners and our fans are an integral part of our racing team. So we need drivers that recognize that the fans are the lifeblood of kind of what we do.
You don't want these drivers to just be fantastic drivers, but they should also have the savvy to be able to make the consumers and the fans feel special.
While we're doing that, we'll be delivering Coke Zero Sugar to our customers. So you ready? I'm ready. It's not a race, not a race. No, I'm driving.
Gone are the days of advertising-led marketing strategies. It's all about experiences-led marketing strategies. In the context of F1, some of the biggest experiences are curated by interactions or through interactions with the drivers. So that's a very, very important part. Can you talk a little bit about the kind of experiences that are brought to life in the context of F1, and that as a team, what kind of experiences you would give, and how does that impact the perceptions of people who are going through those experiences?
It's, I think, Formula One and motor racing for that matter is such a visceral experience when you're on site. The grid at the start of the race is chaos. It's celebrities, it's media, it's sponsors. It's almost like being on the football field during kickoff of the Super Bowl. So we're able to bring our partners or consumers who have maybe won sponsor competition, things of that nature, on the grid to be on the field at the start of the race. Then we bring people inside our garage, and that's like literally sitting on the bench during the game, because the whole team's around you, all the technology is everywhere, you're listening on the radio.
So in fact, I have been very fortunate to have had such an experience. And when I think about it, what is the advertising equivalence? Even a zillion ads won't make me feel that way. And that to me was once again a striking validation that experiences matter so much, and they can leave you so profoundly moved or touched or inspired that I think this is the way forward in terms of experiential marketing being the lane.
I think the world now, it's shifted, hasn't it, from awareness, which is kind of advertising, to engagement. And that's all about experiences, whether that's live or digital. I'm experiencing something, I can feel it. And that's where I think the passion comes out. And then that passion creates the loyalty, which creates the following, which creates the repeat business, if you'd like.
In fact, the term that I keep using is classical advertising is all about storytelling. But experiential marketing is all about story making.
Yeah.
You're immersed, you're a part of it, and that's what really leaves you with long-term memories that influence your future decisions.
Yeah, 100%.
echo of the earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
Oh. Hey, did you find the manual?
Yes, of course I found it. No, I need that.
Summon Dale!
Who's Dale?
A real human.
I'm Dale. American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
I need my phone back. Fix it over video chat with American Home Shield. Sign up today at ahs.com.
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Let's do it.
Now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
This is the Asia Trade. I'm Sherian in Seoul, where South Koreans are choosing a new president today.
And I'm Heidi Stroud-Watts in Sydney. Our other top stories: a positive lead-in for Asian stocks as big tech sparks a late-day rebound on Wall Street, with Nvidia leading a rally in chip makers, bonds falling as the dollar hits 2023 lows. The White House says Presidents Trump and Xi are likely to speak this week as trade tensions threaten to boil over once more. And Ukraine and Russia hold a second round of direct peace talks after Kyiv's brazen drone strike on nuclear-capable bombers alarms officials in Moscow.
Heidi, I'm in Yeouido, Central Seoul, an area that's become very symbolic in this snap election. Lawmakers rushed to the National Assembly
just behind me back in December when they were trying to hold an emergency vote to lift the martial law declared by the ousted former president Yoon Suk-yeol. One of those lawmakers that went viral, the front-runner Lee Jae-myung of the Democratic Party. His party headquarters are just a block away to my left. The rival PPP's headquarters also around here. Given how tense the situation has been leading up to the election, not surprising, we have police vans surrounding the National Assembly, surrounding those party headquarters. Police officers, almost 30,000 deployed around polling stations nationwide. And of course, Heidi, top of mind for voters today, the fragile economy, not to mention fighting President Trump's tariffs. both domestic and external pressures. And Sherry, you can see from an external investor's point of view, if you take a look at the inflows that we're seeing when it comes to money that's going into Korean ETFs, it's really interesting. Clearly, this hope of a unified government, putting this chapter of political disruption behind the country, even if the result doesn't mean any sort of really serious economic reforms, that seems to be enough, because we're seeing investors putting $186 million into ETF funds that buy South Korean stocks in May. This was, in fact, the first inflows in a year ahead of that presidential election that Sherry is in Seoul for us to cover today. So we'll be watching that very closely as our markets. But take a look at the setup elsewhere in Asia today. And of course, really that bounce back on account of the tech rally that we saw overnight. And that's going to sort of dominate a little bit of a recovery rally after yesterday's selling. Of course, these trade tensions continue to play out, but these hopes that perhaps a conversation between President Xi and Trump will take place to lower the temperature of what has really been a bit of tit for tat, and certainly some very strong words from Beijing accusing the US yesterday of violating the deals that were agreed in that conversation in Geneva, and really casting a lot of doubt over, the fragility of this trade detente and what it means for that ongoing trade relationship, the most important of which of all the negotiations, of course, that are sort of on the table with all these various trading partners. But take a look at what we're setting up with Sydney stocks, looking like we'll actually see a little bit of modest upside there, just about 0.3% higher there. Chicago Nikkei futures looking pretty muted, but we did see that decline in the Japanese session previously on account of these trade tensions, on the doubling down of steel and aluminium tariffs as well. That played out when it comes to a lot of the steel makers in both Japan and Korea. The yen holding it at that 142 level as, of course, we continue to see that sustained weakness in the dollar. Take a look at how US futures are tracking at the moment, also how treasuries are looking at the moment as well, as we continue to watch particularly that longer end of the bond market and everything that sort of signals for risk appetite. Treasuries could just extend that slump as we continue to see that cloud over the trade and broader economic outlook, right? And watching oil as well, given the jump that we've seen. Another robust session for New York traded crude. The supply hike is sort of in play, but really it's these ongoing geopolitical concerns that investors seem to be more preoccupied with. Our executive editor for Asia Markets, Paul Dobson, joins us now for more. So there's a lot of to and fro when it comes to sentiment. Fragility is obviously key here. What's central to you in terms of the narrative that we're seeing, and potentially this conversation happening between the US and Chinese leaders?
Yeah, good morning, Heidi. That's a pretty good framing for investors waking up this morning and probably wondering what changed since we went home from Asia yesterday, where markets were looking pretty negative, and basically people were kind of discounting the idea that there would be this call between Trump and Xi this week. So the US seems pretty confident and adamant that it will happen, and that seems to infuse a little bit more confidence into trading of US markets, with some provisos, right? The dollar did stay weaker and bonds stayed lower, which were things that were handed off from the Asia session. So it was more about that equities turnaround and the tech-driven rebound. So I wonder if there's some other stuff going on in the background there as well. Nonetheless, that's the thing that everybody wants to know about now. Will this conversation take place, and what will be the outcome of it? Will it be something concrete at the end of it? Now, I think it seems that the market's interpretation had been Xi would be unwilling to go into a call unless a lot of it were already set up, given the risk of disappointment or some sort of embarrassment, and nobody wants to put themselves into that situation and come out of it looking worse off. But it doesn't seem like there's a great deal of progress being made behind the scenes between US and China. The US seems to think that get the two leaders together is the best way to go about it. So if we do get confirmation that those talks are happening, I think that the market will see that as very optimistic. If we get more pushback from the Chinese side, then I think the market will probably take that as a negative.
And Paul, you mentioned the weakness of the US dollar, and it seems Wall Street banks are expecting it to even be under more pressure in the coming weeks.
Yeah, absolutely. So in the coming weeks and months and over the next year, basically, Sherry, I think that, some of the forecasts that have been coming in have been seeing this sort of long-term dollar downtrend now. Morgan Stanley, for example, looking for another 9 to 10% drop in the sort of broad dollar over the next 12 months. So it's not an immediate kind of smash down lower on the dollar, but more a kind of gradual and steady sort of weakening right across the board. And people are looking for that to play out because they're expecting money to come out of US stocks and treasuries and go into other markets all around the rest of the world. But we are getting close to some key levels in Asia's markets. For example, the yen getting closer to 140 again. We'll be paying attention to where the Chinese yuan goes with trading resuming again after the holiday, and other markets like the Singapore dollar close to some pretty important milestones as well. So that general dollar trend is starting to get to levels that we haven't seen in quite a long time. And as you said, sort of if you look at across the street, basically on Wall Street, a lot of the forecasters are predicting that we are going to see that kind of continual run, maybe not a straight line, but that continual run of weakness over time.
Olympics Paul Dobson there in Singapore, just sort of trying to set the context of what we're seeing in these market dynamics at the moment, and certainly uncertainty over the impact of tariffs is also weighing on voters' minds in South Korea. And Sherry, we were talking about just the confluence of both domestic pressures as well as these external uncertainties. How big an issue is foreign policy, and does that shift depending on which candidate is successful? Yeah, Heidi, you mentioned the uncertainty over tariffs, and of course, South Korea subject that 25% on all of its exports, temporarily dialed back to 10%. But the candidate Lee Jae-myung really emphasizing that in his 100 days in office, if elected, he would prioritize those conversations with the U.S. Still, what's interesting about this candidate, Lee, is that he's being a little bit more pragmatic when it comes to diplomacy. He wants a solid alliance with the United States, but he also wants to stabilize ties with China and Russia, and of course balancing that relationship between China and the United States, especially when it comes to export controls on critical semiconductors, advanced technology that South Korea exports. That will be a very tricky balancing act. Also, of course, we have North Korea to contend with, which has become a crucial supplier of missiles and munitions for the war in Ukraine for Russia. And we have seen Lee Jae-myung wanting more dialogue with North Korea. His rival Kim Moon-soo of the conservative ruling party actually being more hardliner against Pyongyang. Kim actually wants to really prioritize the relationship with the U.S. and Japan. Key question is what will happen to relations with Japan, Heidi, because we have seen that historically the Democratic Party has had long grievances with Tokyo. Well, Sherry, speaking of China, the White House says President Trump is likely to speak this week with the Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring out China correspondent Min Min Lo, who joins us out of Hong Kong. And Min Min, it's not a guarantee, no date specifics have been announced from the US. We haven't even heard from China yet, and especially not since, a pretty fervent reply from the Ministry of Commerce accusing the US of breaking the agreement that was reached in Geneva.
That's right, Heidi. This morning I was just scanning Chinese media, and I haven't seen a single article mentioning the prospect of a U.S.-China call between President Trump and President Xi. So the discourse in China is very different from the focus of public discussions in the U.S. right now, and it does seem like it is the U.S. administration that is more keen in pushing for a call this week. President Trump saying that he will be able to settle many of these disputes and tension in a phone call, but of course from the Chinese side, we know from tradition that they tend to favor having lower-level officials negotiating key issues before culminating in a leader's call only when there are some expected outcomes that they are quite clear will be able to be achieved in a phone call. So at this moment, we have seen a ratcheting up of trade tensions, as you mentioned, very strong words from the Ministry of Commerce yesterday, a number of issues that China is really upset about, including the revoking of Chinese visas, the expansion of these chip curbs, as well as limiting the sale of critical parts in jet engines, for example. Reuters also reporting that the U.S. is preparing to step up military sale to Taiwan. Many of these issues, especially when it comes to Taiwan, is a red line for China. But for U.S., though, the main crux of the issue here is critical minerals. And a part of the Geneva Agreement is that China has committed to roll back some of these non-tariff countermeasures against the U.S. A part of it is about relaxing the flow of minerals back to the U.S. But this is an issue where you have Chinese exporters having to apply for export licenses from the Ministry of Commerce, and it's a sort of opaque process that sometimes there isn't a lot of visibility from the outside world. So it's possible for the Chinese government to sort of turn on and turn out the tap there without a lot of transparency. And so U.S. officials are saying they're not clear if this is intentional from the Chinese side or if it's a matter of administrative backlog.
So, I mean, what's the tariff situation right now between the two countries? Because, of course, they're pretty high, they've gone down. Could we see them actually go back up again if there's no resolution to right now the accusations from both sides?
Yes, so the current tariff agreement, the truce, is going to expire in early August. And it's really hard to say where this could go because there are so many of these sticking points that are not being addressed. Primarily the fact that, or the assessment from China that U.S. views China as this strategic rival that needs to be contained, especially on the tech front. China, of course, has been really leveraging on its dominance over rare earths, and that has already some impact on U.S. manufacturers. One of the car manufacturers, Ford, I believe, in Chicago, had to close one of its factories temporarily because of shortage of critical minerals. And so now it's a question of which economy can really withstand this standoff for the longer period. And it does seem like rare earths, some analysts say, has a more durable impact than tariffs, which will hurt both Chinese manufacturers and U.S. consumers. But China's lever over rare earths has a greater impact on the U.S. with not much cost to China. So we'll have to see where this goes when the two sides negotiate on the details.
Bloomberg's China correspondent Lin Minlo there in Hong Kong. Coming up on the Asia Trade, Yonsei University joins us for more on South Korea's election. We'll also be talking investment strategy with the Singapore-based SDMC Capital, plus discussing how Australia's education sector is aiming to capitalise on Trump's higher education crackdowns. Much more ahead on the Asia Trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ooh, fun. Yikes. The leaky refrigerator coil card. Is that bad? Oh, Dad! Death? Of an AC fan motor. Oh no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Phil, we talked about this. American Home Shield. Don't worry, bee warranty.
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Russia and Ukraine have laid the groundwork for a new prisoner exchange after a second round of direct talks in Istanbul. The hour-long meeting came with Kremlin officials said to be angry and alarmed over Ukraine's brazen drone strikes on Russian warplanes in Siberia. Bloomberg's Michael Heath joins us now for more, and we're still sort of processing, just not just how brazen, but how successful and efficient this operation was. And you've got to wonder how it's playing out across Russia, both in the leadership and perhaps, across the broader sort of propaganda machine.
Yeah. I mean, it's a fascinating one, and there's some great reporting on Bloomberg by one of our journalists who's spoken to Kremlin officials who, as you mentioned, were alarmed, discomforted. I mean, it's just hugely embarrassing for them. It dents Vladimir Putin's prestige. I mean, outside of many other reasons why he's managed to stay on power for so long, was this sense that he does, that he is responsible for the security of the country. And, you have to remember, Russia hasn't been invaded since 1941. So while the Soviet Union, was still very, very strong in its defence, because of the chaos and the corruption and everything in Russia now, really what we're seeing is just how degraded its defences and air defences and these sort of things are. So, yeah, an amazing attack. Ukraine claimed it damaged 40 planes, which was always going to be an exaggeration, but we do seem to have some analysis that's 10 to 13 seems to be what they've done. But what's interesting is that these bombers, while they carry nuclear weapons or strategic weapons, and some of them are used in the campaign against Ukraine, they're also they're very reliant on Western components, which, because of the sanctions, they can't do anything much with that, in terms of replacing them. So it does hurt Russia, and it's not going to change the course of this war or anything like that. But for morale, for propaganda purposes, on all those fronts, it's a big win for Ukraine.
Given the situation right now, how feasible is it that they'll eventually get a breakthrough in this war, even with President Trump having played such a high-profile role in trying to mediate? It seems nothing has been done so far.
Yeah, that's exactly right, Sherry. And I think what came out of yesterday was what we expected. I mean, look, it's really positive news that there's going to be prisoner swaps. What they're looking at there is really heavily wounded prisoners will be transferred, as well as young ones, men aged under 25. But the demands from the Russian side, at least, were absolutely maximalist. I mean, they're talking about Ukraine having these 4 territories that they've sort of said are now theirs, and they don't actually control completely militarily. They're demanding that Ukraine withdraw from the remainder of them and hand them over to Russia. Ukraine's never going to agree to that. And Ukraine, of course, is following sort of President Trump's lead, is calling for a ceasefire and proper negotiations. So and the other things Russia wants is no more Western intelligence for Ukraine, basically for Ukraine to be cut off from the West, and for again this demand for presidential elections in Ukraine, because President Zelensky's terms run out though under martial law, which Ukraine is under at the moment because it's at war. No elections can be held. I mean, just sort of very, very basically a negotiating position that's not a negotiating position, because it's impossible for Ukraine to really engage on this. So President Erdogan, who hosted the talks, the Turkish president, has suggested bringing together President Putin, President Zelensky and President Trump, which probably would be ideal. I mean, there needs to be some degree of mediation here to force them to do it, and face-to-face is the best way to do that. But until we see something like that, I think this is really going to drag on.
Bloomberg's Michael Heath there with the latest when it comes to those ceasefire negotiations. And Senate Republicans are looking into the potential impact of a so-called revenge tax buried in President Trump's fiscal package. The provision, which could discourage foreign investors, is worrying Wall Street. Let's bring our digital politics editor, Romy Varghese. Romy, so what are the main worries when it comes to this particular provision within the Trump tax bill?
as you called it, this is being called the revenge tax. It would levy higher taxes on people and companies who are coming from countries that the United States says are having discriminatory tax practices. And that would mean higher taxes on the income one receives from U.S. stocks and bonds. And Wall Street is saying, hold up, this would only provide a further disincentive for foreign investors to hold U.S. stocks and bonds.
So, Roman, we have already seen U.S. assets take a hit, given, of course, the uncertainty that global investors have on where the American economy and politics is headed. When it comes to foreign investors, what are we seeing in terms of their involvement in the U.S. economy? How large a part do they take, and are we seeing even that dwindling?
Foreign investors are huge, significant players in the U.S. financial markets. There are $31 trillion worth of assets, U.S. stocks and bonds that are held by foreign investors. And foreign investors hold about a third of U.S. treasuries. So Wall Street is concerned that if this provision ends up in the Senate version of this bill, this would mean weaker demand for U.S. assets, and that could even mean a weaker dollar. So Wall Street is really making sure that people are aware of this, that the senators are aware of this. We haven't seen impact yet from this, but some Wall Street analysts are saying that's because people don't even know that it's in this huge bill, and they want the Senate not to have this provision in its version of the bill.
Varghese there joining us from Sacramento. We have more ahead on the Asia trade. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Mama, look.
It's just like our new house.
Warranty!
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Clogged AC coils? Fixed. Oven beyond repair? Ta-da! If AHS can't fix your covered item, they'll replace it, no matter its age.
A warranty is smart.
Oh, a happy family.
Is that us?
Too much. American Home Shield. Sign up today at ahs.com.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Welcome back. You're watching the Asia Trade. Take a look at some of the big political stories that we're following this hour. And Bloomberg has learned that the European Union has agreed to curb Chinese medical device manufacturers' access to public procurement contracts. Sources say the EU countries voted on Monday to ban Chinese firms' access to public contracts worth more than 5 billion euros. An EU inquiry found that Beijing discriminated against foreign firms in procuring its own supplies of medical devices. Polish Prime Minister Donald Tusk said that he would seek a vote of confidence to shore up support for his coalition government. That's after nationalist Karol Nawrocki defeated a centrist candidate backed by Tusk's party in the presidential election. Tusk says that he wants to re-establish unity in the cabinet, but has a plan in place if cooperation fails.
Ponad 20 milionów Polaków wybierało nowego.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
Take a look at how we're setting up when it comes to futures at the moment. This, of course, as Asian stocks are set for a boost after that rebound, particularly across the tech space. We are watching those chip makers after the move that we saw in NVIDIA overnight. But S&P futures at the moment looking pretty weak as we continue to kind of see this to and fro, just the weakness in sentiment as we get a little bit more optimism ahead of potentially a conversation between Xi and Trump. That's not been confirmed by really either side, but particularly nothing being heard about it from the Beijing side, especially after some pretty strong words yesterday from the Ministry of Commerce accusing the US of breaching the agreement reached in Geneva. White House saying that the leaders are likely to speak this week, so we continue to watch and see whether that sort of is actually scheduled. Nasdaq 100 futures also looking a little bit softer. We are watching the dollar in particular with the kind of resurgent return of the bears, with the dollar falling against all of its G10 peers, really extending those losses after we saw also weaker than expected US manufacturing data. Hedge funds in particular are really bolstering their short exposure for the dollar. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The average person would rather suffer through team-building exercises than look for insurance. The Zebra searches over 100 insurance companies for you to find savings no one else can. Room for one more? The Zebra. We do the searching, you do the saving.
Mama, look. It's just like our new house.
Warranty!
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Clogged AC coils? Fixed. Oven beyond repair? Ta-da! If AHS can't fix your covered item, then replace it, no matter its age.
A warranty is smart.
Oh, a happy family. Is that us? Too much? American Home Shield. Sign up today at AHS.com.
When you need your sports in a snap,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ. Streaming free anywhere you are.
Take a look at how we're setting up as we head into the start of trading. A little bit of optimism there, really playing on that tailwind from the tech rally that we saw overnight, where we saw Wall Street traders kind of resuming that trading pattern of buying a dip, turning what was a pretty bad open for the S&P 500 into then a positive afternoon. US futures now are looking a little bit softer again, but that index managing to rise despite mostly negativity that we saw in breadth. The rebound in tech stocks will be what we're watching in terms of that lead in Asia as well. well. Sydney stocks up by about 0.8% in the futures session. We do have the RBA May minutes of those meetings to be focusing on there as well, looking like an early gain of just shy of 10% when we get into the start of cash trading in about an hour's time. Japan was one of the markets that was really sold off on the back of these tariff concerns, of course, the steel and aluminium tariffs, as well as the ongoing concern that perhaps this truce between the US and China may not hold. We could see that recovery depending on how sort of short-lived that is, given that we are getting some rhetoric from the White House that they're hopeful that the two leaders will be speaking later this week. We've heard nothing from Beijing on this, of course. Watching oil that continues to rally, which is quite interesting, despite that OPEC Plus move, which was widely expected in terms of the supply hike, but clearly it is the geopolitical concerns that are rising and dominating that part of the equation, even with the, some 400,000 barrels a day increase in July. There's a real split in terms of how many more hikes will come in the subsequent months, but we continue to watch some of these geopolitical factors like Ukraine's extraordinary strike on Russia's air bases, the Iranian criticism when it comes to a report on its uranium stockpiles, and the wildfires in Canada now at play as well, with the Alberta wildfires shutting about 7% of Canada's oil production. So we're watching that, and clearly some of those supply side concerns are at play there. Gold, they're seeing some upside again, holding gains along with the losses in dollar on the back of these trade concerns.
Right, and Heidi, no trading here in South Korea. Today is a public holiday. People are out and about going to the polls. Of course, it's a presidential election only 60 days after the official ouster of former President Yoon Suk-yeol. Let's discuss all of the Korean politics, the drama surrounding this election. Joining me now is MJ Woon, the Underwood Distinguished Professor at Yonsei University's Department of Public Policy and Management. Professor, really great to have you with us outside here of the National Assembly. Thank you so much for coming out. I have to ask you, it's a public holiday, so thank you so much for coming out. Did you vote already? Are you voting today?
Well, I did last week. We had 2 days early voting days, so that I did, last Friday.
That was super high turnout, the second highest on record.
That's right, about 35%, so that's the second highest in Korean history.
Does that give us sort of an indication of where this election could be headed?
Yeah, I think so. Well, that high turnout in early voting, I think that's that symbolized the sentiment and then the heightened public engagement in this election. So that I think that's a really big turnout, and I think that's maybe a signal to the positive signal to the Mr. Lee Jae-myung Democratic Party.
Yeah, the front runner of the election so far, as we saw in last week's polls. But tell us a little bit about what we can expect from him, because if he's elected, the difference with this snap election is that he will not have a transition period to put everything in place before he gets into office.
Right. Yeah, this is snap presidential election, so that there will be no formal standardized transition period, so that he should take over the power as soon as the National Election Commission announced the election result, so that he should be ready for taking over the administration and ready for the making policies and also working through in the middle of very pressing domestic and international issues.
Yeah, that was my point, because if you have to work this fast, how soon can you put a working cabinet in place at a time when you're running out of time in order to negotiate with the United States on these 25% tariffs that have been temporarily lowered to 10%?
So that according to the law, all the ministers should be nominated by the prime minister, so that we don't have a prime minister right now. So that formality, he should wait until he has new prime minister. So that I think his cabinet, formality-wise, he will work with the current ministers. So that I think he has his own shadow cabinet already, and he has his own team already. But formality, he should work with the current ministers. But I think he will appoint the vice ministers in its ministries, so that they will play key roles in cabinet meetings, I think.
Depending on whether it's Lee Jae-myung or the ruling party's Kim Moon-soo or any other third-party candidate, what sort of policies could we see when it comes to dealing with the United States in these trade negotiations?
Well, I think that's one of the pressing issues, and Mr. Lee has been emphasizing the significance of the ally relationship with the U.S., but at the same time, he really wants to have very problematic relationship with major players. Particularly, he wants to have a good relationship with China for national interest, and China is the largest trading partner. So he really tried to balance between military ally relationship and trading economic relationship with other countries.
And of course, the relationship with China will be tricky. The relationship with Japan could also change depending on if we see a change in government.
Like geopolitics is really changing. That's a major issues, and I think they really try to maintain a positive trilateral relationship: U.S., Japan, Korea. At the same time, I think deal with the frosty relations with China. I think that's one of the major key foreign policy issues to Mr. Lee.
For voters, is it all about the economy? Is it about democracy?
Yeah, a lot of people really got frustrated with the economic downturns, and small, medium business owners really got frustrated. So that there's a really big demand from the people for economic stimulation. So that I think economic policy package by the new administration will be really critical, and I think that's one of the big things to the voters' mind today.
Right. Thank you so much for joining us today here outside of the National Assembly. It was really great speaking to you. And of course, this is MJ Moon Underwood, Distinguished Professor at Yonsei University's Department of Public Policy and Management. Of course, voters here in South Korea can get to the polls until 8 p.m. local time to cast their ballots. Now, it's really about what's happening in the global trade environment. We also heard from Korean Air Chairman and CEO Walter Cho saying that he expects global tariffs to cause confusion in the aviation sector, which is typically excluded from such levies. Cho also spoke to Bloomberg about why securing a trade deal needs to be the top priority for Korea's next president, as of course voters head to the polls today.
We've been without leadership for the last 5-6 months, and it's been troubling, especially with the economic situation globally. And now with new leadership coming up, I think that will be the priority for the government, Korean government. Yeah.
So getting a trade deal done, is that job number one?
Yes, I believe so.
And what do you want to see from that?
Regardless of the outcome, I just want it to be done, so we could see some future into and predictability.
So you'd rather the details are less important than knowing what the future is going to be.
So we could plan on what to do next.
Do you think the currency volatility is going to continue? The won's been pretty volatile over the last few weeks. Is that something that's affected you, and do you anticipate that continuing?
It's been stabilizing for a few weeks now.
So you'd be happy with a stronger won? That would be something that you would actually welcome?
Yes.
Do you think that will be part of the conversation with the United States?
But the Korean government would, I think they would prefer a weaker won because it's an exporting country.
Yep.
But for me, I would prefer a stronger currency. Yeah.
In terms of the trade deal, is it important to you, though, that we see aerospace being carved out? A lot of CEOs are telling me that
yes,
they would rather make sure that actually that aerospace goes back to its original format, which is no tariffs. How likely do you think that is?
Well, we're a large buyer of aircraft, but we also sell a lot of airplane parts to Boeing and Airbus as well. So this is very important for Korean Air as well. So, and historically, aviation was not part of the tariff. And now that it's going to cause a lot of confusion to the business. Yeah.
Are you already hearing that we're going to see price rises? I'm talking to, so the Boeing, Airbus, the big engine manufacturers, are they already starting to signal that price rises are coming?
Fortunately, we locked up all the prices before this happened, but I'm expecting some
spare parts and things like that could become more expensive.
Yeah, so that will be difficult to maintain and grow our business as well. Yeah.
What's happening with demand right now?
What?
Demand. What are you seeing in terms of?
So cargo, we've been seeing quite sharp decrease from traffic from China to U.S.
Right.
But and passenger, it's been steady, especially in the premium market side. It's been steady, but we're expecting some turmoil in depending on the trade negotiations.
The trade situation will also affect the passenger side of things. How exactly is that Is it just in and out of the United States? Is it? Where are you seeing that?
Well, it's not just the United States, but it has a very big effect on the Korean economy, and that has a great effect on the passenger demands.
And you think, again, that's structural, that's a permanent feature of the landscape now?
Yes. So we'll have to adopt on that too, but there's too much to adopt right now.
There's too much volatility in too many parts of the business.
Yeah.
In terms, therefore, of going forward, how are you thinking about planning the network? How are you thinking about what you're doing with aircraft? Given the volatility you've described, can you make big orders right now? Do you have the degree of certainty you need to make big decisions?
We have demand for new aircrafts, not just for expansion, but also for replacement for more efficiency.
Yep.
And that's what we did in previous months with Boeing and Airbus. And we'll continue to do that. But for expansion and growth, there are still a lot of other markets that we are pursuing to grow and expand into.
Right.
Not just U.S., but other markets.
Okay, but you would take some capacity out of the U.S. and just put it elsewhere?
I think U.S. market is. I don't think we're going to pull out any of the capacity from U.S.
Korean Air Chairman Walter Cho there speaking exclusively to our colleague Guy Johnson. And subscribers can turn to the terminal for more on South Korea's elections. Our TLI Vigo function is there for the latest updates, our commentary and analysis from our expert editors and analysts with that live blog. More ahead on the Asia trade, this is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It's just like our new house. I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your comfort item, then replace it, no matter its age. Sign up today at ahs.com. Disney is laying off several hundred employees across its film and television businesses, and a sign that the entertainment industry's contraction is far from over. Bloomberg's Chris Palmieri joins us now for more. And Chris, what are we seeing in terms of the prioritisation of this restructuring, and clearly it reflects some of the weaknesses that we continue to see in the business?
Yeah, when Bob Iger returned to run the company in November 2022, he issued this cost-cutting program, and it's been over 8,000 jobs and $7 billion plus in costs taken out of the business. But it just continues, and this sort of speaks to the weakness in the traditional TV business as people cancel cable TV in favor of streaming, and the movie business as well. It's every now and then there's a really strong weekend, but it's still well below it was before the pandemic, and they've been cutting back on a number of pictures they do and a number of shows they do as they try to adjust to this new normal in entertainment. And so we're seeing that across other companies in the industry as well.
Is this sort of a signal of more pain potentially to come? And what does it tell us about, I guess, any change to broader strategy for Disney?
You know, they reported really good earnings in the last quarter, and the stock jumped. Part of that was the theme park business and the streaming business growing in profitability, and so I think this is a sign that they just feel they need to keep cutting to keep delivering those surprise earnings as the old legacy media business declines.
Bloomberg's Chris Palmieri there with the latest on those cuts at Disney. And subscribers can watch us live and see our past interviews on our interactive TV function at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about. Become part of the conversation as well. You can send us instant messages to check it out. That is at TV Go. More ahead here on the Asia Trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Oh, I see your kitchen sink is draining your bank account. No problem. An American Home Shield warranty covers important parts of plumbing systems with a fix or replacement. Aha! Good fortune.
Sign up today at ahs.com.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
Earnings season is here.
Earnings, the hot topic of conversation. It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley.
Booking, Airbnb.
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness. It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
Take a look at some of the other major corporate stories that we're following. And Elon Musk is selling $5 billion in debt for his AI startup, xAI, the latest in a series of fundraising efforts across his business empire. Morgan Stanley is said to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in xAI stock through a secondary offering. Uber has named its longtime executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and the delivery businesses. The move is part of an executive shakeup at Uber, which includes the departure of a senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Take a look at how we're setting up. We're just about 10 minutes away from the start of cash trading here in Asia, as we are expecting to get some of that sort of boost from the taker rebound. Of course, we saw a pretty ugly start to the session in the overnight session in the US, but then that tech rally sort of drove US stocks higher ultimately. We are looking at gains when it comes to equity futures trading in Sydney, in Japan, and of course, when it comes to South Korea, we are seeing no trading today for election day activities. S&P futures futures, though, looking like they're playing that sort of fade at the moment. These ongoing twists and turns in the trade war, the US extending the exclusion of Section 301 tariffs on some Chinese goods until August 31st, pushing for that call between the leaders, between Xi and Trump. Beijing hasn't said much about that, but obviously issued that fairly stern commentary from the Ministry of Commerce yesterday, accusing the US of breaching the terms agreed during its Geneva talks. We're also looking at eco data today as well. Japanese debt market moves in particular. A sale on Tuesday potentially ramping up pressure on the government to adjust borrowing plans and calm investor nerves, given how much activity we've seen on the long end of that market.
Take a look at some of the stocks we're watching when trade opens in Australia and Japan shortly. And watching gold, which continues to gain. We see gold-related shares potentially seeing an advance in the early part of the session. Gold's price surging with geopolitical concerns, reviving demand for safer assets. You've also got the sustained weakness in the dollar at play there as well. One of the stocks we'll be watching in Japan will be shares of Toyota and also Toyota Industries as well. The car maker said that it would make a decision about a deal today. Bloomberg had reported back in April that the chairman, Toyota, had proposed a buyout of Toyota Industries. We are, of course, when it comes to South Korea, really watching the outcome of the election, which has come after what has been months of political disruption and uncertainty and volatility domestically, all at the same time when we're seeing a slowing economy, growing household debt, a lot of easing from the Bank of Korea, but of course also external pressures as well with the tariff threat really front and center when it comes to this economy, which of course is so externally vulnerable as well. We are starting to see, in terms of ETF flows, for the first time in a year, some significant flows into South Korean stocks. Well, global aviation executives are in New Delhi for the IATA AGM amid growing trade tensions and a drop in consumer confidence. We spoke with the IATA Director General, Willie Walsh, on how this ongoing tariff war is impacting the sector.
Tariffs certainly would make it more difficult. Historically, aircraft have been carved out from any tariffs. It's a tariff-free, effectively since 1979. So we have seen some tariffs being introduced. We would strongly encourage governments to, isolate aviation again from tariffs, because it's a global supply chain. It's not that you have sort of U.S. manufacturing protected because of tariffs in the U.S. and Europe separate. Again, it's completely global. The U.S. manufactured aircraft rely on parts being made all over the world. So, I think when people look at the reality of this and what it would mean, if the U.S. applies tariffs, it's going to impact on the U.S. industry, it's going to impact on U.S. manufacturing. And aerospace, aviation, aircraft engines has been a huge net positive for the U.S. Economy.
Do you think the manufacturers should take the hit, or do you think the airlines should take the hit?
No. To be honest, I don't think we should see tariffs.
Right.
But the reality of tariffs being applied anywhere is ultimately people are going to have to look. Is it possible for me to absorb some of this? It's no different to an increase in costs. Can I absorb some of this? Can I absorb all of it? Or how much of this am I going to have to pass on to consumers? And based on my experience of running a business, it's very difficult to absorb all of the cost increase that an industry faces, and ultimately consumers are going to pay more because tariffs no different to a tax.
So the consumer ultimately is
consumers ultimately pay. That's the reality of it.
That was the IATA Director General Willie Walsh there, speaking with Bloomberg's Guy Johnson. And Sherry, really keenly watching the outcome when it comes to the elections getting underway today in South Korea. Of course, there's no trading today as people go about and perform their democratic duty. And you can see from that sort of investor reaction, right? There's a real hope that the turmoil of the past few months, of which you've covered on the ground, may well be behind this country.
Yeah, so that optimism has really led to that rally on the Kospi. We saw gains of 4% just last week. We saw the Korean won also gaining ground against the US dollar. You said it, we don't have markets trading today, but that expectation that finally we're bringing an end to 6 months of political turmoil in this country has led to that outperformance in Korean assets. We're talking about breadth also widening across the board beyond only semiconductors. For example, when it comes to Samsung, the most valuable Korean stock, now accounting for about 16% of the Kospi's weight, down from over 20% a year ago. And of course, we have had candidates talk about improving corporate governance in this country, something that's very much needed in order to really turn the long-standing Korea discount into a Korea premium at a time also has stayed pretty fragile. Remember, we saw the Bank of Korea cutting rates last week for this year already to 0.8% from 1.5% projected just in February. So we'll be watching how this election goes. The polls close at 8 p.m. tonight. We're probably going to get those results early in the morning on Wednesday.
The top names in business are on Bloomberg.
The real direction of attention is around trade, tariffs, taxes, and deregulation. If a lot of this can get resolved more quickly, then the slowdown can be much shallower. The longer it goes on, the more risk.
Volatility is going to be here for some time. It's whether the volatility is accompanied by whiplash behavior.
It's difficult to land on a transaction and present it to the market in a period of maximum uncertainty.
We have some of the best companies. They can do hard things, but they need to know what the parameters are in which they're working. Investors are looking at how do I reposition geographically some of my assets to take advantage of other countries in the world that are ripe for more growth.
I see us moving from what was hyper-exceptionalism to merely exceptional. I don't think there are good alternatives to the U.S. today.
There's not a plausible scenario where the U.S. still won't be a very attractive place for capital.
Nobody covers business like Bloomberg. The top names in business are on Bloomberg.
Is America a bad investment destination? No. If you were to take all of your money and put it in one country, it would still be America. I mean, it's still the most prosperous nation on the planet. It's got the best military on the planet. It's got huge amounts of innovation. People are catching up. That's a good thing. You know, China's doing some very good innovation in medical and AI, and we should assume they continue to do that. But America's still got the best. We should fix our problems because we could grow a lot faster, which help all of our citizens.
Nobody covers business like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Down to Asia's major market open. South Korea closed as voters head to the polls to elect a new president. All really catalyzed by that martial law declaration by ousted President Yoon Suk-yeol. Remember, Heidi, lawmakers just struggled here at the National Assembly trying to get in and hold an emergency vote to lift that martial law declaration. Since then, protests have been ongoing. Could we finally see an end to that political turmoil?
The sheer amount of public anger and uprising, I remember it well. We were on the ground covering with you there in Seoul throughout that entire drama. And if you take a look at sort of the investor perspective, Sherry, there certainly does seem to be a lot of optimism that even if neither candidate, whoever is successful today in this election, will bring about significant economic reform, there could at least be that period of calm. And we're seeing those flows when it comes to South Korean stock ETFs. We're seeing those flows into the Kospi. But take a look at what else we're watching as we get into just the start of cash trading here in Sydney and the start of trading when it comes to Japan as well. A bit of a turnaround from yesterday's sell-off, which was so much driven by these tariff uncertainties, right? Both in terms of the hawkish words from Beijing, the Minister of Commerce in that statement accusing the US of breaching the terms agreed in its Geneva trade talks. But now we are hearing, at least from the US side, that they're pushing for a phone call between the two leaders, Trump and Xi, this week. We haven't heard any confirmation or details, least of all from the Beijing side, but we're watching out for that throughout the course of the day to see how much sort of longevity this amount of optimism or this bout of optimism can have. The Nikkei 225 up by just about 0.3%. We're seeing the top picks trading pretty flat at the moment. Dollar yen at 142. At one point we saw the dollar with the yen, I should say, gain over 1% in these trade tariff sort of concerns against the dollar. That picture of dollar weakness continues to be sustained. Also watching for a key bond sale when it comes to Japan today that could have ramifications in terms of how challenged JGBs will be. That 10-year auction will be testing investor appetite, and amid these sort of ongoing concerns as yields for JGBs remain pretty elevated, 10 years around that 1.5%. That's well above that 25-year average of about 0.8%. So the question is going to be whether that level is going to be enough to draw strong demand, something we'll be watching very closely for. When it comes to Australia, we do have the minutes of the most recent RBA meeting where, of course, they cut. We also have the Deputy Governor, Sarah Hunter, speaking at an event later on today, watching for sort of any signals, given that the balance of possibilities for the RBA remains pretty open, as this is just another central bank that is not just grappling with domestic concerns and where inflation is, but also a great deal of uncertainty. That next RBA meeting coming just a day before the expiry of that trade truce between China and the US. But let's bring in, amidst all of this uncertainty, Max Manduri, who's the founder and CEO at SGMC Capital. Max, great to have you with us. So we've kind of seen this pattern that plays out overnight, right, where it's a pretty bad open. There's some sort of reason to come in and buy the dip. We see a little bit more sort of enthusiasm going into the close of the session. Is this sort of tantamount to just trading water at this point until we get more certainty on trade? And what happens if we don't? Is this a pattern that remains?
Well, we're clearly seeing a lot of volatility, and investors want more visibility, and so it's normal that markets are actually going to be flip-flopping, if you want, and you're going to see actually even intraday swings. Therefore, could this be something that stays with us? Yes, it could, and of course, headlines are going to be hitting markets either which way, of course, the headlines come, whether they're positive or negative, so investors should expect that to continue. Now, whether it is always good to buy at the beginning of the trading day because it's going to close higher, obviously that is not always going to be the case, but basically what investors are looking for is a dip in order to buy, because we have actually seen that many investors may have felt left out by the recent strong rally that we've been seeing, and therefore they're looking for potential corrections in order to deploy the cash and liquidity that they have available, and that's exactly what we've been seeing even throughout the day and intraday, like you have correctly mentioned.
You, like others, are expecting a depreciation story to continue when it comes to the dollar, and in fact, at the moment, we're seeing pretty close to that 2023 low. Below that, we'll fall to a 2022 low. What are the ramifications then when it comes to other asset classes if we continue to see, more or less a one-way trajectory for the greenback?
Well, first of all, let me say that we do expect the depreciation to continue, but probably not at the same pace that we have seen for the first 5 months of the year. So the greenback is likely to be on the back foot, but again, not at the same pace. And in terms of what that means, clearly, if you're looking at equities within emerging markets, that is going to be risk on for them, because a depreciation of the dollar is actually a good environment where to be, because they're clearly indebted in US dollars. And we've actually seen a number of these emerging markets, especially in the Latin America. I mean, look at Brazil, what it's done year to date. And those markets are likely to continue potentially experiencing some positive flows because of not only very cheap levels at which they had started the year, but again, this dollar depreciation story is likely to add fuel to the fire and therefore add risk onto the emerging markets. Of course, global investors need to be extremely selective because not all emerging markets are the same. But again, this is something that we expect to continue, and again, could be a very good trade also for the second half of the year.
Max, what about European markets? We have seen a lot of interest in, for example, German equities, given, of course, the increased spending that we're expecting from that market at a time when investors seem to be veering away from American assets.
Well, European assets have done great this year, and like you've mentioned, one of the main reasons is this change, which is a huge change with respect to Germany, increasing their fiscal package, their fiscal spending, and that has created a lot of exuberance. And these talks of a shared military, these talks of a more cohesive union are great for the European Union, and they're great also for the currency. We have seen euro strengthening quite remarkably this year, nearly 10%, even more than 10% against the dollar. Now, the question here is really how much of that is already priced in with respect to how reality is going to be. Because again, it is a wonderful story, and of course it would probably for everyone if the European Union become more cohesive and more of a union, but whether that is already a lot of it priced in, and whether it's really going to be leading into something materially different from what we have seen over the past few years, that remains to be seen, and there's still quite a bit of skepticism out there. But what we believe is that the strong outperformance of Europe with respect to the US, especially this year, has been warranted so far, but we are not so convinced that it's going to keep going also in the second half of the year. Clearly, momentum is strong. Clearly, global investors were under-allocated to Europe, so they've actually been using this year to take their allocations up. But whether, again, this is a new change of structural story where Europe is going to be considerably outperforming the US in the future, we're very skeptical about that.
Max, markets closed here in South Korea, where I am today, because of the presidential elections, but there's been a lot of optimism about corporate governance reforms from whoever wins the presidency. Something perhaps similar to what we've seen in Japan and the optimism there. What are your expectations?
Well, clearly South Korea expects and hopes to put this chapter behind them, and global investors just are looking for more clarity going forward, and that's why you've seen a lot of optimism going into the elections. That's why you've seen a strong rally up to now, and we think that could continue. So once again, as long as you get an environment where investors know what to expect, where the business environment is more stable, where the political environment is hopefully more stable, and is going to be looking at longer data, longer term kind of policies and clear indications and directions, that is all clearly positive. And keep in mind that we're coming from a pretty chaotic few months last year and then the beginning of this year. Therefore, anything from here which adds a little bit of direction is going to be cheered by the markets, and that's exactly what we have been seeing in the equities.
Max Bandouris, CEO on SGMC Capital. Really good to have you with us on a day like today, of course, as we await the results of the polls. Heidi, South Koreans headed to the voting stations today until 8 p.m. tonight. The expectation now is that we might get those results early in the Wednesday morning here in Seoul, given that last time when we had voters head to the polls in 2022 for Yoon Suk-yeol, we saw the election results around 4 a.m. and that was because of a very tight margin with the runner-up, who was Lee Jae-myung, now the front-runner candidate for this round of elections in the 21st presidential vote. But of course, a lot of things top of mind for voters here, especially when it comes, Heidi, to the economy and the fragile state of course, trade relations with the U.S. as well.
It's really interesting, and I'm curious in terms of what the broader sort of environment or the mindset is amongst voters in South Korea at the moment. We've seen in other economies, noticeably, of course, Canada with Mark Carney's victory there, but also in places like Australia where there's been a really firm rejection of any candidate seen as being sort of conservative in that Trump style. Do you think in this election it's really more sort of the internal economic issues, the political turmoil that's weighing on voters, or are they going to be motivated by how this next leader deals with the White House too?
It's really interesting to see what the electorate here in South Korea is thinking about, because, of course, the way that this snap election took place is very out of the ordinary. And the key point remains that Yoon Suk-yeol was of the ruling party right now. So there might be some people who think that that's actually going to cost the ruling party the election. A bulk of voters might not be happy with what the martial law declaration, which led to 6 months of political turmoil in South Korea, has done to the South Korean economy. Remember, the Bank of Korea just downgraded the forecast for growth for this country for this year to 0.8% from more than 1% just in February. The BOK had to cut rates again last week. We have seen exports already slowing. You alluded to, of course, the trade tensions, the tariffs of 25% coming from the Trump administration that have been dialed back temporarily to 10%. But how these leaders, these candidates, and the next presidential incoming president actually deals with that will be key in this election. But a lot of the policies seem to be pretty similar as well when it comes to dealing with the economy. We're talking about a supplementary budget. We're talking about potentially a fund, 100 trillion won worth of capital in order to help the AI sector here in South Korea. All of the candidates want to shore up the economy.
I remember from the different sort of factions in the protest that you covered that the former President Yoon had his own supporters. Do we know where he is now in terms of, does he have any influence? Do we still see that division within the electorate?
It's been a very interesting phenomenon to see here in South Korea that the protesters of ousted President Yoon Suk-yeol have come out in force in the past few months. We're talking about President Yoon still ousted officially in April when the Constitutional Court upheld the impeachment. But right now we know that he is facing trial for an insurrection charge. He's also been indicted for abuse of power. Remember, he was the first sitting South Korean president to actually be arrested, then released on a technicality. The deep political divisions in the country continue after the martial law declaration. We've had 3 acting presidents in the past 6 turbulent months since the martial law was declared back in early December. Yoon supporters have grown larger over the months, as I mentioned, but still, given, of course, the fragile state of the economy, that will be really a key point that voters will be thinking of as they head to the polls until 8 p.m. local time today. The economy, not to mention perhaps also what it means for the state of democracy in this country.
Subscribers, of course, can turn to the terminal for more on the South Korean election and the results as they start to come in a little bit later on today. TLIV Go is your function for those latest updates, our commentary and analysis from our expert team as well. More ahead on the Asia Trade. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money. now streaming. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hozier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months. Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
The White House says President Trump is likely to speak this week with the Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring our China correspondent Min Lo in Hong Kong. Have we heard anything from the Chinese side on this?
Not yet, but oftentimes when it comes to these high-level talks, it's quite common sometimes for the Chinese side to release any information at the very last minute, as late as the day before. So it's hard to tell. We still have a couple more days before the end of this week. We'll see if this call actually happened. But so far, I haven't seen any article on Chinese state media, for example, discussing the prospect of talks. And it does seem like it is the U.S. that is more keen on having this call sometime this week. Of course, there are many things for China to be unhappy about what U.S. has done so far, including the revoking of Chinese student visas, expansion of chip curbs, curbing the sale of chip design software to China, and also critical parts made for jet engines, for example. And there was a Shangri-La dialogue over the weekend where the U.S. really played up the Chinese threat among all the other foreign dignitaries and foreign ministry defense officials that were gathered in Singapore. That was something that China was very upset about, especially when it comes to Taiwan, warning the U.S. not to play with fire there. And meanwhile, the U.S. is not happy about the slow pace of the flow of critical minerals into the U.S. There was a commitment by China at the Geneva deal. They agreed that they will be rolling back some of these countermeasures, non-tariff countermeasures against the U.S. But the U.S. says the flow of critical minerals have been slow. They're not sure if that is intentional or if it is just a matter of administrative backlog that is going on here. So President Trump said he's confident he will be able to clear up all of these tension in a call with President Xi. But right now, we're not getting any signal that President Xi is open to even pick up the phone.
Bloomberg's China correspondent Min Lo there in Hong Kong. Let's take a look at some of the other political stories that we're following this hour. And Bloomberg has learned that the European Union has agreed to curb Chinese medical device manufacturers' access to public procurement contracts. Sources say EU countries voted Monday to ban Chinese firms' access to public contracts worth more than 5 billion euros. An EU inquiry found that Beijing discriminated against foreign firms in procuring its own supplies of medical devices. Polish Prime Minister Donald Tusk says he'll seek a vote of confidence to shore up support for his coalition government. That's after nationalist Karol Nawrocki defeated a centrist candidate backed by Tusk's party in the presidential election. Tusk says he wants to re-establish unity in the cabinet, but has a plan in place if cooperation fails.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
More ahead on the Asia Trade, this is Bloomberg.
Echo of the Earth. Terre d'Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Okay, let's go. You guys good?
Hey.
All right, we good?
Keep going. The clock, it's ticking.
Off we go.
60 minutes. 60 minutes.
60 minutes.
It's time for 60 Minutes. Watch anytime.
When you need your sports center snap,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ. Streaming free anywhere you are.
There's no question in the short term with what we've seen coming out of Washington and the challenges of the trade negotiations. It's choppy.
We think we've got about a $500 million residual cost challenge as a result of those tariffs.
Since tariffs were announced on the 2nd of April and until the state of execution on April the 9th, we have seen some softening.
Things are steady, as we've been saying publicly for quite a while now, and we're reassured that our premium demand is holding.
And some of these events that we're seeing at the moment are short-term in nature, and therefore, they're not going to have a long-term impact.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be.
Aviation industry executives speaking at the International Air Transport Association's AGM in New Delhi on the impact of U.S. tariffs. Korean Air Chairman and CEO Walter Cho says that he expects global tariffs to cause confusion in the aviation sector, which is typically excluded from such levies. He also spoke to Bloomberg about why securing a trade deal needs to be the top priority for Korea's next president as voters head to the polls.
We've been without leadership for the last 5-6 months, and it's been troubling, especially with economic situation globally, and now with new leadership coming up, I think that will be the priority for the government, Korean government. Yeah.
So getting a trade deal done, is that
yes,
job number one?
Yes, I believe so.
And what do you want to see from that?
Regardless of the outcome, I just want it to be done, so we could see some future into and predictability.
So you'd rather the details are less important than knowing what the future is going to be.
So we can plan on what to do next.
Do you think the currency volatility is going to continue? The won's been pretty volatile over the last few weeks. Is that something that's affected you, and do you anticipate that continuing?
It's been stabilizing for a few weeks now.
So you'd be happy with a stronger won? That would be something that you would actually welcome?
Yes.
Do you think that will be part of the conversation with the United States?
But the Korean government would, I think they would prefer a weaker one because it's an exporting country.
Yep.
But for me, I would prefer a stronger trade, yeah.
In terms of the trade deal, is it important to you, though, that we see aerospace being carved out? A lot of CEOs are telling me that
yes,
they would rather make sure that actually that aerospace goes back to its original format, which is no tariffs. How likely do you think that is?
Well, we're a large buyer of aircraft, but we also sell a lot of airplane parts to Boeing and Airbus as well. So this is very important for Korean Air as well. So, and historically, aviation was not part of the tariff. And now that it's going to cause a lot of confusion to the business. Yeah.
Are you already hearing that we're going to see price rises? I'm talking to the Boeing, Airbus, the big engine manufacturers, are they already starting to signal that price rises are coming?
Fortunately, we locked up all the prices before this happened, but I'm expecting some
spare parts and things like that could become more expensive.
Yeah, so that will be difficult to maintain and grow our business as well. Yeah.
What's happening with demand right now?
What?
Demand. What are you seeing in terms of?
So cargo, we've been seeing quite sharp decrease from traffic from China to U.S.
Right.
But and passenger, it's been steady, especially in the premium market side. It's been steady, but we're expecting some turmoil depending on the trade negotiations.
The trade situation will also affect the passenger side of things. How exactly is that? Is it just in and out of the United States? Is it? Where are you seeing that?
Well, it's not just the United States, but it has a very big effect on the Korean economy, and that has a great effect on the passenger demands.
And you think, again, that's structural, that's a permanent feature of the landscape now?
Yes. So we'll have to adopt on that too, but there's too much to adopt right now.
There's too much volatility in too many parts of the business.
Yeah.
In terms, therefore, of going forward, how are you thinking about planning the network? How are you thinking about what you're doing with aircraft? Given the volatility you've described, can you make big orders right now? Do you have the degree of certainty you need to make big decisions?
We have demand for new aircrafts, not just for expansion, but also for replacement for more efficiency.
Yep.
And that's what we did in previous months with Boeing and Airbus. And we'll continue to do that. But for expansion and growth, there are still a lot of other markets that we are pursuing to grow and expand into.
Right.
Not just U.S., but other markets.
Okay, but you would take some capacity out of the U.S. and just put it elsewhere?
I think U.S. market is. I don't think we're going to pull out any of the capacity from U.S.
Korean Air Chairman Mo Shisho there, speaking exclusively to our colleague Guy Johnson. We are watching gold shares in this session, given that we continue to see upside when it comes to gold prices, some downside, of course, continuing when it comes to the US dollar as well. Some of those gold companies, particularly here trading in Sydney, seeing upside as well as in the Japanese session. Also watching Toyota, and Toyota, we're expecting perhaps an announcement to come on that decision today.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Anything better than settling in to watch our favorite shows?
Why
want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in. I'm Madeline Matlock. And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do.
Go, go, go! Both seasons are all available on Paramount Plus.
I like it.
Yes! So get comfy. We're here for you.
I could use an ally. Someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
Take a look at how we're faring across Asia benchmarks. We're just about half an hour into the start of cash trading here in Australia and Japan. Korea, of course, closed on account of election day activities today. We are seeing some tepid upside, I would say. Let's characterize it as that. The Nikkei 225 up by just about 0.25%, following a bit when it comes to the rebound in the Wall Street session in big tech names, ultimately driving US stocks higher. The regional stock index really swinging at the moment, though, between small gains and a few losses. Stocks also to the upside. We're seeing probably the strongest gains coming through from Australia, where we are seeing that continued, if perhaps not so convincing, rally across oil, driving the energy sector higher by about 1.5%. Materials, industrials also leading the gains here in Sydney. Well, Beijing's trade tensions with Washington remain front and centre for investors. Mainland Chinese markets reopen in the next hour after a holiday. Our senior Asia equities reporter Abhishek Vishnu joins us now. So, just so much uncertainty. The White House seems to think that a leadership phone call will happen this week. We've heard nothing from Beijing since what was, quite a bit of ire being expressed in the Ministry of Commerce statement yesterday. What sort of narrative do you think will drive that market reopen?
Well, if you look at the market reopen, HSCI actually closed 1% lower yesterday after falling 3%. We saw Nasdaq Golden Dragon Index rising by 0.5 percentage point. So net, it's most likely setting up to be a weakish open in the context of those trade tensions that are rising again. Like you said and pointed out, most of the reporting or the positive reporting in this regard, that there would be some kind of talks that can happen between US and China at the leadership level. All that reporting has largely come in from White House and sources around that. China has been largely mum on this subject, and both sides have accused each other for the last 2 days of walking back on the terms of trade truce that they had agreed to in Geneva. So the setup looks largely weakish, and if you look at CSI, it's in line with how CSI has been performing over the last 2 months. It's largely a grinding trend channel, and it might continue today as well, just a slower grind downwards. What we need to see for CSI to break up and chase gains in net shares or close some of the recent gaps with that shares is a softening of trade tensions, as well as China going out and committing a big stimulus. So from those two aspects, it will be a slower grind downward, and everybody in the market is just keen to know what comes out in terms of reporting from China's side. How are they looking to close the gap and talk to US on trade tensions?
Abhishek, we saw those trade tensions actually hit Chinese electric vehicle makers trading in Hong Kong this week. We do get NIO earnings today. What are we expecting?
That's right. I mean, the tensions have hit that sector, but more than that, it's a story about price wars. Now NIO is somewhat of a smaller player in the sector. We've got XPeng, which probably is 3 times of its size and has come out with earnings which in fact were better than expected. And the stock of XPeng had risen, I think, about 14-15% on that day after that surprise. So in context of NIO, while deliveries for first quarter had missed estimates even after a 15% growth, given how XPeng has delivered, there are some expectations that maybe NIO would also deliver better than expected number. But the buy side or investors are largely focusing on getting answer to a few questions. First, the quantum of price cuts amid this price war in the sector. Second, what kind of inventory companies managing, and third, what kind of order intake momentum is EV as a sector showing. If NIO comes in, and meets the estimates or beats the estimate, it will just further the recovery that we have seen in the sector. But again, if it comes out and says something positive in the context of price wars, I think that can change, that can possibly add a lot more momentum to these stocks.
Bloomberg's Abhishek Vishnoy there joining us from Singapore. Also, executives of Hong Kong-based developer New World are said to be growing concerned about prospects for a $2.6 billion mega shopping mall project near the city's airport. The firm is already struggling to navigate a cash crunch. Bloomberg reporter Shirley Zhao joins us there in Hong Kong. And Shirley, the backdrop for Hong Kong, the city itself, is not too great, but what exactly are the concerns from the executives?
Right, so New World's executives are really concerned about the project, mainly in three aspects. One is that although New World said it has already leased about 40% of the airport mall to tenants, many tenants are concerned about, a lack of visitors if they move in too early. So a lot of tenants are hesitant to move in or even start preparation works to move into the mega mall at the Hong Kong International Airport. So although the mall hasn't officially opened today, if you go to the mall and its vicinity, you will see that very few visitors are around because the main facilities around the mall hasn't been ready yet. So that's one of the concerns. And second, Hong Kong is planning to launch a new airport terminal in phases starting from September. And this terminal is going to be adjacent to the mall. And it's supposed to bring in some foot traffic to the mall, but we learned from sources that the airport authority has been struggling to persuade a lot of airlines to move some flights into the second terminal. The airlines' concerns are that, Hong Kong demand for flying in Hong Kong hasn't been where it used to be. So there is little demand to move into the second terminal. And also the second terminal is a bit too far away from the main facility of the airport. So they're seeing kind of dim outlook for the second terminal. And three is that Hong Kong's economy really hasn't returned to where it used to be before COVID. And retail is suffering. Aviation data remains low. So the outlook of Hong Kong's economy is kind of weak, and that's putting more concerns on the executives for both New World and Hong Kong's airport authority.
How important is 11 Skies to New World?
Well, the mall measures about 3.8 million square feet, and it accounts for about a quarter of the total square footage of New World's major investment properties in Hong Kong. So because of its sheer size, the success of the mall can really provide stable and recurrent liquidity to ease New World's cash crunch right now. We know that New World is facing increasing debt pressure today, and it's already delayed payment of interest for some bonds, and it's also seeking urgent refinancing from banks. And it's pledged some of its most prized assets for that refinancing. So the mall is really key to provide an important cash flow for New World to ease its financial troubles. If it's not returning as much as it's expected, it may deepen the financial woes at New World.
Bloomberg Shirley Zhao in Hong Kong. Coming up next, the Australian Academy of Science joins us to discuss how Australia's education sector is aiming to capitalise on President Trump's higher education crackdowns. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Well, the Trump administration has been revoking visas for foreign students in its latest crackdown on US academia targeting Ivy League schools. This could spark an opportunity for countries like Australia in terms of absorbing talent and increasing in its expenditure on R&D efforts. The Australian Academy of Science opened up its Global Talent Program in April and says Australia has an unparalleled opportunity to attract the smartest minds leaving the United States. For more, let's bring Academy President Shinapti Jagadish. Really great to have you with us today. We appreciate your time, and in fact, you're joining us today from Beijing. Tell us about what efforts are currently underway. Of course, we have a renewed mandate for the Australian government. Can you tell us in terms of what perhaps universities, academia, and as well as what the government might be doing in terms of really taking advantage of this moment in US policy?
Oh, thanks, Heidi, for having me. And so basically, the Australian Academy of Science has launched a program called Global Talent Attraction Program. And purpose of the program is to really attract top talent to Australia. As you know, that the talent really makes a big difference in terms of our research and development and also our education programs. The Academy is working with the government and philanthropic sector and then the universities and medical research institutes and other research institutes to identify the opportunities to attract talented people to Australia.
I know that you're in Beijing working alongside the Chinese Academy of Sciences, and I do wonder, we know anecdotally, as well as from the data, that Chinese students face a great deal of uncertainty when it comes to whether they can still study in the United States. We know that visas being revoked, background checks, affiliation to party and such are being conducted. Do you think there should be a special focus when it comes to taking, some of the best and brightest when it comes to Chinese academics and students and bringing them to Australia?
So the international students, Heidi, play an important role in terms of research and development in Australia and in every country. And it is very important to attract those people to Australia because they contribute not only to research, strengthen our research, and to just give you an example of my own research, and many students from international countries have been participating in our research. Without them, my own research will be very weaker. So that is why it is important to really attract talent from everywhere in the world. And again, there are many areas we can work with China, for example. So this week we are having, in fact, today we are having a workshop between Australian Academy of Science and then the Chinese Academy of Sciences in the area of environmental protection and biodiversity laws. So really, these are the areas which are of common interest, and we only got one planet, and we all have to make an effort to look after it. So there are more common things than differences, so that's why we really need to make sure that identify the areas we can work together and attract the talent to Australia to strengthen our own research and also contribute to the global knowledge base as well.
There's also huge integrated relationships when it comes to reliance on US research and development and data, right? Be it you're talking about vaccine development or climate or defense and strategy. Do you worry that there's too much reliance, and how complicated will it be for sort of Australia to extricate from that and somehow diversify in terms of where it can get that data and intelligence from?
So US is one of our strongest research partners, and we should continue to engage with US. And while we are doing this one, we also really expand our collaborative linkages with Europe and other friendly countries. So thereby we'll be able to strengthen our research and also make sure that the science is globally stays strong, because geopolitics can change, but the expertise will lost to the science sector will be lost forever. So that is why all the countries globally need to work together and also strengthen that research as well. And that is why the Australian Academy of Sciences Global Talent Attraction Program has been created to ensure the leading experts in various areas can find opportunities to come and work in Australia. As you know that the many countries have created similar programs, it is very important for all of us to lift our game so that collectively we can continue to make sure that our science stays strong, because science has an important role to play to address the global challenges, as you pointed out, like climate change, and in terms of pandemics and health security, and then the food security, energy security, and all these things require all of us to work together. And I think it's important for us to make sure that we continue to work together and strengthen our research in all of our countries.
Professor, are you seeing policy cues from the government happening right now when it comes to taking advantage of the US brain drain? Or I suppose, what sort of policies would you be encouraging the Albanese government to put in place to try and take advantage of this?
So the Australian government, of course, the government has just been re-elected, and then the new ministers also are settling down in their roles. And we are encouraging the government to really create a comprehensive program to enhance the R&D investment in Australia, and also make use of this opportunity to attract the top talent to Australia. And that both are very important, including really streamlining the visa processing so that it becomes easier for people to come to Australia. Australia has a lot to offer in terms of excellence institutions and excellent research infrastructure, and an outstanding quality of life as well. So that this combination is very difficult to beat. That's why the government will need to act on it now in order to make use of this opportunity to attract the top talent to Australia.
There's a lot of debate when it comes to dwindling productivity, dwindling innovation in Australia. How important do you think policies like this would be in terms of being able to fast track the ability for not just Australia's research and development and scientific communities, but also the broader economy to be able to be better future-proofed?
The investment in research and development really has an important role to play in terms of productivity, enhanced economic activity, and also diversify our industry sectors. We need to move from the fossil fuel-based economy to knowledge-based economy. So that is why investments in R&D is absolutely critical for us to be able to strengthen our economy and also enhance the productivity, create jobs which are really the future jobs. For example, when we are talking about artificial intelligence or quantum technologies, or my own area of nanotechnology and biotechnologies and health technologies, and then they will be relying on the STEM skilled people, science, technology, engineering, and mathematics skilled people. So that is why our government should be really investing and also enhancing the investment from the business sector as well. As you know, Hedy, that government has launched last year strategic examination of the research and development, and that committee is really talking to the sector, and then hopefully those recommendations will be accepted by the government and also will really invest in R&D for the future of our country.
Professor, really great to have you with us, and we appreciate your time. Professor Chinaparty Jagadish, who's Australian Academy of Science President. We'll have much more when it comes to Australia Ahead every Tuesday at 10:40am if you're watching in Sydney, 8:40am if you're viewing out of Hong Kong. Plus, you continue into the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify, or Bloomberg.com. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Let's take a look at some of the big corporate stories that we're following this hour. And Elon Musk is selling $5 billion in debt for his AI startup, xAI. It's the latest in a series of fundraising efforts across his business empire. Morgan Stanley is said to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in xAI stock through a secondary offering. Uber has named long-time executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee the mobility and delivery businesses. The move is part of an executive shakeup at Uber, which includes the departure of the senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Disney is laying off several hundred employees across its film and TV businesses in a sign that the entertainment industry's contraction is far from over. The company says staff reductions began on Monday. Disney has eliminated over 8,000 jobs in recent years as it works to cut expenses by $7.5 billion, Sherry.
Brian Heidi, the CEO of video streaming company Starz, says he sees growing opportunities as the platform continues to roll out new content. Jeffrey Hirsch spoke to Bloomberg about the firm's business strategy after parting ways with media giant Lionsgate.
We think that the portfolio of content really makes us a very compelling service at our $11 price point. And you saw that in the first quarter numbers. We actually grew the U.S. subscriber base total by almost 2% in the first quarter, which is a really good accomplishment in a very competitive space. But we have a programming group. We've got 40 to 50 shows in development at any given time. And as we talked about on the call, we want to go from a 15% profit margin to a 20% profit margin by end of 2028. One of the ways that we get there is actually by turning the slate over and putting new shows on the air that we can own as we separated from Lionsgate. And so ownership economics is really important because season 1s are much cheaper than seasons 5, 6, and 7. Right. And we can also put international sales back into the business, which is another way to net down the cost of a show. And so as we separate, we just announced that we opened 4 writers' rooms in the last couple of weeks on some really compelling shows that I'm excited about. As we start to move into 27, you'll start to see more of our own shows come on the slate.
I imagine, with something like Outlander, you can get people to come and pay $4 a month, which is what your special offer is right now. Can you grow that over time as you have these massive competitors like Netflix, like HBO, or do you have to hold it at a lower level?
So, one, we don't see them as competitors. We see them as complementary services. If you think about the old traditional world, Starz was always set up as a cherry on top or an additive to broad-based services. So Comcast for a long time sold Starz on top of expanded basic television. We think that world gets replicated in the digital world, and so we've always positioned ourselves as being a complementary add-on to the broad services like Netflix, like Amazon, like Hulu. And so we will always be priced well below the broad-based services so that we are viewed in the consumer's mind as complementary and not competitive.
Before we let you go, I do want to talk a little bit about your business because I believe you derive about 70% of your revenue from streaming. That leaves about 30% of your company exposed to, cord cutting. So how do you plan to deal with that over time? Is that something that you're trying to whittle down, that 30%?
Look, we really follow the consumer, right? And so as the consumer has shifted from linear to digital, we kind of followed the consumer there. But I think there's a real value in still the linear business today. You know, what's interesting about all of our customers, 80% of all of our customers are either added on or a la carte, which means customers chose Starz. It wasn't we're in a bundle, and so that we see the cord cutting and we're just the natural evolution of cord cutting. People have actually picked Starz because the content is working, and what it also means is that we actually are a revenue generator for our partners. And so I actually think that there's a lot of opportunity still in the old traditional world for us as the content continues to roll out.
Starz Entertainment CEO Jeffrey Hirsch, they're speaking to Bloomberg's Matt Miller and Katie Greifeld. And of course, really we'll be watching very keenly where you are today, Sherry, in terms of the outcome of the South Korean elections. It feels like there's optimism coming from the markets, almost regardless of the results. But tell us about sort of what you're watching most closely in terms of what's really preoccupying the minds of voters as they head to the polls today.
I mean, the markets are closed today, but really, as you mentioned, not surprising that we've seen Korean assets rally in the lead up to the vote today, because it's finally an end to 6 months of political turmoil, a leadership vacuum, and 3 acting presidents. Voters now headed to the polls until 8 p.m. local time to elect a new president. That's it from the Asia Trade. Our markets coverage continues. The China Show is next. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be big up because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Anything better than settling in to watch our favorite shows?
Want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in.
I'm Madeline Matlock.
And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do.
Go, go, go!
Full seasons are all available on Paramount Plus.
I like it.
Yes! So get comfy. We're here for you.
I could use an ally. Someone I can really trust.
You can trust me.
CBS Originals now streaming on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
911 emergency. Somebody's choking, girl. My grandbaby and my friend. Dad? We're dead. Please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Let's do it.
Now stream. Celebrate your favorite music at the American Music Awards. Nominees include Benson Boone, Billie Eilish, Bruno Mars, Chappell Roan, Hosier, Kendrick Lamar, Lady Gaga, Morgan Wallen, Post Malone, Sabrina Carpenter, Shabuzi, SZA, Taylor Swift, and Zach Bryan. Watch all the excitement on the American Music Awards, hosted by Jennifer Lopez. Now streaming on Paramount Plus.
Hello? Is there anybody still in here? What's that? There's movement over there. We're not here to scare you.
What is that?
I think something's investigating us.
Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai, you're watching The China Show. I'm Yvonne Mann with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the region are making cautious gains with trade once again. The key focus is mainland markets reopen. After a holiday, now bonds are falling as the dollar hovers around 2023 lows.
The White House says Presidents Trump and Xi are likely to speak this week as tensions flare up, but there's been no confirmation yet from China.
And also ahead here and shows how a slow-moving shopping mall project near Hong Kong Airport is adding to debt concerns for developer New World.
And I'm Sharian in Seoul, where voters are choosing a new president. The winner will face the challenge of reuniting the country after its worst political crisis in decades.
Good Tuesday morning from the Asia Pacific. We're still tracking in terms of markets here. The sort of backdrop is again still a weaker dollar. Friday, Monday, and the big drop that we had in the dollar, and this is where we are. Still some weakness coming through across the dollar. So we're approaching these 2023 lows in the Bloomberg Dollar Index. Flip the page, please, about 0.7%. Reason that's important, it is indicative, as you can see here, of equity markets that are on the front foot, albeit, of course, ever so slightly as far as risk appetite is concerned. You have Japan, of course, will be with Sherry in a moment, of course, on the ground in Korea. Korean markets are shut, as with Thailand. A bit of steepening, as you can see in the yield curve, 2s and 10-year yield there. Although broadly speaking, you are seeing, of course, bonds on the decline. Gold is on the way up, and of course, not on your screens, but oil is tracking the gains we are seeing in equity markets. Right. Very quickly, we are reopening today as far as mainland markets go. Long weekend there, so we'll see what happens there. In terms of the 50-day moving average, we'll talk about this later. Hang Seng Index, in fact, at one point yesterday bounced off that, hit that session low, and then we closed not quite completely in the green, but certainly reversed most of the losses there. A tenth of 1%. We're at 171 right now, the Chinese 10-year yield. And as you can see, we're stronger on the Chinese currency, but we are still on the weaker side of the cutoff on the Hong Kong dollar, and we are approaching again the weak end, Yvonne, of the trading band here in Hong Kong.
Yep, I certainly want to watch here against that dollar weakness. And in terms of the agenda here today, as Dave mentioned, it is the markets reopening in the mainland. That is what we're going to take a look at. Futures are slightly lower. It's higher, I should say. But keep in mind, yesterday we did see quite a bit of a broad-based sell-off here in Hong Kong, so maybe we'll see a bit of a catch-down story here today. We do have, of course, the HSI and that 50-day moving average to tell you about, and the Caixin China PMI numbers coming out later on this hour as well. New World is still the big corporate story out there after some of these perpetual bonds briefly touched those record lows. We see a bit of a rebound yesterday in the late session. We'll see how the stock as well as these bonds go here. And earnings, NIO is the next in line here as, of course, we get closer to the end of the earnings season in China. And again, yes, Hong Kong dollar weakness, Dave.
Yeah, okay, lots to track as we go into today, but it's the same story really when you talk about the trade conversation, the impasse there that's so far re-emerged from late last week. And certainly when you go into today, the White House is saying that President Trump is likely to speak this week with Chinese leader Xi Jinping as the two economies remain locked in a trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
And let's bring in Min Min Lo, our China correspondent, with more on this story and how open really is China to having this call quite so soon.
Yeah, well, I was scanning Chinese state media today, and I haven't seen any pieces discussing the prospect of a call between President Xi and Trump. And of course, we haven't gotten any official confirmation from the Chinese side, although, of course, many times such confirmations from the Chinese side usually come, or can sometimes come really late, maybe just maybe a few hours before the call or even the day before. So it's hard to say. We still have a couple of days before the end of this week. We'll have to see. But we know President Xi President Trump has said he's confident he will be able to clear up these tensions in a call, but China, from past tradition, they tend to favor having lower level officials negotiate key issues before agreeing to a leaders level call, and they would only agree to that when they are sure that there are some expected outcomes that they can be clear they would be able to achieve. So at this point, it doesn't look like the conditions are very favorable yet.
Yeah, it seems like the U.S. though is hoping for some sort of call and really in some ways showing some urgency as well. What are some of the key issues you think the president wants to raise?
Yeah, well, the U.S. has raised the issue of how China has been very slow in rolling back some of the non-tariff countermeasures that they promised to do at the Geneva summit. And in particular, they're concerned about the flow of critical minerals. They said that has been slow. And when it comes to China, these exporters, they have to apply to the Ministry of Commerce for permission. And it's a process that can take a while. It's also a process that is quite opaque. It's not really visible to outside parties. So it's something that the Chinese ministry could possibly turn on and turn off as they wish without really a lot of transparency. So the U.S. is saying they're not clear. Is it intentionally being slow, or is it because of backlog, administrative backlog? So that's the issue there. But for China, there are a lot of other issues they're unhappy about, ranging from the expansion of chip curbs to the revoking of Chinese student visas, limiting the sale of these critical parts that are used in jet engines. And Reuters also reporting that U.S. is preparing to step up military arms sales to Taiwan. So a lot of issues that are touching on China's red line that they have made clear of before.
All right, Min Min, thank you. Min Min Lo there, our China correspondent, on the latest when it comes to these trade talks and whether we'll get them between the U.S. and China. Meanwhile, let's move you to Seoul now. We're looking at live pictures out of South Korea as voting gets underway for a presidential election. A lot certainly at stake here, given months of political turbulence there in the country. And certainly something that, investors really want is some stability in this market. Of course, Korean markets are shut this morning, too.
Yeah, and the exercise today, to Yvonne's point, in some ways is hopefully for investors and, of course, with locally bookends what's really been fairly turbulent few months there for South Korea. In fact, let's get it over now to Seoul. On the ground for us is our colleague and co-anchor, of course, Sherry Yan. She's there with us. Yeah, Sherry, get us up to speed on, so we know markets are closed, voting is underway right now. Put this into context for us.
Yeah, voters heading to the polls until tonight, 8 p.m. local time. But you guys said it, Korean assets have rallied ahead of this vote. And is that optimism that finally we're going to see an end to 6 months of political turmoil, 3 acting presidents that this country has gone through? I'm here in Yeouido, Central Seoul. Behind me, the National Assembly. Remember, this was ground zero back in December when lawmakers were rushing in, trying to get into the building, struggling with police officers, trying to hold that emergency vote to lift the martial law that was declared by ousted President Yoon Suk-yeol. We have now seen 30,000 police officers just across polling stations nationwide. The political drama has been high here in South Korea. We have seen political protesters, really supporters even of President Yoon Suk-yeol, protesting in front of the headquarters of the Democratic Party front runner leading candidate Lee Jae-myung. Of course, that's to my left, about a couple of blocks away. So now finally that's coming to an end. There will be no transition period. Whoever wins takes the presidency right away. He has to get right to work. Of course, a lot of issues right now at play, and the trade negotiations with the U.S. A top priority.
Yeah, certainly that's what's top of mind for many voters as well. I'm just wondering in terms of just the markets, and we've seen actually Korean assets rally leading up to this election, but what is the state of the broader economy now in South Korea, Sherry?
Fragile economy, as you can imagine, given the political turmoil and the leadership vacuum that we've seen in this country. We have seen the Bank of Korea cut rates last week and downgrade the growth forecast for this year to 1.8% to 0.8% from more than 1% just in February. And the fact that we're seeing exports now stalling, we're talking about a contraction for the latest data in May. We are seeing, of course, the trade negotiations ongoing with South Korea, but without a clear president, that has really looked very difficult for South Korean policymakers. So the frontrunner Lee Jae-myung of the Democratic Party has pledged that trade negotiations with the U.S. would be his top priority in the first 100 days of office. But at the same time, he has a very nuanced approach to the U.S., where he wants a solid alliance with Washington, but that he does not want necessarily a quick agreement. His rival Kim Moon-soo of the ruling People Power Party wants a strong alliance with the U.S., with Japan as well. He also wants to deregulate. He wants market-driven growth, and he has promised a very business-friendly environment. So we have seen these policies from both sides, all wanting to really support the South Korean economy as we continue to see that fragility across the nation.
Cherry on there, our Bloomberg anchor joining us in the field in Seoul as, of course, we count down to this presidential election in Korea. Coming up, we'll be live talking with markets with Principal Asset Management and why they're looking to diversification into value, into some of these large cap stocks as well. George Maris joins us in just a few minutes' time. We're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. A steamy Tuesday morning here. And this is the China Show. Futures are up this morning.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready?
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Tell me something that makes a bubble bath even more enjoyable.
Candles. Music. Another person?
It was going so well. Until...
How about some toys?
Your daughters are so embarrassed.
Good answer.
Celebrate National Game Show Month on the Family Feud channel on Pluto TV.
Here.
Earnings, the hot topic of conversation. It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley,
Booking, Airbnb.
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness. It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
All right, welcome back. U.S. futures looking like this on your screens. European contracts also, as you can see, this is almost a juxtaposition of the big stories. U.S. futures are coming off. European equities are still on the front foot, and also on the back foot is where you are on the 10-year yield. Bottom of your screens coming up very shortly is a 3-day look at the U.S. dollar. Friday, the sharp drop that we had on Monday, and of course the weakness still that we're seeing permeate across the FX markets right now in the U.S. dollar space. Early Tuesday here in the Asia Pacific. Right, let's put this all together for you, what this means for asset portfolio construction. Do we lean further away from the U.S. dollar? Is there value there? Have you thrown the baby out with the bathwater? George Maris is with us right now, CIO and Global Head of Equities at Principal Asset Management. Good morning.
Good morning. Thanks, David.
The notion, why don't we start with the U.S. and how you guys are thinking about this, the world sort of stepping back from U.S. exceptionalism or U.S. exposure?
Right. So I think, look, in the last 5 years and even longer, the U.S. has been a phenomenal market, right? The economy's been outpaced the rest of the world. The markets have outpaced the rest of the world. Yeah. The question is, does that continue to persist? Is there this U.S. exceptionalism that's out there? I would argue that U.S. exceptionalism still exists, i.e., is it still the hub of innovation? It still is, irrespective of all the political chaos and noise. Political chaos and noise is a feature of everything in the world right now. That said, the amount of attention the U.S. has received has really gone overboard. And so if you were to go back, let's say 6 months, 9 months ago, it had became truly, I would call it almost a bubble in terms of the U.S. versus the rest of the world. The valuations had never been that far different, with the U.S. trading at a premium to the rest of the world. Everything in the U.S. was viewed as being bulletproof relative to the rest of the world. That was just wrong. Right, it's still a global economy. There was tons of innovation happening outside the U.S., and so that had to be recalibrated, and I think we're in the early stages of that recalibration. So is the U.S. still exceptional? It's still the hub of innovation. It's still a more resilient economy than much of the rest of the world, but it doesn't have a monopoly on resilience. It doesn't have a monopoly on innovation, and I think those are the opportunities to reallocate capital elsewhere.
Does that mean that, I mean, in terms of assets then, can I basically say I can still maybe invest in equities? Maybe not so much bonds and maybe not so much the U.S. dollar? I mean, how do you differentiate the different asset classes?
So I think that's right. I think equities, from my perspective, are still a very attractive place to be. If we're looking at earnings, earnings continue to be resilient. They look like they're going to continue to grow. And in fact, if you think about policy outside of tariffs for a moment. Outside of tariffs, policy would be very corporate supportive, i.e. tax cuts, tax reduction. That will certainly help with respect to most U.S. companies in driving earnings. If you think about deregulation, an extraordinarily powerful influence on driving GDP and corporate growth. Those things may weaken the dollar. They may very well result in higher yields, so hurting both the dollar, hurting both bonds, but certainly supportive of corporate earnings in the States.
What do you think of valuations currently?
So I think we've got to be careful what we mean by valuations. I think if you're looking at the market as a whole, not terribly interesting.
Yeah, index level.
Right. If you're looking at the index, right. But if you're looking at sectors within or different companies within, there's a whole slew of companies that are out there that are massively mispriced for their profitability, their balance sheet strength, and the growth going forward. There's just such a concentration and focus behind a few of the thematic stocks that are out there, right? That it's created this concentration, and those stocks tend to be the biggest cap stocks. So if we think about the index weights, it's driving the index multiple, but the average stock actually can be much more interesting.
A lot of people, there's a lot of talk that, you know, what is that alternative? Europe seems to be one of the first things people come to mind, right? The ECB is cutting rates. Germany, you're starting to see more fiscal spending, like all the like. Do you think that's going to be the right place to be in Europe?
Yvonne, I would caution a little bit of prudence with respect to Europe, and that is there's a notion that this is the big change that's happening that's long since needed to occur. We're seeing much more spend out of Germany, right? Frankly, we're seeing deregulatory reforms in the United Kingdom and elsewhere. We're seeing a much greater degree of acceptance of change. What I would push back on is there's still multiple structures within Europe that hinder change. If you think about corporate boards, many times those corporate boards have labor councils on them. The ability to restructure a labor force, the ability to restructure the taxation is very difficult. Entrepreneurs in Europe continue to leave Europe and come to the U.S. And I think that is highly problematic for Europe. They need a stronger set of policies to go forward. So I think you're going to have this phenomenon where everybody gets excited about the change, and then the reality disappoints. Now, that doesn't mean there's not great opportunities in Europe, but the change is decades. I mean, we're decades long in terms of where we are in policy. It needs a much more coherent, cohesive reformation that's difficult to achieve given the current state.
So relative value right now, I guess, on the table, is it more, given the fact that Europe's outperformed substantially, do I look back again at U.S. equity markets, and do I go down that market cap ladder for the opportunities? Yeah, where are the gems?
Right. So, David, I think there's a lot of places to find opportunity in markets right now, which is a great thing. I think if you go down market cap, both within the U.S. and outside the U.S., plenty of opportunity. I also think Asia, multiple markets within Asia, offer tremendous opportunity. I think Japan is really looking intriguing. There, the corporate reforms and the societal reforms have been significant over the last 5 years. They'll continue to take pace. We're seeing the bid for Toyota Motor, for Toyota Industries right now. I think it's a continued notion of governance and change. change, potential significant change in Korea, which I think is long overdue and could certainly be a catalyst there. But we're also seeing that throughout Asia as well. India continues to be a strong power. Singapore continues to attract capital from all over the world. And then lastly, China, the world's second largest economy. There's still plenty to be done here. Look, the economy's weak. There's tons of structural issues there. That said, there's plenty of firepower from the government to be able to reorient things. And once this tariff impasse gets hopefully to a constructive outcome, you're likely to see the big if. I would tell you that I think that if is probably not as big as people think it is. I do think that it's in both countries' interest to come up with a constructive solution, right? A destructive answer is terrible for both, and I think there's plenty of room for reasonable compromise. I think Xi and Trump speaking together will help facilitate that reasonable compromise. Maybe I'm being optimistic, but I do think that this will occur. But I do think China, again, is awfully interesting, and the degree of pessimism, as reflected in market multiples, we're now at extremes. We're multi-standard deviation events away from where history is. If you value it on a cash flow basis, you're getting fantastic cash-on-cash returns. Again, lots of weakness in the economy. There's still structural issues. But all of that is overwhelming the notion that there's really some good things and some great companies to invest in as well.
Based in the U.S., though, I'm wondering what's the perspective you get from your clients about how receptive are they to the whole China story now?
So it's really bifurcated. And I mean by bifurcated in that most of our clients are awfully intrigued by the opportunities in China. Some great companies, a fantastic market, world-leading competitive advantages for a lot of companies. And we understand how big that market is, right? It's scale in and of itself. The concern is more from not just a tariff perspective, but almost a U.S. regulatory perspective. You're hearing news about delisting. Yeah. And while delisting has been moved off the table in terms of there's the ability to go ahead and reallocate capital to Hong Kong, the bigger risk is blacklisting. And so you as a U.S. investor, you don't know what that risk is. It's not zero. It may be small, but again, it could be catastrophic if it occurs. And that has chilled U.S. investors' allocations into China. I think if that gets off the table, you'll see a significant warming to it.
Yeah, I was going to ask you if you see, well, I guess short term, do you see the possibility that U.S.-based investors further warm up to the idea of China? And I think the other side to that question is because of what's going on between Beijing and Washington. Do you think that longer-term increases simply the home bias of sort of the two bases of investors, U.S. for U.S., Asia, Chinese for China?
I think the answer is it depends on what happens with these conversations now. Is there a rapprochement? Is there a détente between the two countries? If there is a détente, if there is a rapprochement, I think you'll see a greater warmth between the two. We're right now at a very critical point, right? It is the tension, which has been significant for the last 8 years, has escalated more recently. If we get past this point, you will have gone past the biggest threshold issue, and then I think people, in both countries will feel comfortable allocating capital to both countries right across. If we cannot get past this point, then it will be politically unfavorable in both places, and so you will accordingly have people pull in. I think people want to cooperate.
Yeah.
But governmental policy is not my specialty, and we'll have to see what that is.
Well, okay, not to ask you about politics and government policy. We have elections in South Korea, but just to ask you about the market. For foreign investors, is there a play in Korea beyond semiconductors, which is like the sort of top-line attractiveness of that market?
I think there is, and it does depend on governmental reforms here. I think Korea is a fantastic country and fantastic market. The corporate governance there has been the biggest challenge to investing, and the one place where I think foreign investors have been able to allocate capital and get comfortable is in the semiconductors, SK Hynix and Samsung in particular, because they're such global leaders. You'd love to invest more within Korea, but the lack of corporate governance, the lack of protection for minority shareholders is a true concern. And so how do I allocate capital to Korea knowing that corporate governance may not protect, may not protect me as a minority shareholder like it would here, for example, in Hong Kong or it would in other developed markets? These changes are significant, and I think you've also seen the power of investing behind this long term. So we saw the real change in Japan over the last several years. That has catalyzed significant reform as well as economic growth and market acceleration. Korea certainly has that opportunity.
George, it's great to have you here in the region. George Maris there, CIO and Global Head of Equities at Principal Asset Management. And still ahead on the China Show, former Morgan Stanley Asia Chairman Stephen Roach joins us to discuss why he's revisiting his declaration that Hong Kong is over. Yeah. He has a new take on it.
Slightly changed his mind.
Slightly changed. Not yet.
Not completely.
Yeah.
Anyway, he'll tell us more.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Is there anything better than settling in to watch our favorite shows?
Want to know what you're playing for?
I love when Jeff says one of his catchphrases.
Well, come on in.
I'm Madeline Matlock.
And spend time with the CBS stories we love.
You're my Sherlock now. Very good at what I do.
Go, go, go!
Full seasons are all available on Paramount Plus.
I like it.
Yes! So get comfy. We're here for you.
I could use an ally, someone I can really trust. You can trust me.
CBS Originals now streaming on Paramount Plus.
911 state emergency. Yes, somebody killed two girls. My grandbaby and my friend. Dad? We're dead. Please, wait.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Some stocks to watch here. New World shares. We're seeing a bit of a bounce back here after what we heard yesterday. And also concerns about not paying that coupon, those perpetual bonds here. So a little bit of recovery here as well. But we're watching the whole property sector in Hong Kong. Mixed picture across some of these Hong Kong names as well. Sun Hung Kai actually doing decently well. But Hang Seng also up in the pre-market of 0.5%. The open is next.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
emergency. Yes, somebody killed 2 girls. My grandbaby and my friend. Dad? We're dead! Please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Watching the China show, we're counting on the open of markets and the reopening of mainland markets here after coming out of that Dragon Boat festival or holiday, I should say. And certainly we are seeing a little bit of upside, I guess, for pre-market in Hong Kong, but we might likely see a catch down story just given what the market in Hong Kong was dealing with yesterday, right? Trade frictions are re-emerging between the U.S. and China. That seemed to be the biggest overhang across these markets yesterday. Although futures are pointing a little bit more positively here today, the currency continues to see some strength here at 720 here right now. But yeah, a lot of questions about not just what we're seeing with New World, but what does this all mean? Is there the spillover effects of New World to the rest of the credit space?
Yeah, I think the drop yesterday on the HSP, the Hang Seng Property Index, was over 1%. We haven't seen a move like that, I think, in a couple of weeks. In New World's case, I think we're up in the pre-market. We should be up. You should be seeing that on your screens quite soon. The drop there was the biggest on the stock. Of course, it's more a fixed income story than that. Biggest since about early April. Yeah, so the fact that we're looking literally at the schedule of upcoming coupon payments for those perps coming up just underscores the nuance that needs to be hit on that story.
And there you go. You see it in the A-share market. We're just slightly to the downside here this morning, so we're not seeing too much pressure. But we're watching very closely what happens when it comes to some of these tech shares. That certainly was where we saw most of the sell-off yesterday in Hong Kong. But so far, CATL is doing decently well. These are the A-shares as well. And we are also watching their Hong Kong. There you go. Doing much better than yesterday. We're up about 0.75%. HS Tech seems to be catching a bid here this morning as well. We focus on the Hang Seng property space, as Dave mentioned, because of New World. We're still seeing some decent gains on that index this morning, and the tech space seems to be recovering a little bit as well. Currency in China also continue to strengthen. As Dave mentioned, we're approaching those 2023 lows for the dollar as well. Take a look at how some of the A-share listed developers are doing in China, because yesterday, over the weekend, I should say, we got some pretty bad numbers in terms of home sales, that big slump in May. So we are seeing a bit of fallout there in some of these property developers here this morning. And once again, we have to take a look at New World. We talk about the shares actually recovering, but yesterday was really what we saw in some of these perpetual bonds, which did briefly touch those record lows. Recovered slightly towards the end of the session, but yes, a lot still of questions lingering with this company. Dave?
Yeah, I'm just looking at my screens right now. When we look at that 5% recovery in the stock, I'm just looking at some of my charts here. We're looking at the I think it's a 618 coupon. Give me some time. This is live TV. But yeah, let's bring the team together, and we'll show you that in a moment there, because we did see a drop, of course, Friday into Monday on many of those fixed income securities. Our team is here to talk us through this analysis and the latest. Shirley Zhao, of course, out of our consumer and gaming report, and also our Bloomberg Intelligence Chief Asia Fixed Income and Credit Strategist Timothy Tan also joins us for more analysis on this. Shirley, let me start with you. The latest piece you guys put out, there's this big mall that they're constructing. It's constructed, I think is the point, right across the airport. Why is that relevant to the broader story of New World?
So the airport mall measures about 3.8 million square feet, and that accounts for about a quarter of the total square footage of New World's major investment properties in Hong Kong. So if that project is successful, it can provide a stable and recurrent liquidity for New World to ease its cash crunch. So we know that New World is facing increasing debt pressure right now. So it's deferred payment on interest for some bonds, and it's also seeking urgent refinancing from banks, and it's pledged some of its most prized assets for that refinancing. So the project really is key in sort of improving New World's financial health, and if it fails, it could deepen New World's financial troubles right now.
Timothy, I want you to chime in. I mean, obviously, we've been questioning why they defer this bond payment. Why do you think so, and what do you think is next?
Well, largely because, as she was saying, you need to preserve liquidity. And one of the big issues has always been the refinancing risk, right? Because they need to refinance the loans and the bonds. Now, the loans are predominant at this point. Now, by putting in security in all these assets into these loans, it's quite likely they're going to get the loan back. The whole $87.5 billion of loan into their books. However, that also means that the banks have much more severe covenants. They're going to try and control their cash. Now, they will defer what can be deferred until the cash flow improves. And that will be the perpetual bond deferrals and dividend deferrals. So it's a natural progression of what's going to happen. Yeah, and obviously that's going to have a negative impact on perpetual bonds and on equity because you're not going to be getting dividend for a while.
It's really about managing scarce resources.
Yes.
At this point in time. Talk to us about the financing, this massive amount of financing. You alluded to that earlier.
Yes.
If they secure that, obviously